seem to have a good one about people. You've written books with Dolly Parton, Bill Clinton, all sorts of people, and you're about to write one with Mr. Beast.
Yeah, no, it's written. It's written. We've done it. Yeah. We're done. I mean, I think we're done.
And?
Yeah, in June. It was a great experience. He is one of the most interesting people I've ever met. Fascinating. 27 years old.
And how does it happen? He comes to you with an idea?
His agent came to me because we had done a few things before. I did with the Einstein estate. His agent brought that to me to write a kid's book about Einstein. And then that had been successful. And then we did one about Muhammad Ali when he was growing up in Louisville. And because of that, he came to me and he said, would you be interested? I said, well, let's go talk. And I went to North Carolina. I spent 4 hours with Jimmy, Mr. Beast. And he's great. He's just stunning. His instincts are spectacular.
What's the book?
Well, it's a novel. Okay. And it takes off on this notion of the kinds of things that they do, like the series on Amazon, which was a challenge. But I really think it turned out well. I'm very happy with it. He's very happy with it. And that will be the best-selling book next year. I guarantee it, of any book, because he has 5 times the audience that Taylor Swift has. Which is
well, we hope this is a bestseller too. James and Patrick, thank you guys.
With your help, it will be.
Appreciate it.
Thanks.
When we come back, we have more of today's top corporate stories, including some high-profile executive moves and who's headlining the Super Bowl halftime show. Squawk Box will be right back. Things to know ahead of today's opening bell. Jeep maker Stellantis naming a new chief financial officer. The company said its previous CFO had resigned for personal reasons. British drug maker GSK says that CEO Emma Walmsley will step down in December and be replaced by the company's chief commercial officer. Walmsley had led GSK for the last 9 years. Her contract was set to end next September. You can see that stock right now up by about 3.5%. SEC Chair Paul Atkins is vowing to fast-track President Trump's proposal to end quarterly earnings reports. In an opinion piece in the Financial Times, Atkins writes that the government should provide the minimum effective dose of regulation needed to protect investors while allowing businesses to flourish. Vice President J.D. Vance says that he is optimistic about the future of TikTok in the United States. Speaking on Fox News, the vice president said that he feels confident the U.S. side of TikTok is successfully separated from TikTok Global and that U.S. users' data will be secure. And Puerto Rican hip-hop artist Bad Bunny named as the headliner for February's Super Bowl halftime show. This is after reports that say Taylor Swift passed on an offer to star in that show.
Coming up, what to watch over the next roughly 40 hours as the government barrels towards a shutdown. We're going to get the latest from Washington. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app. And listen anytime. We'll be right back.
Or by AI.
Welcome back to Squawk Box. Less than 2 days remain before the government shuts down. Congressional leaders will meet with the president today. And Emily Wilkins joins us from Washington this morning. Good morning.
Good morning, Andrew. Yeah, President Trump meeting with congressional leaders 3 p.m. today. The goal, of course, is to try to avoid a government shutdown, but that kind of doesn't seem like it might happen because both sides are really as dug in as ever. The White House told NBC in a statement yesterday that the president is meeting with Democrat leaders at their request to give them an opportunity to commit to common sense and vote for a clean CR to keep the government open, as they have previously done 13 times. Meanwhile, Senate Democrat leader Chuck Schumer told Meet the Press yesterday that the meeting is only the first step and they need serious negotiation. Now, Democrats are asking for a number of things, including extending the Affordable Care Act tax credits, reversing cuts to Medicaid and other health care provisions that were a part of that Trump mega bill, and require the president to spend the money that Congress approves for programs and agencies. Now, most of that wish list has strong GOP opposition. It's very unlikely to happen. But Senate Majority Leader John Thune also said on Meet the Press over the weekend that he does believe there could be a path forward on extending some of the tax credits, but not until after they deal with this shutdown.
Keep the government open, let's fund the government, and then let's have the conversation about the premium tax credits. It's a fairly straightforward argument that we're making.
Now, congressional Republicans are split on whether to extend the tax credits. Some more moderate members are worried about that increased cost on Americans if they expire, but others note that extending them is going to add hundreds of billions to the debt. So there's no consensus there. The Senate is expected to return to town this afternoon, but right now there are no votes that are scheduled on that stopgap measure. This means that the next time we see votes could be less than 24 hours before the deadline. Guys?
Okay, so how do you handicap it?
I mean, at this point, usually at this point, Andrew, we've seen some horse trading, right? We've seen some agreements, we've seen some back and forth. We just haven't seen that this time. And that has really got everyone in D.C. thinking that it's going to be very difficult for them to walk out of the White House today and say, hey guys, we have an agreement. Now, of course, it does seem like there could be a path forward with something on this Affordable Care Act. But at this point, it does seem likely that both sides do believe that they could benefit potentially from a shutdown. And of course, this is always the other thing that comes up, the messaging war, the who's going to get blamed. Democrats are just very confident at this point that if they just keep focusing on health care, that they can say, hey, go back to their constituents and say, hey, we put up a fight, we pushed for what we wanted. The question is, what can they possibly get out of this?
So you think this movie could end differently? This is one of the first times it would end differently in a very, very long time.
Absolutely, Andrew. And look, I mean, I don't know what's exactly going to happen at this White House meeting today. I think the fact that they have now called a meeting after they canceled that one last week shows that there's at least some ability to have a discussion. And you have seen both Thune and Mike Johnson. They haven't completely said absolutely not to extending these Affordable Care Act tax credits. They've both kind of said, look, we can have this discussion. We just need to have it after we figure this out. And so what I'm interested to see is if they come out of the White House and they say, look, we are going to work together to try to do something on these tax credits, maybe not a clean extension, maybe an extension with certain limits on it. Is that enough for Schumer and Jeffries to go back to Democrats and say, hey, we got a victory here, we held our ground, and now we're going to be voting for this when it comes up either tonight or tomorrow?
Okay, and we'll keep our eyes. This is it's one of those movies that doesn't usually end until literally the clock strikes midnight. So thank you. We'll be talking to you a lot.
All right, still to come this morning, we've got highlights from the Ryder Cup, which featured an exciting finish between the United States and Europe out on Long Island, and heartbreak for the American team. Also, lots of talk about the heckling that was happening out there. Some thought it was pretty inappropriate. Plus, we've got portions of a special conversation with swimming legend Michael Phelps. That's next when Squawk Box comes right back. Team USA's comeback bid fell short at the Ryder Cup yesterday at Bethpage Black out on Long Island. Team Europe will retain that cup for the next 2 years. Our own Dom Chu was there, and he had a terrific conversation with someone who knows a lot about winning for Team USA. Michael Phelps was the featured speaker at a CNBC Sports breakfast at the Ryder Cup yesterday morning at Bethpage. Phelps, who retired from swimming in 2016, is now an avid and serious golfer. He shared with our audience his keys to peak performance in any sport.
It's preparation. If you're not prepared for every little small detail, then somebody else is going to be more prepared than you are. So for me, it was always controlling the controllables, period. That's it. If you're doing that every day, watch what happens. I did it for 25 years and won a couple gold medals. So it's not rocket science. It's what can you do every single day to give yourself that much of a chance to be great or to be successful.
A couple of gold medals, or maybe a few more than that. Phelps also weighed in on the impact of data, technology, and AI on the future of sports.
If you want to be great in this world right now, in the athletic world, you got everything you can possibly imagine. Like the sport of swimming has changed technology-wise. When you look at the suits, you look at the timing systems, the starting blocks, everything is literally next level. And and now we think about AI. Oof. Like we all know that. I'm not even gonna go there, but yes, it's crazy. Like where the world is going, it's mind blowing, but it's also, I feel like it's making things easier for us to be the best version of ourselves. Because there's everything at arm's reach. We're gonna see better, bigger, cooler things than we've ever seen before. And isn't that what it should be? Right? Like shouldn't we constantly see change in the sport world? I mean, like for me, like that's all I want. Like I want a kid in swimming to say, I'm gonna win 25 gold medals.
Phelps, of course, holds the world record of 23 gold medals, so even he is rooting for the next guy to come along. Great to see.
Very cool. Very, very cool. Coming up, we're going to get the latest on China's economy. Fresh data out today. In the next hour, don't want to miss an interview with Kathy Wild, CEO of the Partnership for New York, on the narrowing of the Big Apple's mayoral race. It's now pretty much a two-person sprint. Maybe it's still only a one-person sprint. We'll see. So I'm Mondamini now, and Andrew Cuomo. Stay tuned. Squawk Box. Come right back.
of CNBC.
Some new data out this morning providing some new insights into the state of China's economy. Joining us right now is China Beige Book CEO Leland Miller, which is the organization's September report actually showing that the Chinese economy is starting to build momentum with every key indicator showing improvement. Leland, where is the growth? Where's the improvement? How would you characterize it overall?
Well, it's been an interesting couple of months because the strength is not in one particular place. There's really is broad improvement right now. I think that's going to surprise a lot of people, particularly after this spring where we saw this incredibly volatile, very bad data followed by recovery, followed by very bad data. But what we're seeing is sort of broad-based improvement. It doesn't mean the economy's sizzling. It just means that some of the weakness that has was seen earlier this summer, it's dissipated, and we're really seeing sort of a broad economic improvement right now.
The weakness that we had seen earlier in the year, at the end of last year, at the beginning of this year, it was characterized at the time as something that would make China have less of the upper hand in these negotiations with the United States. Does this improvement change that, give them more leverage?
Well, I don't think it's a coincidence that we're seeing better data right now, just as the phase 2 deal negotiations are starting to rev up a bit. A lot of the weakness that we saw before was based on weak domestic demand. China has not solved that problem. What they've done is they pull forward growth. There's more goods trade-in programs. There were this spring. You still see some of that now. So a lot of the consumption improvement isn't something that's necessarily durable into the future. We are seeing improvement, but at the same time, this isn't some sort of structural shift. You still see calls in Beijing for a structural shift towards more consumption. They're not doing that. They're pulling growth forward, but the growth they're pulling forward right now at least is working.
So it's manufactured, you think, by the Chinese government?
Well, to some degree. I mean, what you want to see is this weak domestic demand reverse because consumers feel empowered. They want to borrow more. They want to invest more. They like what they see on the horizon. We're not necessarily seeing that. And as a matter of fact, if you look at our credit data, we're seeing some of the lowest levels of credit access we've ever seen in over 15 years of tracking the economy. So it doesn't look like consumers corporates are actually out there borrowing, investing in their future. So the economic data are okay, but some of the things that dictate whether this could continue going forward, you're not seeing this optimism from higher investment or from higher borrowing, and I think that's a real concern.
Okay, it's coming, as you mentioned, this second round of negotiations really amps up, and a story that's in the Wall Street Journal today saying that China at this point, and Xi at this point, wants a big concession from President Trump, and that would be to say that the United States actually opposes Taiwan independence. That's a big change from the Biden administration saying that they do not support it. They want an actual more forceful statement. How will that play in these negotiations?
Well, Beijing always wants the United States to walk away from Taiwan, and sometimes that's rhetorically, and sometimes that's substantively. I don't think there's that many people right now who are cheering on Taiwanese independence. It would open a door that would probably lead to a lot of problematic things. But the Chinese are always looking for signals. What is the U.S. willing to signal to the rest of the world? What are they willing to signal to the Taiwanese that they won't back them, that they're not for them? So a lot of this is about trying to get a sense of whether Trump is willing to put Taiwan on the table writ large. I think that the more important part of these discussions relates to export controls and technology. What the Chinese would really want, sure, they'll take all kinds of declarations on Taiwan. What they really want is export controls pulled back on advanced technology so that they can really gin up their semiconductor industry, so they can gin up their advanced technology machine and really go get them.
And the TikTok deal plays into all of this how? Because we still haven't really heard from Beijing exactly what they think parts of this deal are.
That's exactly right. I think markets are getting ahead of themselves on this. A lot of people think, okay, well, TikTok is solved, check the box, we're going to move on to phase 2. Right now, there isn't much movement on phase 2, despite all these headlines, despite people telling the press that other things are happening, which is just not true. What we might be seeing is the fact that the TikTok deal was doable in 2025, so they're getting it done, and they're pushing anything on a potential phase 2 to early next year. It doesn't mean it can't happen. It just means we know what President Trump wants. He wants more purchases. He wants a lot more buying by China of U.S. commodities and goods. But the question is, what is the United States willing to give up to China in order to get there? That's the bridge that needs to happen in terms of a phase 2 deal. We're not there. They're not, they're nowhere near there right now. So I think that they have to actually figure out on the U.S. side, what are they willing to do in order to get this? Otherwise, then they're probably going to walk away from the table.
Okay. Leland, thanks for the update.
Thanks, Becky.
It is just 7 a.m. right now on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off today. On today's top stories, President Trump expected to meet with top 4 congressional leaders at the White House today as the government preparing now for a potential shutdown that would begin on Wednesday. In an interview with NBC News, Trump warning of potential widespread federal layoffs if there's a shutdown, with some being permanent. Meantime, Eric Adams dropping out of the race for New York City's mayor. His departure now putting the focus on former New York Governor Andrew Cuomo and Democratic Socialist Zohran Mamdani, who has a commanding lead in the polls and the betting markets. And a programming note, Kathy Wild, President and CEO of the Partnership for New York City, she's going to join us at 7:50 a.m. Eastern Time this morning. And check out oil prices this morning. Reuters saying that OPEC Plus will likely greenlight another oil production increase of at least 137,000 barrels per day at its meeting early next week. Take a look at futures right now. We got some green on the screen, about 214 points higher on the Dow, S&P 500 about 37 points, and NASDAQ up about 159 points. I want to get straight over to Frank Holland. He's got a look at this morning's pre-market movers. Frank, what's on tap?
Hey, good morning, Andrew. We're going to start with shares of Alibaba. You can see right here they're moving higher, about 3 1/3% right now after Morgan Stanley raised its price target on this stock from 165 up to 200. You see the stock's trading at about 177 right now. That implies a 16% upside from Friday's close. Analysts also raising cloud growth estimates to 32% for 2026 and 40% for 2027. There comes amid increased capex, model upgrades, and accelerated international expansion for the Chinese tech giant. Take a look here at the chart. You can see shares are up more than 100% year to date. All right, moving on. Looking at GSK, those shares right now, you see they're moving higher, also up about 3%. After announcing CEO Emma Walmsley will step down in December and be replaced by the company's chief commercial officer. Walmsley's led the British drug maker for over 8 years. Her contract was set to end next September. Look here, though, shares only up about 20% or so since she took over as CEO, just under 20% right now. But again, shares of GSK, they're up more than 3%. Right now, we're going to stick with Big Pharma. Novo Nordisk shares, you can see they're moving to the downside, just about 3% as well. There seems to be a theme. This is after Morgan Stanley downgraded the stock to underweight from equal weight. They also lowered the price target from 59 down to 47, and implied 15% downside from Friday's close. You can see this stock's trading at about 53.88 right now. Analysts are very concerned about slower U.S. GLP-1 prescription growth and a lot of competitive pressure. For more on that and other top analyst calls of the day, head over to cnbc.com/pro, where subscribers can get more access to detailed analysis of the day's big calls and its biggest stories. Andrew, back over to you.
Okay. Frank, thank you for that. Appreciate it. Nice to see you.
Good to see you.
Pharma companies are expected to submit plans to the Trump administration today for voluntarily lowering drug prices. Angelica Peoples joins us right now with more on the deadline that's approaching and what's happening behind the scenes. Angelica, what are you hearing?
Yeah, Becky. Well, so far we haven't heard companies making many concrete promises. Most are telling us that they're in talks with the administration and that they don't have anything to share yet. We've heard a number of CEOs like Lilly's Dave Ricks and just last week on your show, Merck's Rob Davis, say that they agree with President Trump that other countries should pay more for drugs, but we haven't seen much to actually raise those prices elsewhere. Now, Lilly and Bristol Myers Squibb are those are some of the companies making a few tweaks, but nothing groundbreaking, and that's in part because you can't just jack up the prices in places like Europe on a whim. They have controls in place there. We have seen more moves around Trump's call to bring drugs directly to patients at lower prices. So Bristol last week making its psoriasis drugs to TIC2 available at more than 80% below the list price. And this morning, the industry's main lobbying group saying that it'll create a new DTC website that'll aggregate medicines from its member companies at those lower prices. And we'll see if that's enough, right? This administration is very focused on most favored nations. And just last week, HHS sent a proposed drug pricing pilot program to the White House for review. And we're hearing that there could be more in the works. So much more to come, Becky.
But again, this is the drug companies trying to look at ways to say it's not us, it's the middleman. That's where you have to do it, and that's why they would set up a DTC, a direct-to-consumer website.
That is certainly one way to do it, and say that if we just go directly to the consumer, for example, with that Bristol drug, we can cut the price by 80% and hear consumer. But again, the question is, how many people are really going to pay for that? So if you do the math on that drug, for example, it's still $16,000 a year out of pocket. And again, the companies will say, well, this is where insurance needs to be fixed, right? This should be a drug that's covered, you don't have any copays, and this is what's wrong with the system. So it's certainly one way to say that we have an answer without the companies themselves necessarily actually lowering the amount of money that they're taking in.
Angelica, thank you.
Okay, coming up, what is next for the economy and the markets? Will the potential government shutdown stop the data train? That's starting with Friday's employment report. We're going to get into that and much more with Carlisle, head of global research, Jason Thomas. That's next. Do not go anywhere. Squawk Box coming right back. Welcome back to Squawk Box. For a look at the economy following last week's PCE report. To join us right now is Carlisle, head of global research, Jason Thomas. Good morning to you, sir. I think we're all trying to figure out where we really are. So where are we?
Well, I think when you look at the PCE report, I think the first point to make is that the Fed has not hit its inflation target in now 54 months. That's quite a long time. There are about 3 million children who are enrolled in elementary school in the United States who have been born since the Fed last hit its inflation target. Just to put that in perspective.
So you're in the indictment camp of the Federal Reserve.
No, I think that the length of time is something that we should appreciate. Secondly, very often you hear people say 3%, 2%, what's the difference? But I think we should appreciate that this excess inflation we're observing today is coming on top of what has already been a 20% increase in the consumer price level. So, this is, I think there's a callousness to trivializing excess inflation at this point, again, given how much the prices
You say trivial, why do you say it's being trivialized?
Well, I think that there's, of course, push for rate cuts.
Right.
And it's, there's measurement errors. Or, again, if it rounds to less than 3%, it's just 2.9% on core PCE. It's very often you'll hear people say, it's 2 and change, to sort of imply that we're really much closer to the 2% target than we are. And of course, we spend so much time talking about tariffs. Tariffs only cover, slightly less than 20% of the categories in the PCE index.
Oh, so what do you think is driving all this then? So you don't think, so you're saying tariffs are not the problem?
No, I don't think that's reflected in the data. For example, services unaffected by tariffs continue to increase at a 3.5% annualized rate. That's about 125 basis points from where it was prior to the pandemic. You have the super core, of course, that the Fed supposedly focused on very closely. That's still at 3.3%. Most recently, it was the highest since February.
So are you suggesting they should be raising rates? Is that what you're trying to do?
No, not at all. But I think that this asymmetry, that the next move in rates is down, and the speed with which rate cuts will come. This seems a little aggressive given where we are in the broader inflation.
It's aggressive to have one cut is all we've seen at this point, though. And
Sure.
Powell said that this is a risk move to make sure that we're not missing it. So your expectation is maybe they ratchet things down from here.
I think that they should take some time and digest this. I think also, in many ways, you have two big policy shifts. Of course, tariffs, but then also border enforcement, broader immigration. In both cases, you have what is equivalent to a supply shock, a negative supply shock. To the extent that you're actually cutting rates, you're accommodating that, perhaps making it easier to raise prices, perhaps having upward pressure on wages. So I think, again, allowing the economy to absorb this new reality, find a new equilibrium, is probably the path that would be more consistent with the price stability goal of the Fed.
So at this point in the ball game, not what you think should happen, what do you think will happen over, let's call it, the next 12 months?
Well, I think that the idea that the Fed should be cutting aggressively in the face of what is the largest concentrated CapEx boom in at least 25 years, strikes me as inapt.
Right.
So again,
I should say that's coming from a private equity firm that typically likes low interest rates.
Well,
right. So what do the folks at the firm say about all this?
Well, no, I think low rates would be fantastic, but the idea, I think, is that you want low rates to come in the context of inflation that's back to target, because that is what is going to really have a sustainable decline in rates, not just short rates, but also pulling down on the long end of the curve. If you're too aggressive, if you move too soon, you may actually have an unwanted upward move in yields, as we saw last year. You cut by 100 basis points, and then you had what was equivalent to a 100 basis point rise at the long end of the curve. You don't want that to happen again.
Throw in unemployment into this picture.
Well,
I mean, because that's a big piece. It sounds like what's driving Jay Powell's thinking.
Sure, I think that, again, it's a question of you have right now, you have a inflation target. 2%. Again, I don't know how seriously it's taken, but that's there. You have a maximum employment goal. At some point, there also may be a third objective for the Fed, which is to help stabilize public finances. I think that is, people talk about Fed independence. One person's independence is another person's unaccountability. These are sort of word games. But what I do think we're going to see over the next couple of years is the incorporation of a third target. So right now, you have the employment that is a maximum employment goal that is a reason to keep rates lower. And eventually we may also have concerns about public finances, just lower interest rates paid on the debt. That is another reason to keep rates lower.
So I get all of that, but what I guess I'm stuck is, it sounds to me like in a perfect world you'd actually raise interest rates.
No. I think, again, right now when you look at forward curve, you have an expectation that rates will fall to 3% by the end of next year. Again, that doesn't seem consistent with this CapEx boom that we're observing.
Right.
You have unemployment that is 0.1% away from what the Fed considers its target, 4.3% the S&P. So this just seems to be an environment where rates closer to 4% than 3% is what would be.
Can I throw out one last thing? I know we're going to run out of time. What happens if the tariffs are deemed to be illegal?
I think there's lots of other statutory authorities the president possesses that you can make reference to those. So, I mean, there's a question of rebates. There's a lot of complexities, but I do suspect that the president will be able to, 1962 Trade Act, 1974. So this is a
There's
question.
things he could do for 15 months at a time, and
and roll it over.
And you just say roll them forever. It could just roll forever.
I think that the president is vested with really extraordinary and broad authorities when it comes to the ability to impose tariffs. And I think people shouldn't get too excited if the 1977 Act is ruled to be inapplicable for
And
this
a lot of the
specific
tariffs he's
tariffs.
doing now are under these special sectors, like considerations.
That's right. Exactly. And so, again, I
kind
think
of shifted their policy attack on
people shouldn't get too excited if these are struck down, because there's other avenues, other mechanisms.
Okay. Jason, it's nice to see you. Thank
Nice to see
you.
you.
We'll see what happens.
All right, coming up, Jim Cramer is about to make a mad dash
Booyah.
to our set before he heads downtown for Squawk on the Street this morning. He's got a new book. It's out tomorrow. He's going to join us right here to tell us all about it. That's next. Jim Cramer in the house. Thank you.
Thank you.
NBC Plus.
All right, everybody, welcome back to Squawk Box. It's a Monday morning, and we're watching to see how the futures are faring this morning before we kick things off. Right now, it looks like the Dow futures are up by almost 200 points. NASDAQ futures up by 150. S&P futures up by 32. Then you've got treasuries. The yields are just a little bit lower this morning right now. 414 on the 10-year, 361 on the 2-year. And guess what? We have a very special guest with us in the house. Our next guest is a dear friend and a best-selling author.
Booyah!
Booyah! Long-term Squawk Box guy, long-term CNBC guy, Jim Cramer.
Well, first of all, thank you for having me. I've known you both for a lot longer than your shows begin, but I love the show, and you know the 30th was one of the greatest parties. Congratulations to you, because you have a book a long time in the making that I can't wait to read. I hope I can get a chance to do so.
Sir.
Fascinating, 1929. I remember when you and I went back from the days of Larry Kudlow.
Yes.
And
Yes.
it was the...
I remember doing something even before that bullseye. Do you remember? We were kind of like bickering back and forth on set.
Well, look, I tried to hire you for the Street.com 100 times. I said if I got her for the Street.com, we would be successful, and I didn't. So I hired her to be Kudlow's backup, and wow, what a star! Just a star.
This is bullseye. This is back in the day. Dylan Radigan doing bullseye.
Oh yeah.
Jim and I used to play around the edges with that.
Well,
right.
we disagree,
but we did it it was a shtick. We did it on purpose.
It was just we had to develop a disagreement. We couldn't really have it, so it was all faux.
Yeah.
But
it was all part of Heat. But I want to talk about why you're here today.
Sure.
I don't want them to roll past this. His new book is out tomorrow. It's called How to Make Money in Any Market. Make sure you go get this book. This is for anybody who wants to figure out what they should be doing. And Jim, this is a different book for you.
Yes, well, it's a how-to book, tough category. But now, let's say someone mentions a stock here, okay? And a person at home says, you know what, I want to know how to research that. I want to know if it's right. That's the process. I talk about how you observe your curiosity. Here's how you can look into it. Some of it is the fact that we now have ChatGPT and Perplexity. But a lot of it is just like, please invest right. And you can invest in individual stocks plus index funds, which is now somehow against the orthodoxy. So I find that when someone says, look, there's a change at the top in Barrick. We just had right now, Mark Brister just retired. Let's look into that. Maybe it's time to buy a gold stock. But then you see it's up 110. My rules say that's up too much. So we go through it.
General guidelines for doing it. And you're right, this comes as so much of the American investing dollars are going into passive index.
Right, I'm trying to say, I know you want to invest wisely, as opposed to, I need you to stop buying index funds. It's the opposite, have index. But I know you're curious about individual stocks, so you wouldn't be tuning in. So here's the right way.
I want to know, if you wrote this book 20 years ago, would it be very different than today? Meaning, you think it's fundamentally changed how to examine and value shares in a world where the indexes are so important? So, like, if your stock is in an index, that seems to be helpful. If it's not, and could potentially be, that could be helpful. If it's never going to be, that will not be helpful.
Well, look, I think you raise a great point, which is that at what point would I have done this? And I would say, you know what, back then, you couldn't get the stuff you need. I mean, can you imagine if you have Atkins on, who's a really fascinating guest, man. How about if you go get 2 reports a year? That could be tougher, but I explain how to research it based on the conference calls. But 20 years ago, it wasn't possible for the individual to get the same information that a professional could. Now, because of artificial intelligence, it's the same.
So it's a great equalizer.
It is. I find it incredible. I mean, before I came out here today, I had to look up some things for the 9 o'clock show. I like to do more than one, but I wanted to compare a bunch of stocks. I wanted to compare Barrick with Agnico Eagle, which is another great gold stock. They come all the time, and Newmont. So very quickly I can do the comparison just like this before I come out, just in case, hey Jim, what's new? And it's not necessarily what you would do, but on my 9 o'clock it would be. And I've got it. And I've got the different characteristics, and I have to check because it's so often incorrect, and that's the big problem.
So what is the answer to those?
It's exactly they're all between 108% and 120%, and keeping in the fact that gold's at a record high.
Okay. One of the things you do, though, is you lay out and explain to people, if you're not in this game, you better be.
Yeah, well, I think that what's happened is people gave up. I find this new generation, and look, we can't discriminate against generations either. Gen Z plays a lot of stuff that I regard as being, let's say, one-trick pony. They'll like a...
What do you mean, meme stocks?
Yes, they love the meme stocks. Or one of the things that they do 0-day options, but they don't invest over time. And when I was living in my car, I put away $10 to $50 a month, and it ended up being a lot of money. And I just want people to invest because I don't want people to work and then die at their desk because it's so hard to save. They think it's hard. Right. They always think they've given up. They think that their parents are always going to be richer than we are. I lived in a generation where I presumed I was going to be richer than my parents.
But don't you think that part of what's happened
Your dad
here
did
is
pretty well.
that generation is now trying to shoot for the moon, right? It's turning into less investing and maybe more of a speculation because they feel like the only way out is that.
But they can buy companies that they observe. I mean, they love Robinhood. They should have bought the darn stock. They use Apple every day. Don't listen to Jeffries, which says it's not doing that well. Go look at the lines that I posted in Osaka, in Tokyo. I mean, take a look at the lines here. Watch football this weekend.
17.
Exactly. How many ads did you? I mean, I don't know. I was inundated with ads. It was really painful. But I think half of them were for the 17. I'm not buying the 17. Verizon's buying it. T-Mobile's buying it.
Okay, what about all the folks, especially younger people, who say that the future is crypto?
I say crypto's fine.
And how do you value that? What is the sort of process with which you would use?
Well, I'm using it as insurance, and it's an insurance against the $37 trillion that we owe. Of course, we do have a government shutdown, but at least it's not connected to a deadline involving, refinancing for the government, which is really good. So the government shutdown is not done at the same time as a possible cataclysm of not paying bills, but I don't know. I think that crypto is. I'm not valuing it as fun. I'm valuing it as anti what the younger people think is our country's problems. They may know that one, but then again, maybe my generation never has to see it, and their generation's gonna have to live with what happens.
When you talk about what the younger generation is involved in, I've talked to other investors who worry that it's into this, as you're saying, almost like a gambling mentality instead of a longer term. And so what do you do for longer term? Does that mean you can still play with some of these things and go after them, but you want to take some of your money and make sure it's there for the long haul?
Right. I want investing, not trading. I think that one of the things that we've made a mistake on is that we do it. Look, the propensity is to talk about buy, sell, hold because we have a lot of analysts on. But how about buy and hold? Or buy and homework. So how many times did people trade out of Apple? Because each launch was problematic. How about the incredible rush against what I regard as being the AI market that was great for Meta? It turned out to be great for Alphabet once they won the lawsuit. So I just think that there were so many opportunities right in your face. Right in your face.
Right now, you've talked about recently just this idea that there's two economies out there, right?
Yes.
You've got the AI and the tech one that is a booming economy, but on the other hand, you have a consumer that probably needs a little help.
I think the consumer does, and I saw the Fire Pal cartoon. I don't know. I mean, that's hard for me because he's a gentleman. He's worked really hard, and I think that I don't want to ridicule a guy who's spent his life. Well, they have some private sector, but yeah, there's two markets, and look at this First Brands. I mean, when you look at it, the liabilities, if you look at ChatGPT, Perplex, whatever, the liabilities are between like 10 billion and 50 billion. Who the heck knows? But they were Anko, wipers, okay, auto light spark plugs. These are big Walmarts. We haven't heard from Walmart, but you want to know that's the American way for the consumer because that consumer is trying to keep their car running.
How do you think about, though, the AI boom in the idea that we're now getting into? We talked about vendor financing last week. When NVIDIA does this sort of massive deal with OpenAI, I don't know if you saw Bill Gurley actually out online over the weekend saying this is when you get into a situation where it gets more complicated.
Who is going to go against Gurley? He's terrific. And what I would say is this. That was the one that really disappointed me because as long as we're doing a vendor financing, it's very hard to be like Nortel. I have a piece this weekend for clubs. And it's very hard to have Lucent. Very hard to have Nortel, which ended up having very bad orders. Because it was all done with cash. This is the first one that's done with debt, and I think that they're going to continue to make contracts and continue. Look, this thing, this OpenAI, people think it's worth $1 trillion, but what does that mean, worth $1 trillion? Worth $1 trillion. I mean, and therefore they can be able to raise $500 billion. I mean, you need that Oracle, right? We don't know how much Oracle's going to be. They're on the hook from OpenAI. Now, I don't agree that the $100 billion over time that Jensen Huang from NVIDIA is giving to OpenAI is necessarily a quid pro quo. I think that they've made it very clear that it's not. But I'm sure the skeptical people are going to say it is.
Well, I just think the larger question is, none of these guys are really making money right now. Now, part of that is because they continue to grow and they continue to keep investing in the business. Maybe if they stopped it,
none of the
none of the large language models are actually making money. And so here you have this situation where, but they're the ones who effectively are ordering the chips. They're the ones who need the data centers. They're the ones who need the energy. All of these, and they're making massive commitments without the cash on the other end.
Totally true. Now, like Sam Walton will say, there's a lot of demand, right? But I had Joaquin Duato. Okay, he's the CEO of J&J. They have the best cancer franchise, and the stock's doing. And they're doing nothing with these big guys. Why? Because the big guys are saying they're going to cure cancer, but why don't they work with the companies that are trying to cure cancer? Right. I find a lot of these companies are so busy building out that maybe they haven't even figured out what to do with it. Now, the new generation, okay, the Vera Rubin, has got reasoning. And reasoning is the real threat to us. Look at that Doug McMillon piece that we saw this weekend about Walmart. He says everybody's job's going to change. Whose job's changing so far? I mean, all I know is that, yes, we could all be holograms. But I was called a hologram in 2012 by Elon Musk, and I'm not a hologram. But we could easily, some people could be replaced by people who are not people, because this news business doesn't make any money. Have you noticed that? Are you conversant with that?
Versant. That case, well done.
Conversant. I didn't say anything about versant. What, are you crazy?
Very quickly, Ed Yardeni had a piece out this morning, and it reminded me of your book, just because it said, look, this looks like the Roaring 20s, and things have been great since 2020, really, overall. Right. But your book is about how to make money in any market. What happens if that changes?
Well, I think that,
still stand?
Yeah, absolutely. And remember, half of what I do is supposed to be index fund. We do have a Roaring 20 and then a crash, which I don't think so, because I can distinguish. Until then, what Gurley was saying with the pseudo-vendor financing, I still believe that it's really possible for people to ride through a crash. It was possible to ride through 2000. It was possible to ride through 2008, provided you didn't trade out. And that's where Warren was so right. Remember, he said, if you had held, you did fine. Now, people who needed their money in 2010, 2011, they got hurt, and you know better than anyone because the book was so good.
Thank you.
The book was really good, man. I bet you 29 is going to be fabulous.
Well, we're trying.
Give me a villain. Give me a villain.
A villain?
Yeah, come on.
Oh, there's so many villains. But nobody goes to jail in 29 either.
Isn't it something? How about Fisher? How did he look?
I mean, Fisher, we're talking about Irving Fisher, the great professor. I mean, he didn't look so smart in the end.
No. Professor.
Not
so smart.
Not so
You guys are smart. I love this show. I watch it every morning, okay?
Well, we watch you every morning.
But I think you guys are sensational, and it is a delight to be here.
And we love having you, Joe.
I want you to come, obviously, on Mad Money. You'll be
God
there.
Bless you, I will.
Give you a good chunk of time because you deserve it. You know, my wife watches the show, and she says, you know, I love these guys. She loves both of them. She thinks you guys are the absolute greatest. I don't like how much she likes you. I know.
Well, I love your wife.
Thank you.
Thank you guys. Thank you for having me.
It's called How to Make Money in Any Market.
Show it on the screen, folks. Booyah, right there.
Isn't it tough to still be promotional?
No.
Aren't you embarrassed a little?
No.
All right.
Go on Amazon right now and buy the book, folks.
Thank you. Love you guys. Thank you.
Love you. Coming up, the election turns. We're going to talk about it. New York drama right here. New York City Mayor Eric Adams. He's now out of the race, giving Andrew Cuomo maybe a boost. We'll see. Zoran Mondami, who's got a commanding lead in the polls. Is it now a two-person race? Is it still just a one-person race? I don't know. Kathy Wilds, president and CEO of the Partnership for New York City. She's going to join us at 7:50 a.m. Eastern Time. We're going to break down what's going on and what comes next. Squawk Box coming right back after this.
assurance.
When we come back, can President Trump and congressional leaders reach a deal to avoid a shutdown? Congressman Mike Lawler of New York will join us with his take on how to keep the government funded. Plus, we'll get his comments on the latest turn in the city's mayoral race now that Eric Adams has dropped out. Squawk Box, we'll be right back.
Cancer innovation.
All right, welcome back, everybody. President Trump is set to meet today with both House and Senate Democrat and Republican leaders in the hopes of avoiding a government shutdown. Joining us right now is New York Republican Congressman Mike Lawler. And Congressman, first of all, thank you for being with us this morning. I'll ask you, what do you think the odds are that we reach some sort of a settlement? We are, at this point, just a day, about 40 hours out from when you would actually see the government shut down. And to this point, there has been no meeting, there has been no agreement. The two sides have been kind of slinging arrows at each other on all of this. Do you think this meeting today is going to be productive, or is this going to be a situation where they both lay down, the two sides lay down the lines that we've already heard?
I guess no time like the present to meet, but look, Democrats' position on this is bizarre. Chuck Schumer and Hakeem Jeffries have long been on the record decrying a government shutdown, saying that we cannot shut down or it'll hurt the American people, it'll hurt the economy. Americans who rely on Social Security or veterans benefits will be impacted, our military will be impacted, border security will be impacted. These are all things they said literally a year ago while Joe Biden was president. And yet now they have changed their positions and want to shut the government down, stomping their feet, pounding the table, demanding that we increase government spending and provide health care to illegal immigrants. It makes no sense. We have government funding running out tomorrow at midnight, and instead of passing the CR that already passed the House to keep the government funded through November 21st, Chuck Schumer has put forward a list of demands that are dead on arrival and have no chance of becoming law. And so he is barreling us towards a shutdown for one reason and one reason only, and that is because he is petrified of AOC and the progressive base that is demanding a government shutdown, because they somehow think that is going to empower them against President Trump. OMB has already put out a memo, which I disagree with, but they're very clear that they are going to start taking action and laying off people within the government. I don't see how this is going to be productive, and certainly for Democrats, if they think they're somehow going to get a better deal here. We have a bill to avert a shutdown. It has already passed the House. Chuck Schumer should grow a spine, provide the votes necessary to break the filibuster, pass the CR, and negotiate over the next 2 months so that we can finalize an appropriations package for fiscal year 26. It's pretty simple.
Congressman Lawler, just to kind of clear things up, there's hypocrisy that has run rampant on both sides, but you have never been in favor of a government shutdown, whether it was threatened by the Democrats or the Republicans. You voted for every congressional continuing resolution?
Correct. I have always voted for a CR because, to me, a government shutdown has to be one of the dumbest things I've ever seen. It saves us no money. It doesn't do anything to help the American people. It creates chaos in the economy. And from my vantage point, I don't care who pushes for it, whether it be the Republicans or the Democrats. It's idiotic, and it has to stop. So I have always voted to keep the government funded and open, whether it was Joe Biden as president or Donald Trump. And the fact that people are playing politics right now, contrary to their previous statements, they should be called out for it each and every time.
Congressman, question about New York City here. We got Eric Adams now out of the race. Curious whether you think there's going to be pressure from Republicans on Curtis Sliwa to get out of the race. I know that the president has tried to get him out of the race already unsuccessfully, and whether it would even work in terms of getting enough support for Andrew Cuomo up against Mondani.
Look, I've said from the beginning that the candidates had to do what was right. They had to unify and make a decision that was in the best interest of New York City, so that Zohran Mondani did not get elected in November. The policies that he is espousing will be destructive to not only New York City, but New York State and the country writ large. With that being said, I've also made clear, Andrew Cuomo is not a solution. Andrew Cuomo is responsible for so many of the problems facing New York State. He's the one who signed cashless bail into law. He's the one who made New York a sanctuary state. He's the one that shut down Indian Point and banned natural gas, giving us the highest energy prices in the country. He's the one that put us on the path to increasing state spending by $100 billion in a decade. Okay. So this notion that somehow Andrew Cuomo is the savior here, I think is laughable on its face.
What is to the extent that you seem to be more against the clear leader here in the race. Then what do you do? Or you just throw up your hands and you're cool?
Now look, I've supported Curtis Sliwa. I think the reality is Sliwa has the Republican line, and this is unfortunately it's an ideological battle. You have someone in Zohran Mondani who has put forth policies that would be so destructive to New York, from banning private property ownership to defunding the police and getting rid of the gang database, to shutting down private prisons, to legalizing prostitution. These are the ideas that he is espousing. At the end of the day, the candidates are going to have to come together, and the voters are going to have to decide. I think Eric Adams made the right choice. Let's see what comes in the coming days here between Sliwa and Cuomo. But ultimately, yes, consolidation is the only way you're going to defeat Zohran Mondani. But I think it's important to point out, Andrew Cuomo is not somehow some savior. I mean, so many of the policies that have impacted New York were at his hands, and that should be known to the public.
Congressman, let me ask you very quickly. You said you disagree with the statement OMB put out about looking to lay off government workers if we go into the shutdown mode. What would you do about it?
Well, what I was talking about was specifically permanent layoffs. Obviously, anytime we have a shutdown, the executive branch is going to have to make decisions on essential versus non-essential.
To turn those into fired positions versus bringing them back when the government, if we go into a shutdown when it's brought back.
Again, there's a very easy way here to solve it, which is to pass the CR and avoid any shutdown and avoid any firings whatsoever, so that we can finish our negotiations. So this is really in Chuck Schumer's court right now to actually pass the CR that is on the table. Chuck Schumer should do so today, immediately following this meeting. He should head back to the Hill, get his members there, and vote. It's very simple. I mean, this is a clean CR. Democrats have supported it every single time that Joe Biden was president. The only reason they're not supporting this is because they're afraid of primaries and Donald Trump is president. It's pretty straightforward.
Congressman Lawler, thank you for joining us this morning.
Thank you.
Okay. Coming up, we're going to have much more on potential shutdown and upcoming negotiations with Pennsylvania Senator Dave McCormick. It's coming up at 8 a.m. Eastern Time. Don't go anywhere. Squawk Box. Be right back. Coming up, Eric Adams dropping out of the New York City's mayoral race, how this could turn and impact the business leaders in the Big Apple. We're going to dig into all of it. Kathy Wild, President and CEO of the Partnership for New York City. She's going to be our special guest when we return. Okay, now an update on the race for New York City mayor. Yesterday, of course, Eric Adams announcing he's dropping his bid for re-election. Joining us right now is Kathy Wild. She's the president and CEO of the Partnership for New York City. I think under your breath, you'd say you've been wanting this to happen for quite some time. Maybe not under your breath.
Not at all. No, I just think we've been tortured for the last couple of years as the mayor has gone through what is really a tragedy for New York City. You know, on an objective basis, he's done a very good job in terms of his administration pushing through a lot of important things. They have reduced crime, the shooting rates are way down. They have been very successful with sanitation, housing, etc.
So the business community now, but I think where I was going with this is the argument has been that I think you don't like Zoran Mamdani for the most part, and that you'd like to find an alternative. Now that Adams is out, how do you think it really changes the calculus, if at all, for Cuomo's bid?
Well, if you mean in terms of the business community, that's one thing. I think that they're very concerned about Mamdani's policy positions, the things he has focused on in the past, and to some extent in the campaign. He has made an effort since the primary election, since winning the primary election handily, to meet with a lot of business people, and he's provided some reassurance that he's somebody who will.
Do you think the business community is more comfortable with him now?
I think it's all over the map. There are some members of the business community that have met him and feel that he's a smart guy who will want to be successful, so they're hopeful. But I think the main point is that it's really up to the voters, not the business community. We still live in a democracy.
Well, so how much of this is a worry, though, about if the New York City Partnership is too far out there saying, you know what, we're not into socialism. We don't like socialism. We don't like this mayor. We don't want him to be the guy, that backfires, that the city says, well, you hear people say, well, if the real estate guys and the business community don't like him, we like him.
Something must be good, right?
Yeah.
No, absolutely. No, I think it's, I think the idea of the whole thought that money, raising super PAC money, etc., to go after somebody is, I think the public objects to that. I think that backfires. I don't think most of the business community has not spoken out one way or the other on this issue, and I think it's because they are going to go with the will of the voters, and we have to work with whoever is mayor.
But I will tell you, at least privately, the people that I talk to in the business community, almost to a man, to a woman, say they have a particular view, which is that they don't want Mamdani to win. They may maybe a toss up as to Adams or Cuomo or something else, but they sort of have a singular focus about that, and privately are telling each other this is no good, and they want to somehow see if they can affect it, but they don't know how.
Right, and in fact, the way they can affect it is go to the polls and vote, and then there'll be one vote among many.
What do you think, though, between, you still have Sliwa in there?
Yes.
Do you think that he's going to drop out?
I do not.
You do not?
I don't think so.
So do you think then this changes the dynamic at all? What happened yesterday?
I don't think it. I think what it does is allows us to go back to focusing on the issues, rather than the tactics and the will he or won't he, and the mechanics of if we get everybody out, who can win. But I think that's been unhealthy. I think we ought to be focused on the issues. I mean, the big challenges facing the city are, number one, affordability in general, especially housing and child care. That's what we should be talking about, how you're going to solve the problem.
Does Mamdani's solution to that make sense to you? The idea of affordability by saying we're going to do more rent control, extend and expand that?
It's certainly an oversimplification of what's required. Obviously, rents are a big part of the issue, and he has nuanced his position by saying in order to freeze the rents, I know we have to reduce costs, and he is supporting tax reform, real estate tax reform, to reduce costs. So those conversations are going on. Again, I think the solutions that are proposed the problems that are being addressed, the fact that we're the most expensive city in America, that we're having more and more difficulty with having people being able to afford to live here, attracting young people there. Those are the big issues. It's the how you solve those issues that the candidates disagree on.
Do you worry that the people who have the most means will be chased out of the city if Mamdani is there and is successful in some of the things that he wants to put forth? And if you lose that tax base, how do you pay for
Well, I think they're actually being chased out now for a few years. Ever since SALT, we lost the deductibility from federal taxes, of state and local taxes. We're the highest tax city. There's a study that just came out from the Citizens Budget Commission that shows that our share of millionaires is decreasing nationally, while Florida and Texas are going up.
In terms of the conversation, that at least I'm hearing among the business community that are concerned about Mamdani, the focus seems to be on safety and security and the police. You know, what is he going to do with the police?
Yeah.
Is he going to keep Tish? Is he not? Is he going to move money around so that
he could provide a lot of relief if he said, "I'm going to keep Jessie Tish as police commissioner," because there's great confidence in her and in her job.
So you hear that?
Yes.
You hear references to this website that refers to raising taxes, but not just raising taxes. Raising taxes, he says, on white neighborhoods specifically. I mean, it's sort of an interesting thing to say that as directly as he does. When it comes to sort of, and again, he's referring to neighborhoods, but there's sort of he spells it out as a racial issue to some degree, or at least some people see that. And then there's the Bibi Netanyahu stuff about, you know, when he says, you know, that he's going to have him arrested by the NYPD, which is of course completely against federal law. And I think there's a lot of people who are Jewish in this city, irrespective of your views about Israel and this and that, who say that it sends a signal that there's something that there's a anti-Semitic view that's being espoused underneath all of this.
Yeah, and that is the single biggest issue, I think.
You think that is?
Absolutely.
That or the police?
No, I think the anti-Semitic view. New York is a city that has a long history relationship with Israel. Our investors funded the whole startup nation, building of Israel, etc. I think that's a big issue.
So here's the question. To the extent that you guys are now behind Cuomo, what does he actually have to do to win? What do you think that, is there a, and I don't know if you're saying you're probably not behind Cuomo, but I think you really are.
You meaning
what
the business community?
The business community.
No, I think the business community is very split all over the map. I mean, last week, several business leaders, one of our vice chairman, Kevin Ryan, leader in the tech community, came out saying he was going to work with Mamdani on trying to make sure he gets the best possible results if he's selected. So I don't, you know, business, particularly public corporations, does not participate in local politics in a visible way because you can't win. Your employees are, I mean, their young employees are definitely Mamdani people for these companies. So the business leaders are not taking that kind of position. In addition, the whole financial industry, which is the largest sector of our economy, can't contribute because of federal regulations that prohibit financial contributions by financial advisors to state and local politicians. So they basically are on the sidelines because they can't donate. So the business community, I think it's unfortunate and that we ought to be trying to fix this, but the business community really is not that engaged on the politics of the issue. They're very worried about the substance of the issues and what a next mayor will want to do, whether it will be productive. But I always say, we're a city of leaders in New York. The mayor is only one of those. We have not only checks and balances in government with the city council, the governor, etc., but we've got, we have leaders in every sector, in business, in culture, and etc. So I don't think who is mayor is ultimately going to determine the fate of New York City. We're going to have to work harder to make sure that that is the case. We're going to have to depend on the support of the governor and others to make sure that is the case. But I think, I don't know what's going to happen in the election, but I don't think that I think New York City has proven that we're highly resilient, that we have survived plenty of less than adequate mayors. We've survived lots of bad public policies. I think we'll be successful moving forward.
Kathy, it's great to see you. Thank you. Appreciate it.
All right, we should tell you there's some news that's just out from CSX. They're announcing a leadership transition, and by that they mean that the current president, CEO, and board member Joe Henricks is going to be departing the company. CSX is naming a new CEO, Steve Angel, as part of this, what they're calling leadership transition on this. They say that this is effective September 28th, so effective immediately on this. Joe Henricks, they say, is departing the company. They don't say a whole lot, but Joe Henricks was there for 3 years. They do say that they appreciate the 3 years that Henricks spent with the company. But again, this is a big change for CSX. Let's take a look at where that stock is trading right now. 34.30 is the latest. It's up by about 29 cents. This has been a stock that's been under very close watch for some time, I guess you would say. There had been all that speculation about whether CSX would be bought by either Burlington Northern Santa Fe, which is owned by Berkshire Hathaway, or Canadian Pacific. Obviously, a lot of pressure that's been put on the company following the deal that's expected to move forward between Norfolk Southern and Union Pacific, or at least the proposed deal on that front. That would put together the first transcontinental railroad, and then it became a question of who was left to play in that arena. There's an activist investor at CSX, Ancora, who was demanding as recently as last month that CSX either explore a merger, or fire Joe Henricks. Didn't look like there was any interest on the buying side, either from Burlington Northern Santa Fe or from Canadian Pacific. Berkshire Hathaway was pretty clear that it was not interested in a purchase. You can see that stock has picked up recently, just in the last few days or so, and I was just looking, there was a Barron's commentary that talked about an upgrade from Wells Fargo last week. It was Thursday of last week, rating it from a buy, from a hold, and putting a price target of $40 from $37. But again, we'll continue to watch this. This is the latest news out from CSX. That stock right now up by about 1.9%.
And we got a massive deal just crossing the tape, literally as Becky was speaking, a deal that we told you about earlier. It is now official. Electronic Arts being taken private by PIF, Silver Lake, also Affinity Partners for $55 billion. It would mark the largest private equity buyout in history. Stockholders will receive $210 per share in cash. That would represent about a 25% premium to the share price before the deal rumors were reported. Company's CEO Andrew Wilson will continue to lead the company. Transaction expected to close in the first quarter of 2027, and we're going to keep our eyes on what happens next with this transaction. Still, obviously, lots of questions that people are going to have about how it's all going to work. They say it's going to close Q1 of 27, so there's still lots of things that need to take place between now and then. But as we said, you have this combination of Silver Lake, PIF. I should mention, PIF is rolling over. They have about a 10% stake currently in the company, 9.9% stake, and they're going to roll that existing stake into the new deal as well. So some interesting dynamics taking place in terms of what that deal looks like and who is part of it. Of course, Jared Kushner runs Affinity Partners. People have looked at that as an interesting sort of element to all of this as well.
And by the way, this is a cash deal. EH stockholders would get $210 a share. Stocks right now, even after that big jump, trading just below $205, and I guess that leads to to whether or not they think that this will go through the way you could play.
I honestly, looking at that, I think we're literally, because there's still a year
to go,
year and a half out before you're going to be able to get the money. I think that's what this is representative. You know, you would think if you thought there was another party that could emerge, maybe the number would get even higher. But we're going to keep our eyes, as I said, on that story. And it's an interesting one. They believe that they can do a lot of work behind the scenes in private, effectively, that they couldn't do in the public markets, in terms of shifting away to some degree from the console business and more towards the mobile business. But to do that would take some costs and maybe take some revenue on a temporary basis. So we'll see. Meantime, House and Senate leaders will meet with President Trump today, with the government shutdown set to begin early Wednesday morning unless there's a deal. Join us right now, Pennsylvania Republican Senator Dave McCormick. Good morning to you. It's nice to see you, sir.
Morning.
So,
nice to see you.
Handicap where we really are at this point.
Well, listen, I think the Democrats are in a cul-de-sac. I think they are 12 months later taking a position that they're an irresponsible position, threatening to shut down the government, holding the government hostage, based on a set of principles that are completely inconsistent with what they said a year ago, which is we have a clean continuing resolution. We need to keep the government running. I mean, I'm a business person. Only in government would you think of the idea of shutting down the government, the disruption for the taxpayers, the disruption for the military, the border patrol, the potential disruption for the economy. So this is terrible policy. It absolutely makes no sense to shut down the government. But the Democrats, in an effort, I guess, to show resistance to the fact that Republicans are moving forward on their agenda, are threatening to do that. And I think they're in a tough spot because Chuck Schumer, this will be his shutdown, has essentially made the threat, and now he's going to have to get back off the ledge. Right. Or we're going to have a shutdown, and unfortunately think it's more likely than not that we will.
We've seen this movie before, and oftentimes the clock ticks closer and closer to midnight, and invariably somebody blinks. In this case, it may very well be the Democrats. I don't know. But in terms of taking us behind the scenes, what is really the ask, do you think, and is there anything to offer as it relates to the ask from Republicans at this point?
Well, I mean, from my perspective, I don't think there's a lot to offer on the side of Republicans. Essentially, Republicans under the Biden administration supported continuing resolutions to keep the government running because we need to have good faith negotiations, which are underway through normal order and the appropriations process. What they've asked for, what the Democrats have asked for, is an increase of $1 trillion of additional spending. It's the ability to give health care to illegal immigrants. It's rolling back a lot of the things that were passed in the Big Beautiful Bill. So I don't think there's any pathway with those sorts of demands to get to a resolution. So I think they're going to have to back down, or we're going to have to shut down the government. And this is something that I've said consistently. Go ahead. I'm sorry.
I'm sorry, Senator. There are some Republicans who are in favor of strengthening some of the health care supports because their states actually will be impacted pretty hard by this. I don't know if this is the time for it with the government shutdown in a day and a half.
That's right.
But there has been some discussion that 7 weeks out, you could see some Republican senators who very much want to see some, if not all, of what the Democrats are talking about when it comes to healthcare costs.
Yeah, we should have a very fulsome, and we are having a very fulsome and rich debate about those things. So I'm not speaking about whether there will be some Republicans who will support adjustments. What I am saying is that the way to do that is not to threaten to shut down the government and disrupt our entire country if you don't get what you want and you're going to sort of step outside those good faith negotiations. So I suspect Republicans will be pretty united on the fact of moving forward on a clean continuing resolution. The president's been clear on that as well. I think given the stakes, I think it's very appropriate that the president and the leadership on the Republican side has offered to sit down with the Democrats. But unless they come back off this extreme position, I'm not very hopeful that we're going to avoid a shutdown. And I think it's a very irresponsible move on the part of Senator Schumer and the Democrats in the Senate.
Hey, Senator, before we let you go, I have two questions sort of just in the headlines, because you and I have talked about this a lot on the air over the years. We are near a deal. I don't know if we have a deal. I don't know what's going on with TikTok. And I'm curious, given that you've been very vocal about this over time, how you think about the way this transaction is ultimately landing and the fact that ByteDance is still going to own a big piece of this company.
Well, there was a very specific legislation passed that essentially requires that the algorithm can't be in the hands of the Chinese. So I know that the president and the team were working towards that goal. I haven't seen all the specifics of the deal, but I think I stand by that principle, which is to have the Communist Chinese Party having control of the TikTok algorithm, given the impact on American society and our children, is unacceptable. This deal appears to be able to overcome that, and if it does, that's a great step forward.
Okay. Senator McCormick, it is great to see you, sir. We appreciate you joining us this morning. Thanks.
Thank you.
You bet.
All right, when we come back, time is about to run out for a $7,500 EV tax credit, and car buyers are rushing out to lock in deals. But what happens to EV sales after this incentive goes away? Phil LeBeau will have more on that in just a moment. Squawk Box. We'll be right back.
A lifesaver.
The opening bell on this Monday morning, just under an hour and 15 minutes away. The futures are still sharply in the green. Dow futures now up by about 170 points. The S&P futures up by just over 30. The NASDAQ up by just over 150. Let's get down to Mike Santoli. He's got a look at the markets ahead of this open. And, okay, lousy week last week for at least the S&P and the NASDAQ. But maybe we're looking at a little bit more positive news this morning, at least, Mike.
Yeah, Becky, firming up. I mean, last week you did actually have some modest chop to the downside within a narrow range, but by the end, the S&P was down only, 1/3%. Comes into the week about 0.8% below its record high. Did bump its head twice during the week last week at the 6,700 level. I have the 50-day moving average in here. It's an unusually extended period of time. We've been in this rally without the S&P hitting that trend line over 100 days, like the fifth longest stretch since 1995. It means two things. One, it's a very sturdy uptrend. We keep rotating around, finding strength in the laggards when necessary. And also, it wouldn't be a surprise to have some kind of a wobble where it does take us down to a more appreciable pullback. So far, we've been avoiding that to this point. Take a look at some of the leadership shifts, I would say. There's been very strong consumer discretionary patterns as well as industrials. For the course of a couple of years, they've kind of been able to keep pace with the S&P 500. You see right here, these are the equal-weighted versions of discretionary and industrials. There has been a bit of a give back. So market is trying to figure out just how strong the economy is, just how much we're going to get in the way of Fed rate cuts, and you have those areas coming in just modestly. Obviously, parts of tech have kept the S&P moving, and then, of course, you had the revival in things like energy last week. On the AI trade, a lot of talk about, are we over-investing? Do we have too many of these overlapping partnerships, and maybe we're building some kind of a bubble, too much capacity, etc. Well, this is all it looks like right here. Chat is basically an AI-related stock ETF. This goes back, just a year. And then URA, that's uranium and other alternative power, things like, upstart nuclear energy, things like that. And it's going right in pace. So basically, people think this trade is maybe extended, but it shows you that it's not exactly cut into much in terms of this rally that we've had over the last year.
Yeah, just your point about how close we are to the all-time highs. What does that mean as we get set up for the last day of the third quarter, the beginning of October? Any of those things play a role seasonally, or anything we can, check notes on?
No, there is definitely a factor. And coming into really through last week, there was a lot of talk about how you should expect some kind of reallocation, maybe out of stocks, perhaps into bonds, by these big balance strategies, because during the quarter, the stock market has outperformed bonds by like 6 or 7 percentage points. So just the mechanics of it would suggest you'd be taking profits in stocks and reallocating into fixed income. Now, that doesn't always happen on the very end of the quarter, so a lot of that action, to the extent that's gone on, probably has already played through. So that's why, we're coming in this week and there's just this kind of resilient bid in the market. October, you always have to leave open the possibility that there is a little bit of a gut check there. We'll see how, third quarter earnings start to track. Sometimes that's an opportunity for a stumble as companies try to set the outlook for the coming year.
Okay. Mike, thank you.
Okay, coming up, we're going to talk about the changing economics of buying an electric vehicle. Federal EV tax credit expires tomorrow. Phil LeBeau has that story after the break. But first, check out the price of oil. Reuters reporting that OPEC Plus likely to greenlight another oil production increase of at least 137,000 barrels per day at its meeting early next week. We're coming right back after this. Welcome back, Squawk Box. Auto dealers across the country, they are seeing a surge in sales of electric vehicles. That's ahead of tomorrow's expiration of the $7,500 EV tax credit. And Phil LeBeau joins us with more on that. Good morning.
Good morning, Andrew. This will be a big quarter. The Q3 numbers for electric vehicle sales will be a record high. And then after that, well, the expectation is that we're going to see a steep decline in terms of transactions involving electric vehicles. This is from Cox Automotive. Estimated sales, 410,000 EVs in Q3. That would be up 30% compared to Q2 and up 21% compared to the third quarter of last year. A lot of the deals that are happening at dealerships right now, I had this question from people. I was saying, are people actually going out and they're buying these, or are they leasing them? Leasing is a big component of the EV transactions, and yes, leases are listed as sales. It's going to be about 12% of all vehicle sales for the quarter, and that would also be a record high in terms of EVs versus hybrids versus internal combustion engines. Look, in the first half, ICE vehicles still dominated the market. In the Q3 quarter, that's likely to come down closer to 70% for ICE, EV up around 12%. Hybrids continue to hold strong in that 13-14% range. Take a look at GM, Ford, and Toyota. And the reason I'm showing you this is that the estimated sales overall is going to be strong for the quarter, not just because of EVs, but overall the demand for new vehicles remains robust. It's expected to be up about 4.7% year over year. And don't forget, later this week, guys, we get the Tesla annual deliveries, whether it comes on Wednesday or Thursday. The expectation is that the deliveries will be down maybe about 1%. Call it flat relative to last year. And again, the expectation is we likely get those numbers on Wednesday or Thursday. Big week when it comes to electric vehicle news.
Here's the question, Phil. For those who are playing, if you will, the Tesla stock, going into that print, how they should think about that 1% number that you just described, given all the other things that Tesla's trying to do right now with robots and everything else?
Well, if you're a Tesla bull, you want it both ways. When the sales numbers are poor coming out of Europe or not so great coming out of China, I hear this routinely from Tesla bulls. Doesn't matter. It's all about autonomous and robotics. That's the future. Okay, makes sense. Well, if you get a decent number on Wednesday or Thursday, you can't have it the other way. You can't sit there and say, well, look, this is the physical manifestation of AI. People are buying these vehicles because they want an autonomous vehicle in the future. So I'm not sure, Andrew, if you can really read one way or the other in terms of an expectation. If it's better than expected, sure, you might see a little bit of a move higher for Tesla. But I think the real driver of this stock right now, it remains Elon Musk and the themes of AI and robotics and how he is laying out that roadmap, if you will. And that means the Q3 financials and the conference call will be far more important than deliveries.
Okay. Phil LeBeau, thank you, sir. Appreciate it. Meantime, I got some more news for you right now. An interesting story at the intersection of business and politics. On Friday, President Trump urged Microsoft to fire Lisa Monaco, an executive who served as Deputy Attorney General during the Biden administration. She joined Microsoft in July as President of Global Affairs. The president called her a, quote, menace to U.S. national security, especially given the major contracts that Microsoft has with the U.S. government. He said the U.S. recently stripped her of all security clearances and banned her from all federal properties. CNBC's reached out to Microsoft about that story on Friday. They declined to comment, but another example of a situation where you have the president trying to reach in to some degree into the world of business and influence, who they're hiring, who they're firing. I mean, it's just another, I think, an interesting scenario here.
I think it probably points to the more partisan nature of Washington these days, too. The idea that there used to be kind of a revolving door between the government and corporate America, where if you were there, you got your chops. It didn't really matter if you were in a Democrat or a Republican administration. You were somebody who could help influence what was happening in Washington. The more partisan the nature, the more lawfare that gets tossed around, the more accusations of both sides.
Did you ever remember an instance where the President of the United States,
no,
especially for someone who's a lower level, I mean, this is a senior position, but it's not the CEO of the company.
She was deputy AG. She was not a low level person, but no,
I'm saying within a company.
Right.
I mean, and this makes it. I mean, what's so interesting about this is If you are running a business today and you're thinking about hiring somebody,
that's what I mean. The revolving door could shut down.
Who might have come from one administration, in this case the Biden administration, or had been involved with the Obama administration, or whatever.
Right.
All of a sudden you can't hire them because the president is going to come after your company?
No, and I do think that if it shuts down that revolving door between the government and corporate America, you are not going to be able to recruit the same ilk of people to go work in Washington, because the expectation is you go to Washington, you don't make any money, but then you leave and you do make some money. If that
But the question I have is why you don't forget about.
I know you have your. I'm just.
Well, forget about CEOs speaking out about this, because they're too nervous to do anything, and for good reason now. And this is a good example of that. But I'm surprised where the Ted Cruz's are on something like this, or where Republicans are about.
Don't want government intervention.
Don't want government inside of business. This is, you talk, I mean, by the way, this is about, as you know, people talk about socialism, and we're talking about Mondami in New York. Like, this is that. This is that.
It's a question for the guests when we have them on.
We'll continue this discussion.
All right, when we come back, we're going to get you ready for the trading week ahead, including some key jobs data, and take another look at Electronic Arts, that company being taken private by Saudi Arabia's public investment fund, Silver Lake and Affinity Partners, for $55 billion. If it goes through, largest LBO in history. Stay tuned. You're watching Squawk Box, and this is CNBC.
Com.
Welcome back to Squawk Box right here on CNBC. The futures are in the green this morning. You're looking at the Dow futures up by just over 180 points. NASDAQ futures up by 160. The S&P up by 33. Treasury yields have been a little weaker today. The last I looked, the 10-year was at 4.14. Now it's at 4.15. The 2-year is at 3.63. Comcast has named Mike Cavanaugh co-CEO along with Brian Roberts. Mike Cavanaugh will also join the board of directors at Comcast. Take a look at the stock. Right now up by about 9 cents. Joining us for more right now in the markets is Liz Thomas. She is SoFi's head of investment strategy. And Liz, it's good to see you.
It's good to see you too.
All right, let's talk about where things stand. We are ending the third quarter. We're heading into October. Some people think it could be spooky, but hey, we are looking at the markets near all-time highs. In fact, if we open at these levels, it'll probably push us back above all-time high levels. How do you feel about things overall?
Well, I mean, the spookiness that we talk about in markets has been talked about since the end of August, heading into September and this seasonally weak period that usually happens in September and October. I think right now, when we look at just the longer-term bull market and the direction of travel being northward still in markets, we would expect there to still be breakdowns in beta along the way. And yes, things feel extended. Yes, they feel frothy. Yes, the market has been going up for a long time, but that doesn't mean that it has to come back down and suddenly be over. I still think there's time in this bull market to go, but I do think that we'll have some of those pauses and some of those breakdowns, let's call it in the 10 to 15% range throughout the bull market that continues.
Okay, people look at this and say, okay, it's starting to feel like the 1990s. You have the financing that's coming through. Obviously, these companies are different. They actually have profits and revenue. But how do you judge that comparison?
Well, I mean, even if you map it against the 1990s, we're probably not at the end. We're still probably somewhere in the middle of that range. And if you look at just the extended period of time that the 90s lasted on this enthusiasm, obviously about the internet, not AI, but the enthusiasm lasted for the better part of 4 or 5, maybe even 6 years before it turned over. And then overlay actions of the Federal Reserve on top of that, things still went just fine through what we would consider an adjustment cutting cycle. So the Fed cutting because they can, not because they have to. And actually the market continued to rally even as the Fed started to hike rates again later in the 90s. So you've still got time here.
And your point is you got to be in it at this point.
Yeah.
You know, I don't want to go back to Chuck Prince, but you got to dance while the music's playing. You think the music's going to be playing for quite a while.
I think the music can continue to play for quite a while. It's difficult to find something on the radar that can derail this in the near term, right? Valuations alone probably not going to derail it entirely. There would have to be an event, but that's always a risk, and you can't invest looking for the next event. So yes, I do still think there's time, and I think that investors have to be what I'm calling prudently present, right? You don't want to pull all your money off the table, but this isn't necessarily a time when everything's at all-time highs to be throwing a ton of new money in front of it. I think you can still wait for some of those periods, like I talked about before, the breakdowns in beta that are likely to occur.
What do you think does eventually puncture this, aside from the passage of time?
Well, I mean, we all know the quote, right? Bull markets don't die of old age, they're killed by the Fed. So if we start to see the economy reheat again, right now we're still in cooling mode. If we see it start to reheat again and the Fed is successful at this adjustment cycle where we get it to some sort of neutral rate, and then we start to hear about inflation heating back up, maybe even wage pressures heating back up, and the conversation shifts from cuts back to when do we start hiking, that's when you have to get concerned. And this period, obviously there are a lot of different schools of thought. Should we take the rate down quickly and get to neutral, or should we do it more patiently in measured fashion? This period is going to be really critical to make sure we don't overheat it and drive a bubble, so to speak, into that popping zone. Mm-hmm. Right now, I think we're okay. And as long as things stay patient and measured through at least the first half of 26, I still think that we can be successful at it.
Some of the sectors you like include financials and healthcare. And financials, obviously, a lighter regulatory touch seems to be certainly helping all of those stocks. Healthcare, there is some political risk to play into this, depending on where you go. But you know, we're facing a deadline right now for the drug companies to come up with their own list of how they're going to cut drug prices before the government imposes it on them. How do you handle that political risk factor?
Yeah. Well, I'm certainly not the first person to say I like financials, so we don't necessarily need to talk about that. But the healthcare piece, I mean, it comes up on the radar just in the last few months because it was so low. It was, you know, how can the valuation go any lower? It was in the first percentile versus the S&P. Mm-hmm. So it's attractive from that perspective because you're trying to put money to work. Where can you do that and get what you're paying for?
The other piece of it is healthcare at the end of last year started to go down and had a really rough start to 2025. I think a lot of the bad political news was priced in at that point. Can it still go lower? Yes. But I think much of it had already been priced in, and there's likely to be some volatility. But I think healthcare as a sector has bottomed, so to speak. It went through that process, and as we know, bottoming is a process. It went through that process, and now I think it's okay to start putting money to work there, especially if you're looking for other opportunities for growth outside of tech, because biotech, pharma can be those places.
What about China? Why China at this point? We did hear the beige report for, Leland Miller was on talking about how their economy is starting to show signs of improvement, but he thought some of it was maybe manufactured by the government pulling some things forward.
Sure, that is going to happen, and obviously there's always going to be an element of how reliable is the data that we're getting out of China. But I still think they're going to fight in this AI race, and we're going to continue to get announcements from China tech companies about trying to pull ahead, and there's going to be increased competition in that space. And along that way, they may not win, but along that way, there's upside in that market on the optimism that it could happen. And then if you just look at the economy of China in general, still struggling, still in a deflationary zone, I think the government will continue to stimulate until they start to see more signs of life.
If you're right on that, if China makes these advances, I can see how that would help China, but wouldn't it at the same time hurt our stock market, just like DeepSeek did with NVIDIA and the entire market getting drawn down?
The capital, yes, the capital would shift, but I do think that because China had started from where we've decided that they're not going to win this place, I think that there's upside in that competitive environment as it increases.
Taking too much out of the U.S. at the same time?
Yes.
Okay, and gold, when I looked earlier, gold was at another new high this morning. What do you like about gold and what makes you think that continues?
Gold has defied logic through most of this cycle. It's outperformed stocks. I think there will continue to be appetite for gold. We've obviously seen quite a bit of a run-up already, but there will continue to be appetite for gold as we see currency volatility around the globe, as we hear about central banks perhaps moving in different directions or at least at different speeds, and as we worry about just the fiscal situation of a lot of countries around the globe. And the big buyers of gold aren't going anywhere anytime soon. The retail investor has come in and started to perk up their interest in gold, which I think has helped support it. So it's a spot in the portfolio that I think you can use for diversification. Are we going to see another 20 or 30% year in gold? I doubt it. But I also don't think we would see a drawdown along the lines of what you'd see in the stock market or some of the beta breakdowns that we talked about earlier.
Okay. Liz, thanks for coming in today.
Thank you for having me.
Coming up, we're going to talk tech stocks ahead of the opening bell and what to watch as the third quarter gives way to the fourth quarter this week. Stay tuned. Squawk Box returns after this.
powered by AI.
Welcome back to Squawk Box this morning. Take a look at the futures. Got some green on the screen. Dow up about 200 points. You're looking at the S&P 500 up about 35 points, and NASDAQ up about 167 points. We're also watching defense stocks this morning. The Wall Street Journal reporting that the Trump administration is urging missile suppliers to double or potentially quadruple production. And the Journal says the White House is worried America might not have enough weapons on hand if there's a future conflict with China. And you're looking at Lockheed Martin up about 2% on the back of that news. RTX up about 2% on the back of that news. General Dynamics up a little over 1%. Boeing even getting a little bit of a boost this morning as well. Join us right now for a breakdown of the latest moves in the tech sector, though. I want to bring in Joe Tigay. He's the Rational Equity Armor Fund and Catalyst Hedge Equity Fund Portfolio Manager. Good morning to you. It's been quite a wild ride, Joe, and tech is just, I mean, it continues apace, though I should say Intel's off a little bit this morning. How much more does this have to run, or does it?
Yeah, thank you for having me. It's a real thrill for me to be here. I can remember 20 years ago setting up computers for options market makers. As an options market maker clerk, I'd be watching the show. So 20 years on as a portfolio manager after a career as an options market maker in the VIX pit myself. It's a real thrill to be here. As for the market, that's the million-dollar question. A lot of people are saying, like your previous guest, is that this is a dot-com era bubble. We're seeing tech inflating. There's a lot of parallels to now and then. Of course, we're just in this technology boom. It's really exciting as just a person watching this all play out. So my parallel that I've been watching very closely, though, is in the 90s, we saw a Fed easing cycle. We saw easy money coming in. We saw liquidity driving asset prices higher. Remember, in 95, the Fed cut rates. This cycle actually started in 2024, the Fed cut rates. So we're in the middle of this Fed cutting cycle. We're seeing asset prices rise, of course. Now, just because it's similar to 1999, it doesn't mean it's going to be exactly the same. So, yes, we do have potential room to the upside, but there's a lot of other variables, as you know.
So, you look, though, at what's happening in this AI boom, and obviously it's helped a lot of tech, it's helped a lot of energy, it's helped the data center set, all of that, real estate, et cetera, et cetera. The question is, are we in a bubble? If we're in a bubble, what portion of the bubble are we in? And then the question, of course, is if we are, when would it pop?
Yeah, that's a great question. Asset prices are high historically. Maybe that's a one way to measure a bubble. I think that would be my preferred way. You can also look at, the dollar and gold prices versus PE prices. And if you look at that, kind of in the middle of the range too. So there is potential upside. Now, there's no set rule of how expensive stocks can get. There's no set rule of when they're gonna turn. So that's just the bottom line. For me, though, it's really gonna come back to the economy. Last week's economic data, great news, strong GDP. We're seeing upgrades to the 2026 GDP. So for me, it's really gonna come down to that big week, of course. For the economic news this week, we're gonna get the jobs data. So the Fed, they've already told us they're gonna cut 3 times. The Fed is saying we're gonna have liquidity. We're seeing QE, maybe add some monetary stimulus too. So we're getting out there in terms of liquidity. If the economic data is strong, the market's gonna continue and it's not gonna trip up. Now, there are external factors that people can't predict, geopolitical concerns, tariffs out there, maybe even a government shutdown could trip things up. But for me, that's just a sign of there's going to be volatility while this market is inflating. And for me, I don't know, to your point, I don't know when this is going to end, right? My preferred way to play this, of course, is long stocks, long volatility.
Long stocks, long volatility. Are there particular stocks you would play and other particular stocks you would not touch?
Particularly, I love the mega cap tech stocks. They are the hyperscalers. They have all the cash on hand. They really have the data. They know where this all is leading to. So they're doing all the research and development. They're building all of the infrastructure. They are ready for this when it happens. So of course, the mega cap tech is exactly where the AI is happening. And yeah, I think it's potentially that this AI boom could lift all areas. I'm really going to focus in on the tech sector, though. I think that's going to be the best winner over this period. Also very interested, though, you think maybe safety, you would think utilities, though. I think utilities have potential for the upside, too. We are going to need to power all these data centers, so that's maybe an area of overweight for me also.
Okay. Joe, I want to thank you for joining us this morning. Appreciate it very, very much.
Thanks for having me.
Meantime, as Joe and I were just speaking, a new post out from President Trump about the New York mayoral race, which we've been talking about all morning. He said, self-proclaimed New York City communist Zoran Mandami, who's running for mayor, will prove to be one of the best things to ever happen to our great Republican Party. He's going to have problems with Washington like no mayor in the history of our once great city. Remember, he needs the money from me as president in order to fulfill all of his fake communist promises. He won't be getting any of it. So what's the point of voting for him? This ideology has failed always for thousands of years. It will fail again, and that's guaranteed. President DJT issuing a warning to New Yorkers this morning. I have to tell you that I imagine that the folks who are planning to vote for Mandami look at that kind of warning, and that doesn't talk them out of voting for him. In fact, it may help persuade more folks who, are worried about what's happening in Washington. Having said that, we've talked a lot on this set before about the fact that the National Guard has emerged in all these other cities, has not come to New York. I think one of the reasons for that, and it's pure conjecture, but it may very well be because Adams was in this role and he had this sort of weird relationship, or special relationship, but unusual relationship with this president and what happens. And whether New Yorkers should be voting based on that is an interesting concept unto itself.
Well, let me just look at some of the numbers on this. In fiscal year 2025, federal funds made up about 8.3% of the city's operating budget, including nearly $1.1 billion in pandemic-related funds. The funding comes through direct grants, competitive applications, formula-based allocations supporting programs like housing choice vouchers for low-income residents. In fact, the city receives billions of dollars through programs like the HUD tenant-based rental assistance program. Over $32 billion flows to the city's healthcare providers and insurers through programs like Medicaid. Although federal spending cuts do pose risk to that, infrastructure comes from that, education. So those are areas that would be, I don't know if the president can follow through on that, go through that, because the Congress is who controls the spending.
Well, that's the other question. Would Congress stand up and say, no,
we're not
good,
going to do that?
We're not going to do that.
I can't imagine Congress would support targeting certain areas, but I don't know if the president has other means and other ways of cutting certain programs, but that's what's at risk, 8.3% of the city's budget for fiscal 2025.
Throwing a...
It's a closely watched race, we should say, beyond just the confines of New York City. All right, when we come back, we're going to get you ready for the trading day ahead. Stock futures this morning ahead of that are looking up. In fact, the Dow futures are now up by more than 200 points. Nasdaq's up by 177. S&P futures are up by 37, and Squawk Box will be right back. Welcome back, everybody. President Trump expected to meet with the top 4 congressional leaders at the White House today as D.C. prepares for a government shutdown that would begin on Wednesday, absent a deal. The president canceled a meeting with Democratic leaders last Thursday, but of course Congress was not in session then anyway. In an interview yesterday with NBC News, Trump warned of potential widespread federal layoffs if there's a shutdown, with some of those layoffs being permanent. Typically, government workers are furloughed during a shutdown. According to a document posted to the Department of Homeland Security's website, tariff collection will likely continue during a shutdown, but normally those furloughed workers are brought back as soon as you have a deal. Also, regular economic data releases from the government would be at risk, including this Friday's jobs report. Oh no, no data. At a time that's pretty crucial for the Fed.
Meantime, we got some comments from a key Fed official this morning I want to bring you. Speaking with Squawk Box Europe, Cleveland Fed President Beth Hammack saying she's still concerned about inflation. Hammack will be a Fed voting member next year. And it's an interesting point to believe that the inflation piece that she's concerned about. She said, by the way, we should also mention that one of the higher estimates of neutral when it comes to interest rates, and that of the Fed, is only a short distance away from hitting her target. So we'll see what happens there. And separately, the Fed, on the Fed topic, President Trump taking another shot at Jay Powell over the weekend. Saturday afternoon on Truth Social, the President posted this cartoon showing him firing the Fed chair. You're fired. And there is Jay Powell with a box and a plant and all of his belongings, ostensibly from his office. He posted that. He also posted did you see this AI video about it was an AI generated video of a news event where the president would have created a whole sort of new medical program for America. It seemed to get quickly taken away.
No, I did not see that. We should tell you, SEC Chair Paul Atkins is vowing to fast-track President Trump's proposal to end quarterly earnings reports. In an opinion piece in the Financial Times, Atkins writes that the government should provide the minimum effective dose of regulation needed to protect investors while allowing businesses to flourish. Atkins did not lay out any timeline for potential changes, but this is something that many business leaders have talked about wanting to focus on the long run. However, they say you can still do that with quarterly reports. So there is some back and forth on this. And by the way, breaking news on Squawk Box this morning, Electronic Arts is going private in that deal valued at $55 billion. This would be the largest leveraged buyout in Wall Street history. Comcast naming Mike Cavanaugh as co-CEO alongside Brian Roberts. Comcast, of course, is the parent company of NBC Universal, which currently owns CNBC. When Kavanaugh was announced as the president, he was the first president at Comcast not to be named Roberts, so now he's the first co-CEO not to be named Roberts. And CSX naming a new CEO. Steve Angel will succeed Joe Henricks. That change comes amid activist pressure on the company from Ancora Holdings. All right, folks, that does it for us today. Have a great Monday. We'll see you right back here tomorrow. Right now, it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures are higher, coming off a down week. Got some M&A to work with. We are on shutdown watch, not knowing if we'll get, for example, a jobs number on Friday, 10-year 415. Our roadmap begins with video game giant Electronic Arts going private in a $55 billion deal. We'll break down the details.
Plus, we are tracking multiple C-suite changes this morning. Comcast, GSK, Barrick, and CSX all announced leadership shakeups. And there is an AI wake-up call. It is from Walmart. Its CEO Doug McMillon out with a strong warning on the impact of AI when it comes to the overall workforce.
Let's begin with Electronic Arts, though, agreeing to be taken private in this $55 billion deal. David, I assume you're all over this. Got some historic levels in terms of LBO history. Right?
It's the biggest of all time. You know, we go back, 2007 was the TXU deal that I can remember well. Of course, having reported on it, KKR and TPG. Didn't work out well. Natural gas in Texas right before the fracking revolution and prices and what happened there. You go RJR Nabisco, you want to go with way back, 1989. But what's interesting here, guys, well, any number of things, of course. The stock had moved up on Friday because we're reporting that the deal was imminent, and in fact, that did prove to be the case. This is the Saudis buying EA, for all intents and purposes. This is the PIF of Saudi Arabia. It's going to be by far the largest single investor in the overall consortium. It's a $36 billion equity check, $20 billion in debt financing from JP Morgan, who I'm told was just brought in a couple of weeks ago. So they weren't part necessarily putting this deal together, which I'm told as well started back in the spring. So there have been talks since the spring. Silver Lake, obviously, the very prominent private equity firm, part of the Dell buyout, part of the Endeavor buyout, part of the TikTok USA purchase we've been reporting on lately, will be an investor. Jared Kushner's firm as well. But Kushner acting as much, if not more, also as somebody putting all the parties together and making sure it all sort of happened along the way. They are both writing checks, that is, Kushner's firm and Silver Lake. But the check from the PIF, in addition to the 9.9% that they already own of EA, is by far the largest single part of that overall $36 billion. And that's why I say, essentially, this is the Saudis taking control of EA, which will become a private company, of course. That's why they call it a go private. In the release, it can be a bit confusing. It says it'll close first quarter of fiscal year 27, but that really means second quarter of next year, 26. So that makes more sense from a timing standpoint. There's sort of what you're going to get, $210 a share. That's the premium, at least, to the unaffected share price. Also about a 17% premium, Jim, to the all-time high. 23 times the last 12 months worth of EBITDA of the company. That compares to about 19 years worth that Microsoft paid for Activision, the last very large deal we saw. They love sports in the kingdom, without a doubt, and in fact, the Crown Prince is a gamer.
Well, I would tell you this. There is a great scarcity value of large companies that know how to do this, and it is a studio business. You see Take-Two. Right now you have Grand Theft, number 6. It's just been a rocket ship. I thought that the Activision deal was a fantastic deal, okay? So I think that you get this. It's got great cash flow. The brands are unassailable, but you needed someone who understood. And I guess they really did understand.
And they have, I mean, EA is known for its sports-related titles. And as I said, there's a real focus on that. We know that, Carl. They've, with Live and with any number of other, what they've been paying for soccer and things of that nature. And this moves them into that. Not to mention the man who runs the country also, I'm told, is actively on various games as well at times. So,
but David, it could be a movie franchise too. You know, I mean, one of the things that Jensen, remember, Jensen Wong's a gamer. And when you go out there, I mean, they do a lot of stuff that makes it, could be, there's the possibilities of movies are incredible. And I've always felt it's been underestimated.
Yeah. Well, they represent studios in a sense in terms of what they create.
I mean, there's Mortal Kombat coming out.
Did you see the ads?
Yeah.
I mean, the ads for that, it's like, you know, watching it. I mean, if you watch football, there was an ad for the 17 every 30 seconds.
Right.
T-Mobile, but I saw that ad and I said, well, I want to see that movie.
So the multiple doesn't raise any eyebrows for you?
No, because I think that the company historically has been undermanaged versus what library they have. I think that there's a lot there in the locker, so to speak.
Their CEO is staying. Andrew Wilson, he's staying as CEO. Right. He will continue. I think he's fairly well regarded. Guys, you can remember it was I don't know how many years ago. It was 3-4 years ago when I was reporting on, and it was real, that our parent was trying to at least work on a deal with EA in which you would have had a reverse Morris Trust, you would have spun off NBC Universal into EA. It was complicated. Voting rights again with the Roberts family didn't happen, but it's interesting to note that was at a much far lower value, obviously.
It could have been Mortal Kombat between me and David. It could be incredible.
Wilson would have run the overall. Yeah, it was 2022 when those talks were taking
place. Look, I tell you, these are just tremendous franchises. I'm glad to see the CEO. Maybe they didn't have enough money, or maybe didn't have vision, but I take a look at what happened to Take-Two. I think you put a Take-Two stop in the last year. And this is all from the library and the franchises. You know, a sequel in this business is much better than the sequels.
Yeah, interesting to note. So, I mean, not that long ago, you had Activision out there, EA out there in terms of the big players. Both of them will no longer be a part of the public markets. There is a window here. It's not a go shop, but there is a window. I'm told is about 45 days, or is 45 days. Under which, if they were to receive another proposal, you wouldn't see any break fees or anything along those lines. That's not anticipated. I mean, again, would Microsoft want to get even bigger?
No, I think there is some degree of antitrust,
Would
right?
Apple ever, they don't do anything. And then...
Oh, don't say that. They said they were open to doing a deal. Tim Cook said that to me.
Okay, then I
Don't
won't
be so dismissive.
I won't be dismissive.
Mortal Kombat.
Seems unlikely that they would do that. And then I don't even know other names. Disney is not going to happen. So it doesn't appear
Time
likely.
Warner, remember when we were struck by they had this great gaming franchise? Time Warner.
Yeah.
But the Great American had that franchise. But I do think that there's just few and far between. And you can just do iteration after iteration, and they're absolutely. I mean, remember Jeff Bewkes? I was saying this is the greatest business in the world. He dismissed me because he was a dismisser, but he did it in a way that was brusque and not kind, and I liked it anyway.
We'll see what the Saudis choose to continue to pursue from here. I mean, it does point back
Can we
to
talk about the Saudis?
diversification taking place in their overall economy in terms of what they're doing from the money that obviously comes to the oil business.
Is the Saudis get involved? They have unlimited firepower. Are they looking at other things, you think?
Yeah, of course. I think they're looking at things all the time. Now, that said, is it really unlimited? I don't know if that's the case,
Right.
but...
How about Jamie Dimon
it's
having
very large.
Jamie Dimon's had a one phone call relationship because this is huge.
No, my understanding, as I said, is J.P. Morgan got the call only a couple of weeks ago to come in and be the financier. I would note, there's a lot of people who study these press releases. When it comes to the consortium and their advisors, it's all law firms. And then J.P. Morgan's at the bottom. They're a financial source. They were not involved, I'm told, in actually
Kirkland and Ellis.
transactions.
Good call, dude.
Yeah, so it's all law firms. Goldman Sachs, obviously, on the other side.
Right.
The fee coming their way, one would anticipate.
I hope so.
Again,
Carol Trust owns it.
Carlwood is the largest leverage buyout of all time. Now, the track record for the ones previously, not particularly good.
Well, it's in third one's a charm.
RJR Nabisco.
RJR Nabisco, that was not so good.
Yeah.
But the TXU was really unbelievable.
Now, Silver Lake, obviously, Dell, they usually buy these things at a good price, so much so that they get sued, or certainly there's appraisal rights.
That's great.
Red Endeavor, there's a big appraisal rights case that'll be a while there, where people say, hey, you got it too low. So, maybe this will be the third time is the charm for the largest LBOs.
Media is definitely in focus. Some of the studios this morning are active on this presidential tweet. Our movie-making business has been stolen from the U.S. of America by other countries. I will be imposing, we've been through this before, 100% tariff on any and all movies that are made outside the United States.
Wow.
We'll see.
Okay.
We've talked about how that would even be done.
We don't understand it because is it
Because they're in foreign languages.
Represents a movie. Is it something that goes to the box office? So if Netflix does a movie, but it's only on Netflix, is that a movie?
Great question.
What about shows? Which are much more, I would assume at this point, part of the overall content budget, so to speak.
But
Does it
Netflix
include all the shows?
Netflix has so many movies that are made overseas.
Yeah, well,
that's the whole point.
Yeah,
I know.
UK has become a huge place.
Right. Oh my God, all those.
Yeah.
All the British.
So,
oh my God.
I don't.
Hostage. How about Contratake?
We don't know what it's mean. We didn't know the first time when we put this out, and now we don't know.
And that comes, of course, on top of bathroom vanities and kitchen counters and things that
Yeah, I was trying to say that was tough because a lot of those companies do import, but Ethan Allen is largely here, but a lot of the other guys bring stuff in. It's fun because you wake up and there's a new one. You say, wow, my tie is red. I have no red ties. The other, Hermes, dead. Just say
more expensive.
We'll get to how that's tying into Fed speak today. Hammock with some cautionary lines about the impact of tariffs.
But Cleveland made the playoffs, right?
When we come back, Walmart CEO, as David said, with an eye-opening message on AI when it comes to jobs. Take a look at the pre-market. We'll get to a bunch of other movers, including Oxy and Peloton and Tesla this week.
CSX. Oh my God, Joe, say it ain't so.
Stay with us.
Okay. Such a pretty world today. We have a double top on the /ES. I wonder if I got time to cook me an egg or two. Give it a shot. Hope everybody had a good weekend. Oh, that's cute. Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Not being in tomorrow or yesterday, but being in the now. Nicole looks hot today. It'd be hard for her not to look hot. Oh, she's at it today. I gotta see what she got to say.
picture that seems to be freaking everybody out. The 50,000 would be somewhat of a break even for jobs. Less than that would show more weakness in the labor market. And as you noted, what a big disparity we have in estimates.
That's because we don't get all the numbers, honey.
I also agree with
you can't trust them.
Last time,
can everybody hear me okay?
And the Dems moved forward. They didn't want it, they sort of moved forward. Now they want to maybe say it's a Republican shutdown. It's becoming.
How do I sound today? I've moved my mic a little bit. I'd like to know. Somebody please make an effort in the room and tell me how I sound today, please. Somebody. Crisp and clear, that's what I want to hear. Has anybody had a beer? That's the cheer. No fear. Jesse says it sounds good. And I got 9 minutes. I think I can cook an egg. We're going to find out. I feel like I need something in my tummy. Oh shit, I'm out of butter. I sound happy. Had a funny thing happen to me this weekend. Somebody got their mic on. Sheba. There you go. I went to church Sunday, and there's this girl that all of a sudden showed up at church that I used to kind of see about 10 years ago. So she'd been trying to connect a little bit with me, and she hasn't gotten to church lately. So I get this big old long message from this girl that says, "I hear you've been cheating on me." I said, "What?" And I'm sitting in the front row, you know, and I got this 85-year-old woman sitting next to me in the chair, and there's a chair between us. And one of her friends up there saw this, and Jim brought another woman in there into church. I'm going, "What?" I said, "I ain't," and she sends me this message, "I ain't gonna see anybody that goes just to church just to see women and try to pick up on women." I'm going, "What?" I said, "Are you crazy?" I said, "Yeah, I mean, you know, some girl wants to hang out with me, but sit next to me or talk or chit chat, it's going to happen. I can't help myself. If I sat next to a guy, would you, oh my God, he's gay." And I just thought it was kind of already showing signs of jealousy, right? We ain't even got nothing going on yet. I'll be right back. I figure we probably have a pullback here at open. We'll find out. We got less than a minute. Make sure my platform's up. Shit. Got my eggs done. I don't mess around. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. Oh, there's the pullback. I got support off this blue line. Let's see where that comes from. Come on. Don't be pulling that crap on me today. Yeah, that's a yin yang, and we got the 200. And I said first support off the 200 SMA on the 5 minute. So I'm going to put a price line right there. And I'm going to tell you which call I'm going to be looking at right at open. Oh. My ding-a-ling just went off, and I didn't have the mic on. That's /ES. Shit. Okay, yeah, this is a solid support. Today's open. Where's my... We're kind of at a support right here.
And healthcare. We've talked about, obviously, the jobs picture.
Don't worry about the job picture, Nicole. Please. You can't trust the numbers, honey. The 665s and the SPY, those are the ones we're going to watch, or I am. Let's see if we get a little pullback. We got some gaps on the red candles. Intel down. Ooh, Intel had that big breakout last Friday or last week. Okay, watch the SPY here, 79 cents. $77. It's retesting right now. Okay, got a double bottom right here off this big engulfing candle. Yeah, I needed that egg. It helped my tummy. Don't be scared, Randy. Okay, here's your double bottom. We're going to find out if we're bullish right here. 3 black floors. 63 cents. Hickory dickory dock. The mouse ran up the clock. Don't be scared. Oh, shit. Always clean as Jim. Yeah, very good. Yeah, yeah. I don't know. Did I already pay this month? This month, because I can't find my invoice. Well, I didn't look at my receipts either. And I got a letter from the IRS. I don't know what it was kind of about. Yeah. Yeah. Now, I also got my monthly done to bring in. I might just bring it up to you. I'm looking through my invoices to see if I paid, because usually you get an invoice where I couldn't find it. Oh, it's still open? Okay, let's go ahead and pay that. Get my wallet. Business name is my name, yeah. It's under James E. Howard. When you get the bathroom, right on the floor. Okay, 4412 7600 0130 1903. Yes. Yeah. Yeah, send me a receipt and I'll send you this form. It says, I didn't quite understand it. Taxpayer identification number, and it says Form 941. This was tax period of December 31st of 2024. And it says we received one of the following items from your authorized third party on September 10th. I don't think I authorized anybody but you. Yeah. So I should call them up and find out? No, okay. I'll come in up there around noon. Yeah. What time do you go to lunch? Yeah. Yeah. Okay. Thank you. Yeah. Okay. Yep, that's fine. Yep. Sounds good. Yes, sir. Bye. Where's that? Okay, where'd you go? 50 cents. I about had another 10 right there. That 50, missed it. Back to even. Damn it. Pisses me off. There's 72. We got a double top. That is something different about the IRS since Biden went into the White House. It's like they weaponized it. They got a bunch of rookies up there too. I had the same kind of issues during the Obama years too, so I don't know. There's $0.72. I want to see if I get break a double top or get to the double top. I just got 10 of these at 63. I should have got 20. I should have 20 by getting them at 50, but come on. There's 75. So I'm going to get out of here and take a profit. 75 cents. 76. I mean, right now you got, okay, there we go. There we go. 77. I don't mess around. My name's Washboardjim. I'm the founder of the 60 Snake Trading Strategy, where I bought the dip and sold at the rip. A plus. Give it to me, baby. Told you not to be scared, Randy. Today's mascot. This is today's mascot. Don't he look cute? Woo! Double top. So I tried to buy the dip. I couldn't buy the dip. That would have been nice, because that would have been 50 cents. I would have made 300 bucks on that trade. 350, three a little more than that. But 400 at least. If I could have got that other 10 at 50 cents. But the exit idea is a double top. Now it can consolidate if it wants to be bullish. It'll break out here. If not, we'll come back down and do a 1-2 free bits. Bug says we're going to 66474. Looks like we hit it. Looks like we hit it. Oh, you got a piece of cheese on the side of my face. Man, I had these like 4 or 5 little bumps on my neck last night. Now, what the heck did these come from? Oh, I still got some cheese on there. I hope it's cheese because I just ate it. Yeah, these like little... They're not there now. I thought there was some kind of zit. But there were 3 or 4 of them. I'm going, Nicole, did I ever tell you how hot you were? It's you that makes me a great trader. Oh, we got a new Asian chick here who likes to do the dan dance, square dance. I have to follow her. She's a new one. She's only got 13,000 followers. Oh. But that had 770,000 views. So I was saying double top gives you an exit idea. Then if we gain respect and break out, we could hit a head and shoulders up here. Show us where the head and shoulders is, Jim. I will. I'll do it right now. Take your trend line. I used a price line one time for a trend line. This guy says, well, that ain't a trend line. That's a price line. I said, shut up. Before I whip your ass.
Don't miss our biggest
triple top. We could have a breakout here. We got an inverse head and shoulders and a head and shoulders. So this is your head and shoulders. This is your inverse. Show us what an inverse head and shoulders is, Jim. I will. Now, if this comes down and... Oh, get ready. Get ready. Oh, where's my thing? Please find it. I can't find it. There it is. The 665s at 62 cents. 61. There we go. It's time to see how much we got here. 61 cents. This is my second scalp of the day. We'll see if we have the breakout off this. The crowd's going wild at the sports arena. Come on, Jimmy. You can do it. We're counting on you. We're counting on you. You can do it. 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 Oh yeah. 65 cents. You can do it. 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 73 cents. The way you trade, Jim, is how does he do it? If you can count to 4, you might make a little bit more. Okay, let's do it. Breakout. What we have here is an ascending triangle with a 1, 2, 3 orbits. Will you draw it out for us, Jimmy? I will. Unum, tubits, fribus, forbus. Uno, dos, tres, cuatros. Now, if you're scared, go ahead and sell it while you're up. But this is number 4, and I want to make a little bit more. I'm up $100. What should I do? Should I make a business decision? You can do it, Jimmy. We're all counting on it. 71 cents, I could make a business decision. Psst. Hey, this is Brandon. My son's watching you right now, and he's got a big line of cocaine in front of him. He wants to know if you can come over. 77 cents. I'm not scared. Come on. God darn it. Hippie-I-A, hippie-I-O. We're at a 1-2 freebies. Give it just a little bit more time. I'm going to go make my tea. And the buys are coming in, but just kind of no. To the right shoulder. She didn't hit the right shoulder one more time. Okay. You're not doing what I want you to do. You're at the right shoulder. You got to stay right here. $0.50. Now let's go back up. It's happened to us before. We've held the shoulder right so far. Let's go. Let's break it. I'm going to step into the kitchen. The state of the housing market. They're throwing the fear out there this morning. Come on. Uh-oh. Uh-oh. 64 cents. I'm up $200. What should I do, Jim? Are we going to break out, Jim? What would you do, Randy? Would you sell it? Please. God darn it, what's going on here? Calm down. 74 cents. Uh-oh. Uh-oh. 77. Okay. Thank you very much, Lord, for you've done it again. You know, I tried to tell my grandma that you were too young for her, but she insists on wanting to ask her out for a dinner date. You know what I'm saying? Tell your grandma I'll give her a call tonight. Good morning, Hamster. Hamster says hold. Oh my gosh. Woo. How does he do it? All out. All out. Hickory dickory dock, the mouse ran up the clock. Yeah. So what we have is a Head and Shoulders and an inverse Head and Shoulders. And I'm going to type them in right here. I'm going to type them in right here. I'm going to type them in right here. I'm not scared. Inverse Head and Shoulders, right shoulder. Jimmy said we'd pull back and hit that right shoulder. We did. And a Head and Shoulders. I'm going to type that in right here. A question was asked, Jim, have you ever thought about seeing psychiatrical help? Because since you quit smoking pot, you've been acting a little strange. Look at that, sending triangle. Sending triangle on SPX. Now we're pulling back to what was resistance, now becomes support. Good job, hamster. Can you hear me on YouTube, YouTubers? Make sure you hit that like and type in, how does he do it? This song was wrote by Zach Morris.
There's a dude down the street with his old washboard. Washboardjim, he got a sneaky snake. Goes boom, 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 goes boom, 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 boom,
boom, boom, boom, boom, boom.
Sneaky snake.
Boom, 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 boom.
Boom, 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 sneaky snake.
that's all, folks. So right now I'm up almost $550. $600, and I'm not sure what to do. Yeah, man. Let's check out. We had a breakout on AMD. We had a breakout on NVIDIA. Apple's kind of stuttering down here at the bottom. Now they're pumping up Disney. And you know how I feel about Disney. You know, I'll repeat myself. Bob Iger. Disney sucks. But I can't let my bias interfere with my trading strategy. We did break resistance. And it hit my support for a good idea of interest. But they are pumping this stuff right now. Many of the fat cats are stuck in this trade. Now we got a bear flag on IWM. That's called a bear flag. Do you understand? Oh, you're so arrogant. I've been watching this judge. He tells somebody something. He says, "Do you understand? Do you understand?" If you don't, I'm going to give you 5 years. Oracle. Man, I was wrong about this one. Big time. I thought I had the bounce. AVGO. AVGO's had a good sell-off, but I don't know if it's good enough. Do you understand? Mr. bounced up off support, off of Head and Shoulders, with a double dip. And we're at the first resistance of $320.67. Open is pulled back, retesting. Open. It's on my watch list. Well, I'd love to see 7 again. 7 1/4, 750. Oh, my tea's been sitting. Oh, shit. Wonder what this is going to taste like. We're going to find out. And then I'm going to come back and make another trade. I'm not too overzealous right now, but we did pull back to a support here for the 3rd time on the Head and Shoulders with a hammer. Jim, should I trade it? Are you scared? Kinda. They're at 54 cents, the 665s. That guy's a nut. Brian Washboardjim. This will be my last lotto tray. Lotto tray. No, lotto tray. Got a sneaky snake strategy here. Some spelling going on. We're at 64 cents. Right now I'm up $100. Oh my gosh, 130. Do you understand why I took the trade? Say yes. Because it's a hammer. And support is the shoulder line of the inverse head and shoulders. Now I could go ahead and get out right here. We're getting to 200. So make a business decision right now. Thank you very much. Out at 71 cents. Just like that. Within 3 minutes, I got out of the trade. Debbie likes that song. How does he do it? How does he do it? He takes it straight through, hammer, 3 white soldiers with no black soldiers in that mess. There's the 3 black ones right there. 3 black crows. Bounce, pull back, triple bottom, boom, to the 200 SMA. That's how he does it. Oh, Gorgeous is up.
For consumers in Europe, and growth overall in Europe is expected to pick up into the year end and next year. And so the ECB is likely at or near the end of its rate cutting cycle. Of the preliminary PMIs last week,
I love you.
The Eurozone composite PMI was the only economy to strengthen. Tonight we'll get the
I love
PMIs
you.
from China. Both manufacturing and services are expected to show.
I love you. Do you mind if I come over and be your chartist artist, honey? I promise I'll be real nice.
Last week, which showed a 20% increase year over year. There's some hope that the anti-involution measures will reduce excess capacity that could help not only Chinese corporate profits, but also give relief to related companies globally, but it's really still too soon to tell. The gain in August profits was narrowly focused on a couple of industries, and 1 month is not a trend, but we'll be paying close attention to that.
I love you.
Okay, yeah, there certainly seems to be some imbalances in that profitability over at those firms in China. So important to highlight ahead of that important data print and also their big holiday, particularly given there's so much focus on Alibaba and the AI tech story at the moment. I'll get to that in a minute. Kathy, I just want to get back to you. Obviously, the jobs data is going to be the next big test. But, you know, what are you and your team expecting as far as, you know, what this is going to mean for the Fed? And also as far as, you know, what the markets are pricing in right now for the rest of the year with respect to, as you pointed out, you know, some of the concerns on the longer end of the yield about the fiscal situation.
I'll be right back.
Inflation expectations.
This team might not be that good.
The labor market data obviously really important because that was the basis on which the Fed cut rates last time. So really important to see if we can see continued softness or even more weakening in the labor market. I think that would cement the idea that we get a second rate cut between now and the end of the year. I'm not convinced we'll get 3.
Make a copy of this letter so I can have it.
More sticky, and it's not just tariffs, which the Fed says they'd like to look through, but we're seeing underlying inflation continue to be fairly buoyant on top of the tariff situation. So I think the market has kind of evened out here. We're back to pre-FOMC levels in most of the market. And we're looking for continued steepening of the yield curve. So expectations for the Fed, the cut are still there, but the long end is going to be influenced by inflation expectations, and increasingly fiscal irresponsibility that is creeping into the long end of the market.
Okay, certainly one to keep an eye on. And just back to you and this whole China conversation. Obviously, we've got Alibaba, Huawei, DeepSeek all back in the headlines this morning as part of this whole re-acceleration, or actually acceleration in self-sufficiency campaign. Michelle, how should a U.S. investor be watching this, particularly because you and I have spoken before about how, you know, these types of stocks like Baba do look inexpensive, relatively speaking.
Yeah, there's an AI arms race between the U.S. and China, and it's boosting capex and stock prices both here and in China. And I think that, you know, some investors are looking at those Chinese stocks and saying, hey, maybe I'll take a look at those. They seem less expensive than the U.S.-related names. But there might be good reasons for that, so there might be, you know, maybe a little bit of caution. AI names in China are generally growing at a slower pace, and they have lower profit margins. And they also have the possibility for more regulation, and they're at an earlier stage of development, and that could also mean the potential for more competition like we've seen in other Chinese industries. So, you know, the Chinese stock market tends to be pretty volatile. It tends to have a bear market almost every year, and so, you know, investors looking at participating in these stocks may want to keep their positions small and be willing to stomach volatility.
Okay, note taken. Thank you so much for that. So Kathy Jones, Chief of Income Strategist at Schwab Center for Financial Research, and Michelle Gibley, Director of International Research at Charles Schwab. Thank you, ladies, for your time. Coming up, it is time for the morning trade, and we will take a closer look at Novo Nordisk after a downgrade over at Morgan Stanley in the trade line.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online
that was
videos,
kind of sloppy.
webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock
I still think she says Titellini.
The setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. Let's focus on Novo Nordisk. The stock was downgraded today at Morgan Stanley. More on that coming up in a bit. The weight loss drug trade has lost some luster. Check out this comparison chart of Novo Nordisk and Eli Lilly over the past year. Both
Okay.
in the last 12 months. Novo down more than 35% during that time frame.
How come SPY instead of the SPX? Well, I didn't want to take, just in case it went bad, I didn't want to lose as much money as I did. And I still did well with the SPY. There's no major difference. I just didn't want to, just in case it didn't work. The loss is bigger on the SPX. That's the only difference. Did you get that? Say yes. He said yes. So I had a question asked to me in the room, YouTubers, why did I trade the SPY instead of the SPX? My only logical answer that I could come up with is that if it didn't work, the loss would have been a lot less than if I traded the SPX. But it worked, so that means the gains could have been bigger. Marley, Jesus, won't you call in sick for a day? Please. Oh, God. I think what gets me about her is definitely the voice. And she really carries herself real strong, which I don't, strong women are great. The things I like about her is she has great breasts.
Makes a lot of sense. I think there's some great value in the near term. And I think that, if they actually surprise Wall Street in terms of data points, that we could actually see a lot of demand coming in. So they got a lot of support layered in from 53 down to $50, but I want to make sure I have a little bit of downside protection. So I want to buy a little bit of time as well. I like the October 24th, November 7th call diagonal. I'd be shorting the 62 strike on the October 24th and going long the November 57 strike. I feel that you could get this appropriately priced around 260 for the spread. Now, I wouldn't take on much risk. I want to let it zero out. I probably only risk
That's another good reason.
because that means it's breaking down pretty hard through that $50 price range. And, again, it might be a little touch and go to the upside. I'd probably be looking to take some off at around 50% gains. And then try to work the rest at around 80%.
Today I'm going to go and see my accountant.
If it actually gathers a little bit of steam,
I got to drop him off my
66. Now, that's very optimistic, but
monthly
that's kind of why it's touch and go.
check stubs
Depending on how obviously Wall Street digests
and
the news and trades the stock, but
figure out what this letter from the IRS means.
this valuation, this time of the year with the market performance, I'm looking for more rebounds than continuations to the downside.
Okay, a good look at Novo Nordisk is on the decline today to the tune of 1%. Charles, just getting your overall thoughts on the market today as we kick things off on what's going to be a pretty important, crucial week on the jobs data front. How are you looking at the positioning of the market this morning? How would you characterize trade?
Well, it just seems like the markets are also a little concerned about the government shutdown that could possibly happen as well. There's just a lot of things that I've seen that has been irrational or irregular, so to speak. A lot of the strongest performers over the last month came cratering down last week. A lot of profit taking was being initiated, especially in the Mag 7 names. They've had some struggles to gain some traction to the upside as well. So
no, they
it
haven't.
looks like the market's in a bit of a wait and see pattern. I think the more positive data that kind of help influences Fed policy towards the rate cuts that's being projected will only kind of put risk on, but it may be.
I mean, who is this guy? They haven't struggled a bit. This is called a Darvis box, so all it's doing is consolidating. The word struggle would be if it was below that, my opinion. I debate if I want to eat soup, but I did have 2 eggs with some cheese and some crackers, so I think that could do me until supper. I gotta buy me a new pair of boots. I can't believe I looked at my boots. Let me show you a picture of these boots. I couldn't believe it. When I looked at them, I said, what? I've had these boots for 20 years. I couldn't believe what I saw. I think they need to be replaced. These are my winter boots that I use around here in Missouri. So they've gone through 20 winters, a bunch of lawn mowing. I don't want to get snake bit when I'm out there, so I put on these boots. They're steel toe. I've had them, but look at how they're just flaking off. As I looked at them, I said, what? How in the hell? How does that happen? You know?
leadership is back in focus after a little bit of a wobbly old week last week. As you mentioned, a bit of dispersion across the sectors when you look under the hood. Energy down lower after really outperforming last week. Just break us down what you think of what we're seeing as far as the performance today across those sectors.
Yeah, sectors today, you're seeing some of the most important ones, as we mentioned. Magnificent Seven oftentimes housed within these. IT, consumer, or communication services, rather, both higher on the session. Consumer discretionary is also higher despite being down over the last week. So really kind of a different type of a session than what we've seen over the last week. If you were to look at the performance over the last 5 sessions, what you would see is that energy has led the way. Well, it's the weakest today. And the worst performing sectors are consumer discretionary and communication services over the last 5 trading days, but they're both higher on today's session. So as you mentioned, a bounce back day. You mentioned dispersion. I mentioned dispersion. Well, we're lucky that our partners at CBOE actually put out a dispersion index. It's DSPX. Those who have watched the network have heard me talk about this before. But as this starts to go up, Sam, what you're really seeing is under the surface, movements starting to outpace the index volatility. So volatility of the average stock is going up at a faster rate than the actual VIX is going up.
You got a problem with that?
Something I look at, and it could be indicative of a situation where if we do get negative surprise, you could have an outsized down move here shortly.
Interesting.
Alex.
And good to put it in context there, particularly as to what is happening beneath the surface. Thank you so much.
Using them big words, indicative.
Appreciate your time. Let's widen our scope and take a look at global markets in case you missed it.
I wish you wouldn't bring sex into it.
Overnight in Asian markets, we had the Nikkei 225, which was down 0.7. The Hang Seng Index outperformed, no doubt thanks to some of the tech-heavy names. We'll get to that story in a minute, up almost 2%. And Straits Times over in Singapore, flat as a pancake to close out the first session of the trading week. Alibaba, as I said, moving higher this morning as analysts turn more
Alibaba.
Jeffrey is boosting its price target to $230 from $178 and keeping a buy rating on the shares. The analysts saying that they're turning more positive on Baba's cloud business. Now, Morgan Stanley is also encouraged by the outlook for the cloud segment, upping its price target on Baba to $200. Morningstar, meanwhile, raising the fair value by 49%, saying the shares appear undervalued as the company increases investment in data centers and improved performance of its chips also supports that cloud growth. The stock has jumped 4% in Hong Kong overnight and is now heading for its best month since it listed back there in 2019 as investors really double down on their bets now on its AI growth. Meanwhile, Bloomberg now reporting that Huawei is planning to double output of its most
YCBD
next year, aiming to win over more customers. Its current chips aren't as powerful as Nvidia's, but it is working on a next-gen Ascend chip that could perform well enough to train the algorithms, not just operate them. And meantime, DeepSeek has released an experimental version of its latest model, V3.2, which it says is more efficient than previous LLMs. All very important headlines. Coming up, it's time for Inside Out, and we'll take a closer look at Carnival's earnings and bring you in.
What kind of news did it have? Price upgrade? Earnings?
Hey, investors, you know the market moves. And Schwab is here to help
Don't
you.
see any news.
So, whether you're buying, selling,
Just
holding,
an upgrade.
whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our Investor Webcast series breaks down different investing styles, including growth, value, income, and more.
Well, heck.
You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
SPX double top. SPX double top.
We're back on a Morning Trade Live. Carnival is trading lower this morning after beating third quarter earnings estimates on the top and bottom lines and noting strong cruise demand for 2026. Adjusted EPS coming in at $1.43 for the quarter, with revenue topping $8 billion. Carnival CEO saying booking trends have continued to strengthen since May, with booking volumes continuing to grow. Let's take a look at some of these cruise line stocks right now. And as I said, Carnival lower off the back of these earnings despite a beat there. We'll unpack that in a little while. Royal Caribbean also lower, as well as Norwegian Cruise Line. Viking is the only outperformer on the day. Let's go inside out now on Carnival and the rest of the cruise lines. Joining us now, very pleased to say, is Pete Nadara, co-owner Market Rebellion. Thank you so much for joining me, Pete. So what were your takeaways from what we got from Carnival today? I mean, it seems like smooth sailing, but not so much for the stock today.
Well, I'll tell you why. I think it's because of the fact that it's performed so well. If you look over the last couple of years, obviously going back to the pandemic itself, but even if you just look at the year to date, it's up 23%. It's up 64% over the last year. So this is a stock that needed to have something big, and they did. They beat on the earnings, they beat on the revenue, they forecast a beat as well. So all of that is sort of packaged together. Now you ask, well, why isn't the stock up a little bit higher? Why isn't it up a couple of percent? It did start up there. It hit 32. It started to pull back a little bit. And I think part of the reason because of that is they're worried about shutdowns. They're worried about tariffs. They're worried about all kinds of things. They're not worried about their own demand, but there is the outside part of this that really could sort of maybe hold back Carnival to some degree, and I think that's what the concern is right now.
And a to-do list that doesn't quit.
Okay, yes, so suppose you're talking about the consumer and whether they sort of pull back on some of the discretionary spending. But for now, I mean, things look pretty good. And,
What's that?
Listen to the cruise lines versus the airlines. I mean, people
What's going on here?
so far in advance to really secure their holidays, next year, the year after, which no doubt they're benefiting from. Talk to us about the sort of, where it sits in the grand scheme of things. It's underperformed Royal Caribbean, but outperformed Norwegian. What's it doing?
The positive for them is just the fact that there is that demand, and they have all these specialty things that they're adding to what people can do in terms of how do they get onto the boat and then get to the next destination. And that's what people are very excited to do, and people are willing to spend that money. I think the spend side of things has been surprising to a lot of us. Is just how much people are willing to go out, whether it's out into the future or not, but they want to be able to have that experience, and people are willing to pay for it right now. You do have to wonder. You look at credit card debt, you look at all these other things. Are people just putting more and more on there? Probably yes is the answer, but they're willing to take that risk right now, and I think that's obviously something that's very good for Carnival. It's good for the entire industry. And the one other issue is they've got huge amounts of debt, of course. That is what this whole business has in terms of the build-outs. But they're excited about building out even more. And so because of that, I think you've got to be pretty positive on this one. It only trades at a PE of about 13 or 14. So when you're looking for something that makes a lot of money, but at the same time trades at a level where it is right now, I think this is probably a great opportunity.
Okay. Look, you mentioned some of the other sort of news that investors are watching right now, which no doubt feeds into the health of the consumer, which impacts companies like these. I'm just wondering what your overall sort of takeaway is right now with respect to, the jobs picture. Obviously, we're going to be getting a lot of data this week, what the government shutdown is going to mean also for the markets too. And then, this whole sort of wait and see on tariffs and the Fed.
Yeah, that certainly is the focus. There's absolutely no doubt about that. But it's the focus. But what I like, and I heard Alex talking about this a little bit before me, but I think that the key to this whole thing within the market is we have had this total move from one to the next. And what do I mean by that? The rotation. It goes from technology, it goes to materials, it goes to, all kinds of different parts of the market, whether it's energy or financials, but this rotation has been very, very healthy. It's not just one part of the market, one sector that's moving the market. People a lot of the time will point to technology, and certainly that's been great. But we've also had great moves out of the financials, great moves out of energy. Across the board, we are seeing this rotation. I love seeing what we're seeing right now. We do have a very, very tight range in terms of the volatility index right now, trading somewhere between, call it 15 and 16, and not too much higher. Every once in a while it does. It fades right back down, gets a little bit lower, and starts to move back up. So we're sort of stuck right there right now. I think that's something that's become more and more interesting. By the way, the volatility index itself, we've seen some monstrous buying of upside calls in the VIX going out to November and going out to December. So when I see that, it tells me that there's at least a little bit of nervousness out there that maybe we could get a spike. Now, the calls that they're buying, they bought 60,000. It's a call spread, a $9 call spread. They only paid $2.50 for it. It was November 16s against the November 25s, but they're going out to November. So do they think it's going to happen right now? If they did, they'd be a lot closer, but that's not what they're looking at. They're looking at some point between now and maybe November, maybe it's December, that we might see a little bit of a pickup in that volatility index.
Okay, but for now, I mean, September has very much defied the sort of seasonal weakness. Wonder what October will bring. Pete, always a pleasure. Thank you so much for joining us here, getting us across Carnival, and also your thoughts on the overall market today. Pete Najarin, co-owner of Market Rebellion. Let's trade Carnival now with Tom of the Fast Market. Happy Monday, Tom. Nice to see you there. What's your example trade for this one?
Yeah, you've got maybe an opportunity here with the pullback. I mean, the stock traded 32.5 earlier today. It was up on the day, now we're down nearly 4%. So giving you some opportunities. So I looked at this as maybe give myself some duration for this thing to maybe correct and go back up to those levels, go out in duration a little bit. So I looked at a strategy that takes advantage of the lower implied volatility after the earnings came out. We usually see that vol crush, and we have seen that. So provide some opportunities. So I looked at basically a stock replacement type strategy, using the option market, not leveraging as much capital for a bullish trade. So went out to the December monthly cycle. So you got a few months until expiration on this one. We're going to buy an in-the-money call. It's got the higher delta. It's got a delta of above 65 or so and close to 70. So it's going to react more like the stock. And I looked at buying the December monthly, the 28 strike call. You're going to pay a debit of roughly about $3.60. It's probably trading closer to $3 right now. But the debit you pay is going to be your risk on it. Now, if you bought 100 shares of Carnival Cruise Lines here, it's going to cost you $2,900 in capital, right? You have to outlay for that 100 shares. Now, you can buy an in-the-money call, such as this December one, and your debit's going to be the risk. The debit you pay is going to be your risk on this trade. So I'm risking only about $360. Takes my break even up to 32.50 or 31.60. Excuse me, 31.60. That's only about 6.5% above the current share price. So that debit, you add it to the strike, that gets you your break even. You want it to go higher than that. But I think the key here is low volatility. It means the call costs less, and then also you've given yourself duration.
Okay, good look at Carnival on the back foot, down 4% despite that beat on the top and bottom line there. Good to point out. Obviously, one that we're also seeing lower in trade today is Royal Caribbean. But if you look over the last 12 months, up over 80%. Talk to us about that one as far as an example trade, Tom.
Yeah, this one is definitely the high end of the cruise lines and has the best balance sheet. So I looked at a strategy that avoids earnings. It got earnings at the end of October, so I went out to the October 17th monthly options. And what we're going to do is we're going to buy an unbalanced put butterfly, but we're actually going to collect a credit on it. So in the October 17th, we're going to buy one of the 325 strike puts. It's basically at the money. Sell two of the 320 strike puts, and then to wrap it all up and make it risk defined, buy one of the 295 strike puts. You're going to collect a credit of roughly, I've got $4 credit on here. You're probably collecting closer to $5 credit. But the credit you collect, if it stays above 325, that's the credit you collect is what you can make on this. Now, you get that little kicker down there right at that short 320 strike. So even if it pulls back, that's where you get that max profitability. Break even where you do not want it to go, You do not want the stock to go below 311, which is the break even if you collect that $4 credit on this one. That's about 4% below the current share price. So you get that cushion to the downside, but you got a lot of risk if the stock does fall out of bed.
Okay, good to highlight Royal Caribbean there. All the cruise lines seem to be down, all but Viking today, actually, off the back of those earnings from Carnival. Strong growth and demand, but not feeling it today. Thank you for joining us today on the Morning Trade Live. I'm Sam Vardas. Download the Schwab Network app, available in the Apple App Store. Marley coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage
Had a little
account,
pullback
you can have
here.
Checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank.
Get more.
Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
I will have some soup before I go.
The New York Stock Exchange,
So I'm gonna go make it now.
Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Good morning. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Coming up in today's show, here's what we have for you on our 360 Spotlight. We'll be talking all things electronic arts after the company announced its plans to go
Please
private.
don't talk about
It deals
nothing.
valued at $55 billion or $210 a share. Western Digital is our disruptor today after it's rallied to new all-time highs following a couple of bullish analyst calls. And then in our 360 round, we'll talk Carnival Cruise Lines. Shares are lower this morning after posting both a top and bottom line beat. Before we get to all of that, though, let's check in with the markets as we begin our trading day. Let's see where things are as we are about an hour and a half into the day. Looking pretty mixed across the board. As for the NASDAQ 100, up 0.8%, 24,794. The Dow just under the unchanged line, down less than 0.1% right now at 46,216, and the Russell 2000 at 2434. Unchanged right now. That is a typo there. Now, as we take a look at some of our futures products here, the 10-year yield at 4.14 right now, down about 1% right now. The dollar trading down 0.2 at 97.61. As for gold, up on the day, already up 1 1/3% at 38.50, 840. Crude oil trading down 3%, 63.62 a barrel. And Bitcoin finally starting some recovery after those prices below 110,000 we saw last week, up 4 3/4% right now at 114,975. Now, we do want to get to some of our top movers today, talk about some stories that are moving the markets this morning. So I'd like to bring in Alex Coffey, our senior equities contributor. Now, Alex, we're seeing the defense stocks on a rise this morning on some reports of increased missile production.
Yeah, Journal published an article that came out this morning citing people familiar with conversations that are happening primarily between the Pentagon and top defense manufacturers. So when it comes to munitions, think primarily RTX as well as Lockheed Martin. So RTX and LMT, of which those are the ones doing quite nicely today relative to some of their peers. But some of the things talked about in this article, Marley, is the Pentagon's concern with low stockpiles and really wanting to ramp up production to bolster those stockpiles back up for some of those key munitions that are needed. Notably, the Patriot system, which Lockheed, of course, makes, but has also struggled to keep up with the pace of the demand worldwide for a while. So we have a situation where there's a demand now for increased production, according to those familiar with the matter. This is really dating back to, earlier this year. There's been conversations and formalized meetings really since June that are discussed. But then it's also, there needs to be the money behind it, because as we know, there's not just some, missiles.com or munitions.com where you can purchase some of these things. They need to do these by contract. It takes a long time to actually get these things both built and through QA. So first step, not surprised to see the names higher. You want to see the money behind it after, though, if you're really an investor in these names.
And we're seeing a big pickup. Lockheed's up almost 2%, Raytheon up more than 1% right now. Several of the other defense stocks on this news. Now, this is a follow-up to an earlier meeting in June, where we did see some reaction from some of these defense companies in terms of looking to potentially increase production. But realistically, you mentioned, and I shudder at the idea of there being any sort of like missiles.com. But how long does the process itself potentially take? Like, how expedited can the stockpiling actually be?
Yeah, this is where, depending on who you ask, you're going to get different answers, right? But because there's QA involved, and obviously these are, tough things to actually make, there needs to be production ramp-ups, upwards of 2 years in some cases. But looking to double or even quadruple production of some of these, there needs to be workers hired, which companies like RTX and Lockheed have said they've been looking to do to bolster some of those productions. But they've also said at the same time, for us to do that, we need commitments, because we're going to ramp up these capabilities and our staffing. We need to know that there's going to be that demand for it, because again, they're not making this on spec. They're going to do it based off contract. So it's up for debate. There are doubts as to whether or not it's possible, especially as quickly as some of those meetings suggested back in June, 6-month, 12-month, 18-month kind of follow-up time frame. So it might be a situation where we fall short of targets, but we're still ahead of where we were before some of these meetings happened.
All right, Alex, we appreciate you breaking that down for us. Another potential meeting tomorrow, so we may have follow-up to that. Thank you, Alex Coffey, co-host of Next Gen Investing and our senior equities markets contributor. Let's bring in our next guest into the conversation. They'll broaden things out. I want to welcome in Eddie Gabor, the owner of P Advisors Wealth Management. Eddie, thanks for being with us this morning. So I'd love to just get your thoughts on how we're opening this Monday. Between the S&P and the NASDAQ both up, Dow sort of unchanged. Russell.
Oh, God, shut up. Just shut up. I don't want to hear about your experts. Equities are higher pre-bell ahead of Trump Democrats meeting. I'm getting ready to have me my supper, my lunch. It'll be the famous chicken soup that I just love. Jim, can we see it? This was a good batch. I think I added a little bit more cumin to it. And what am I doing? Jim. Yeah. Chicken barley soup. Homemade style. Celery, carrots, onion, barley, bay leaves, big old heaping tablespoon of cumin, onion and garlic powder with garlic, chicken, and a green onion. And that stuff is good. Let's have a close-up shot. We're going to have a close-up shot of the chicken barley. Wouldn't you like to go swimming in that stuff? Oh, man. Oh, yeah. Michelle would just love some of it. It's so sweet. You'd think there was sugar in it. Oh. Make us hungry. That's right, Aringa. Little pullback on the video. Oh, knife, 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 knife. Prepare ye in the name of the Lord. We could hit the orb. SPX, prepare ye. Prepare ye. And if I was trading a SPY, I'd probably go out the next day. The 66.75s, ladies and gentlemen, the 66.75s, 3 of them. Prepare ye. Just wait. Crowd's going wild here at the Oh, God. Hello, this is... Hello. Hello, this is Washboardjim with a Sneaky Snake trading strategy. Who is this, may I ask? My name is Richard Nixon. Now, I understand that you're looking at the SPX off the orb. Could you explain to me what this orb is? I think it has something to do with Star Wars. Am I correct? Yes. Orb takes about 15 minutes to 30 minutes to generate a support level. We also just hit that. That's a weighted volume price action. Now, if you look at the 200 EMA, you would almost want to go ahead and take this trade. Now, Richard, I was an admirer of you, how you did China back in the 70s, and I know Hillary was crooked back then when she tried to get you in Watergate. She got fired for that. Good job. So the 66.75s, you want to get in here at 275. Just like I did right there. You want to put a stop loss on this. Now you could come down and hit the 200 SMA. What is can you tell me what a SMA is? Yes, Richard, it's a simple moving average. And the EMA is exponential moving average. Well, I got in this thing at 275 and now it's at 235. Prepare to add, Richard. Right about now. $2.20. We hit the 200 right here. If it doesn't hold, we want to get out. Now I've got 3 at 275 and 6 at 220. My average is 238 cents. $2.38. We're going to round it up to 9. Now you're at 255, Richard. Oh, I was a little shook up there. Now you got to break the orb, and we'll run up more. We're now at 255, 260. Now it means you're new to trading, Richard. I want you to take profit when your gut tells you that you want to take it. I want you to learn how to use your gut. Oh, I use my gut all the time. That's why I tap wired all them there phone calls, because I was suspicious of Hillary. Damn Ford was trying to take my job. Now, what's that blue line you have there, James? Or Richard? That's called the 9 EMA. And if we break the 9 EMA, you might get it up here to this here resistance level of right around 6666. Oh, that's scary. I don't like that number, 6666. Well, you're going to like it now. Six 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 six. Are you serious? Well, I can't quite get it, but that's what we're looking at. 66666666. I'm at $2.60, James. I think I'm going to sell it. Richard, I also want you to pay attention to the time of day. Now, scalpers like me are done. We're having lunch like you see me doing right now with some of this chicken barley soup. That's, now, if you break the 9, what'd you say, Jim? We could run up and hit the 21, and then maybe this support level right here with the triple bottom turn into a quad. But we're at $2.90 now. I mean, seriously, $3. Come on, Richard. Let's do it. $3. Yeah. Oh my God. I'm done. $3.10. Woo, how does he do it? How does he do it? I'm not sure how he does it. He did it. The crowd's going wild at the sports arena. Yes, I'm eating very healthy, Chris. I have to. I'm 64 years old, almost will be 65 soon. Oh my God. Now, was that a good trade? What? What's going on here? $3.20. It's incredible. I've never seen anything like it. How does he do it? So for you YouTubers that didn't get to see my lovely video this weekend, we're going to have a we're going to play it. Marley's off the air here. What the hell? What is that? Are you calling back, Richard? I'm busy right now. Oh, you wanted to hear the song? Yes, I was sitting down with my grandson, and we just loved how you did that in that video. So would you please play that for us? My grandson's young. He's 5 years old, and he wants to learn how to play the banjo. Yes. I'm Washboardjim with a Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. This is Narcissistic Jim, wrote by Livid Juice. Let's get it down.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching and Molly Carolyn, still the apple of his eye.
Everybody have a great day. Sneaky Snake Trading Strategy with Washboardjim. Snake. Whoa. Well, for your information, I've made my goal today plus, and it's not even 11:30 yet, Eastern Time. So that's $71 a contract times 9. $640. Boom! Unbelievable. That's what you are. So we took it to the 21 for the exit idea. And for you youngins out there that don't know my moving averages, let's go ahead and write them down real fast. Get your pencil and paper out. We'll start off with the EMAs. You got the 9, the 21, the 63, and the 200. Now the SMAs, you have the 50 and the 200. Let's go over that one more time. For you late bloomers out there that don't have a pencil and paper by your desk, shame on you. EMAs are the 9. I have that. We'll give you the color codes here. Well, I can't do that right now. The 9 is in blue. The 21 is in white. The 63 is in red. And the 200 is in dotted yellow. The SMA, the 50 SMA is in green. And the 200 is in gold. And right now we're at a double top on YC. So we bounced off this here YCBD off the 21 just now. And you're at a double top. Okay, Marley, I'm getting ready to go to see my accountant. Is that what? Is that a alternative version of Unforgettable? Yes, I guess. Unforgettable, that's what you are. Marley, quit asking them truck questions. I just spit something out of my mouse.
Unforgettable. are far.
How does he do it?
Like a song of love that clings to me.
We're at the 200 SMA. Double bottom. Out of the snake. Get ready for a double bottom.
And forevermore, that's how you stay. That's why, darling, it's incredible that someone so
Forgettable.
thinks that I am
Forgettable too. Double bottom out of a snake. A falling megaphone we're getting ready to take. The price are at $190. The 66.75s at $190. Unforgettable
in every way. And forever, that's how
I've
stayed. That's why, darling, it's incredible that someone so
unforgettable
thinks that I am
forgettable too. It's the singing day trader.
New AI features are landing in Chrome. Have you seen our newest episode of Behind the Browser? Here are the highlights.
Might not hold. They're not 155. Ooh. Okay. We've got a little wall to break here. If you don't feel comfortable, get out. We're back to even here at 190. I'm going to hold on to them. I should have bought the one down there at 150. But he got 6 more. I'd really done pretty good there. And I'm going to go see my accountant when I get out of this trade. Break. Come on, Marley. Nicole, she's trying to take your job from you. Puts here. Could happen, because right now you're bearish. She's after your job, Nicole. Well, we're at the top of the symmetrical flag here. She's going to do something real soon. Any minute. George! Oh, I got to see George's other side here. See how he's always got his head. Oh. Sorry about that, Marley. That was an accident. We're at $2. I'm up $30 now. Told you he was getting ready to squeeze, didn't I? Say yes. I don't know how he does it, but he's right. He did say it. One of them, 2 bits freebie, boom, 3 white soldiers. The only thing in our way is the orb. So I can get out of here with $15. It was 30. George. Might be getting out of here soon. I'll get this accounting deal done with. Retested third time. Oh. Did I put my stuff in here? think I did. Kind of not holding up. Okay. Dad, how come Grandpa doesn't sleep with me anymore? Well, honey, he's dead. It's my turn. This service right here.
Right now, Jamie, I'll start with you. I'd love just your thoughts on the quarter, 10th straight quarter of record revenue here, but shares are lower.
Yeah, I think there was a lot of focus on some of the incremental costs that the firm is going to be facing next year. They brought up roughly 200 basis points of headwinds on investments they're making to continue to elevate and build the brand. And while that is a little bit of a near-term phenomenon, we do think such efforts will really help elevate pricing over the long term. It's really something that the other firms in the industry have benefited from.
And Asya, coming over to you, what were your thoughts when we got the numbers from them, and then seeing first we saw shares pop, but then now, lower?
Thank you, Marley, for having me. We expected the beat, and actually we were off by a penny. The reason why we expected the significant beat is we tracked their
a penny is significant,
and close-in pricing was significantly higher during the quarter, so that helped them beat guidance.
What about all the bras and fights that have been going on?
No surprise in the quarter. We have some concerns going into Q4 and Q1 26.
What about the EBT cards they've been paying for?
At this point, one of the major operators has been adding a lot of capacity in the Caribbean and for sailings in the Mexican Riviera. So we may see some sloppiness in pricing very near term. And I agree with Jamie's comments. The stock is down over 5% in an up market. Because the 2026 outlook may be a little more subdued than people expected, and not only on the cost side that management delineated today, but we're seeing, again, some sloppiness early into 2026 and possible competitive pressures. They will have these higher levels of dry dock, which add about 100 basis points to cost.
$1.20.
Based on our research, a lot of them will happen in Q2 2026.
Times
so
9.
I know that really got discussed on the call, but I think we'll know more on the next call in December when they provide more detail on 2026.
And Jamie, coming back to you and sort of piggybacking off of what Asia just said there, do you anticipate seeing some of that quote-unquote sloppiness coming up in Q2 of 26 or even beyond?
Well, I don't know that we've delineated our quarters, but I do think there is a concern that we could have a
137.50 average.
costs.
Well, I mean,
are
138.
either aligned or costs may be slightly higher than yields, and that could really disrupt EPS growth. But I don't think that shakes Carnival from its long-term algorithm for yields growth faster than
I
costs.
got 12.
So, it's not something we're particularly worried about, and we think that that's something that should sort of neutralize over time.
And Jamie, staying with you here, as far as how Carnival's positioned in the broader cruising sector, who do you think is the best positioned in terms of the cruise lines?
Well, I think it depends on what metric you're looking at. I think from a valuation perspective, we think Norwegian is probably the most undervalued at this point. Carnival has handily outperformed the broader market this year, and so
We're now at 150, baby.
Shares are fairly valued, and we actually think Royal Caribbean shares are pretty overvalued at this point.
And Asia, coming back to you, same question. As far as the cruise liners, who's best positioned in this market right now?
I am.
I agree with how Jamie categorized the three major operators, and I would say that the cheerleader, Royal Caribbean, also may be seeing a somewhat less usual year next year. They have been quietly, I think, tempering expectations, optimism on the street, both buy side and sell side for 2026. So expect a sort of a more muted 2026 for both Carnival and Royal. I agree with Jamie. The off year for Norwegian was probably 2025. So a lot of opportunity, some structural changes that I believe management is already working on. So I think Norwegian is the space that the stock that we would look at more closely, and especially during wave season, the first 6 to 10 weeks of the year. So waiting until
I'm gonna get ready to go.
To know more as to how 26 would shape for each of the three.
Well, I appreciate you both being with us to talk Carnival and the broader cruising sector. A very strong quarter for them, their third quarter, but some potential weakness coming up for the cruise liners, certainly revealing a resilient consumer who's still spending and still wants to go on vacation. We appreciate you both being with us. Asia Georgieva from Infinity Research and Jamie Katz from Morningstar. I also want to thank all of you for joining us today on Trading 360. We always appreciate you being with us. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. I'll be back with you with Market on Close at 2 p.m. Central, but stay with us because Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Okay, well, I'm gonna go do my thing. I gotta get over there before they go to lunch. I'll be watching these from my car. 6675s, 190 and 120 average. I got SPX scalping the lotto, 6675s at 190 and 120. I got 12 con, 3 at 190 and 9 at 120, average of 138. I could sell them now, $12 a contract. I want to see if we break out. These could be pretty good. 155. Or we just broke out just now. $165. So we're hitting the 50. It's a falling wedge. And we're at the sweet spot. So if this breaks this here wall, we could come up to a double top. You got a head and shoulders right here. That right there and that. So somewhere in there is going to be the wall resistance. Okay. Playing games with me. It's got to hold this support or I have to get out.
working all week, and this happens Tuesday. The economic data coming out Friday is probably all done and ready to be released. I don't know if they'll release it or not. We'll watch the news flows as it happens, but brinksmanship, it happens all the time. I've been in this business long enough to know it's just not worth getting upset over, and certainly not worth trading off of, Diane.
Be back soon, room.
Right, is the, for instance, for the jobs report, because we know that's a key report that's coming at the end of this week. Is the BLS, the Bureau of Labor Statistics, funded enough to release that report? One would hope so, but it's unclear if that is the case. And there has been a time, but again, it's been more than 10 years, where we saw that the data was delayed such that we didn't get the jobs report until later. The CPI report was affected at the time, and there were more data points that were affected at the time. So I hope we get that report on Friday, but then it begs the question, is ADP going to matter more? And then some also even question the way the data is constructed in terms of BLS. But let's talk some movers that we're paying attention to. NVIDIA is managing to shake off any worries about that Bloomberg report that's suggesting that Huawei is ramping up production of its advanced AI chips. So Tom, what's your take here?
Well, I think it's a concern. Jensen Huang's been, talking and stating that, we can't push back against demand out of China, that we've got to open up our markets more. He's a businessman. Of course, he wants to sell more of those chips. But I think one of the key takeaways from this report is the fact that it's not just China that we have to worry about, because if we don't open up ourselves to China, that actually accelerates maybe some of the innovation that we're seeing on the Chinese side. Now, the advanced AI chips, they're far behind, just like Intel and AMD are kind of behind NVIDIA at this point. But what does this do for the rest of the world, where it allows these Chinese companies, whether it's Huawei, whether it's some of the others, Xiaomi and some of the others that are developing these AI chips, if they do start catching up and they start getting a foothold in Southeast Asia, in Africa, in India, in some other parts of the world. So this actually kind of disintegrates the competitive advantage that NVIDIA has, even though they've got the best chips on the planet and the most wanted chips at this point. So this is probably a concern. Stock is shaking it off today. Jefferies did come out with a note and raised their price target on that. And a lot of the concerns from NVIDIA stock, why we haven't pushed past those all-time highs and continued to move to the upside, has been the outlook that maybe sales are going to flatten by 2027. Does that come to fruition? Jensen Huang made some comments recently that that's not the case, because AI is going to continue to innovate and ramp up production. It's going to ramp up the build out of AI infrastructure, which is actually going to increase and set a newer pace for AI infrastructure build out in the future. So a lot to watch here, but I think the negotiations with the White House to allow them to sell some of these chips should get a closer, not maybe a closer scrutiny, but maybe open up their eyes a little bit because of competitive pressures that might come down the pipeline.
Okay, and it's clear definitely that the bulls are still like, okay, this is still the winner in this space, and they are still the front runner. And to me, it's giving you can't sit with us, even though Huawei is trying to sit with NVIDIA. Kev, what's your take?
I think to hear Jensen Huang, commenting on the fact that they think demand could flatten in 2027, right? Well, we're in 2025. There's a lot of profits to be made between now and 2027. And for Jensen Huang to also say he thinks the market, is still underestimating the scale of AI demand. Now think about that. With all the hype going on with NVIDIA, Jensen Huang still thinks the market is underestimating. That's an incredible statement for him to make at this juncture in AI. So, all that does, Jensen Huang talking about 2027 already, we'll probably be onto the Rubin chip by then and away from Blackwell. So remember, they have a Rubin chip still already in the pipeline, the next one. So I think there's a good reason that NVIDIA is up, $5 today as we get, actually, I'm sorry, about 2% now as we get to midday. Boy, this stock is just a machine, and we all know it's going to come. Peak demand, peak AI is going to happen, but sometime in 2027, that's a long way away, Diane.
Okay, yeah, great point. You know where else there was strong demand? Carnival, the cruises. However, the stock is flagging right now. It did initially pop off of its numbers, but it's now down about 5.5% right now. What's interesting to me is their bookings look strong. They did better than expected. They raised their guidance again. I mean, I'm curious to know your take, Tom, if this is a, buy the rumor, sell the news, or if there's something deeper in this that you noticed. Tom?
Yeah, I think maybe some profit taking. The stock had moved up into this report. The stock hit 32.5 earlier in today's session. Now, as you mentioned, down 5.5%. They beat on EPS 143 versus 132. They beat on revenue just slightly. Ninth straight quarter of record revenues for this company. They paid down a little bit of debt. They raised adjusted EPS to about 23 cents for Q4. That was a consensus of about 21 cents. And then they raised fiscal year EPS view for 2025 also. And they said, the CEO said booking trends have continued to strengthen since May. So it's kind of a head scratcher at this point. The stock had moved up. But at the same time, if we do get a government shutdown, if the tariffs continue to increase, maybe potential inflationary pressures, the consumer, do they start making different choices into the end of the year? Do they start buying Christmas presents and holiday gifts instead of going on vacation and taking cruises? It's a little bit of a head scratcher here. Maybe it gives somebody some opportunities that was waiting for a pullback. But overall, this was a pretty good report, Diane. I think maybe just some profit taking on the run that we had seen going into the report. But strong estimates moving forward, raising the guidance. But then also Celebration Key just opened in Grand Bahama, and they've had over 500 million visitors or 500,000 visitors to that island in the first, I think, month and a half or something, the CEO said. So that's going to increase those margins, which the company did state also increased.
Yeah, listen, I thought similar to you. They did well again on the top and bottom line, but the demand picture looks strong in terms of what people are buying when they're on board the cruises. That looks pretty solid. Jefferies sticking with it. They've got a buy rating. You mentioned Jefferies' take earlier on another stock. They said Carnival delivered another beat and raise, which further supports their bullish thesis. Kev, do you share a similar view? Do you see this as maybe some profit taking?
Absolutely, because these numbers were good. This sector of the U.S. economy continues to get better, and these companies continue to get healthier. I think that Carnival's one of their advantages is they're the Happy Meal of cruises, right? They're the low price point. So if people start trading down and still going on cruises, they're coming towards Carnival. Remember, there's beautiful cruises. Carnival is the cruise for every man and the most affordable. So if the cruise lines are going to suffer, it probably won't be Carnival just yet. But I don't see the cruise lines suffering. Remember, travel still seems to be what people are spending money on, and so Carnival putting up good numbers. This island that they have, that just improves their profitability, even though they did have major cost overruns building out this place. Once they get it done, it'll add to profitability big time because you don't have to go to a port. You own the port, basically. So big chance there to improve margins.
Okay, all right. This is the last one we have to chew on, you guys. I have to say it. EA Sports. It's in the game. Sorry, I had to do that. Okay, so this is where, we got to get you guys' take. I wish my son was here for this because, I hear it pop up, the sound, the audio. I'm familiar with the audio for this. So EA, it's confirming that today they put out a press release early this morning that they are going to go private. It's a $55 billion deal. Tom, what was your take when you saw this?
Not surprising. If you've seen revenues have kind of flattened out here a little bit for EA Sports after that big run up post the pandemic into like 2023. So growth hasn't been there. PIF, which is the Saudi Arabia Sovereign Wealth Fund, they're going to be the majority stakeholder in this company, and they already had a big, giant stake in their Silver Lake Partners, Affinity Partners, and then Jared Kushner's group in there, Affinity Partners, also taking a little bit of a stake. So maybe, you know, PIF wants a bigger stake. The leader of Saudi Arabia plays video games, I guess, so he had some interest in that. And I think it's the sports side of it, because Saudi Arabia, their sovereign wealth fund, has already invested in major sporting leagues and events over the last couple of years. So they really want to get into that as they try to push out from reliance on energy. They want to get into more of an area where we've got travelers come into their country, going to these events in their country. So maybe that's part of it. $210 a share seems a little bit steep here for a segment of the industry that's actually flatlined as far as revenue growth. And it seems like, you know, every new release gets kind of pushed out by months, days, and years at this point. So yeah, not surprising because of the big stake that the Saudi Wealth Fund already had in the company.
Kevin, I'm curious your take. I wonder if some of this is partially like, you know, losing some market share to, say, Epic Games, which, you know, that has Fortnite on it. A lot of the young folks like that now. They'll still play their sports games, which I know that EA obviously has a stronghold in. But then also Roblox, you have not just kids, teens playing that too. Kevin, what's your take on this?
I think this is, you know, Saudi Arabia, that whole area of the world has been a one-trick pony for years, and they're desperately trying to expand their footprint into other businesses. And Tom's right, they are focusing on gaming and sports and all things. And so for them to get involved with these partners, remember, taking a company private lets them be much more radical with the changes they want to bring to this company. And you're seeing it a lot. JW Nordstrom, right? There's a lot of companies going back private. The list is getting longer and longer. Here's another one, and $55 billion, the largest deal of this kind ever. So I think this is just the evolution of what we're seeing. Private money is becoming just as important as public money. And so I think this allows them to make more dramatic changes to EA without having to worry about all the other things that come with being a publicly held company. So yeah, it'll be interesting to see what they do turn out to change when they take over.
That's a good point about private money becoming just as important, especially now that, you know, you have the rule changes that will allow, you know, everyday investors to invest in private equity in their 401ks, etc. All right, good takes, guys. Coming up, bull versus bear. The guys get their example trades put together for General Dynamics. Defense stocks have been moving higher today after Wall Street Journal report says the U.S. wants more missiles and faster. We've got more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Defense stocks are on the move today after a Wall Street Journal report says the U.S. wants more missiles and faster. Among them, General Dynamics turning up the heat. According to the Journal, the Pentagon is urgently pressing U.S. missile suppliers to double or even quadruple production of key munitions. The goal, to shore up the nation's stockpile in the event of future potential conflict with China. At the same time, you also have Seaport Global upgrading its view on General Dynamics to a buy rating. All right, let's put on the trading glasses now. Welcome back in our co-hosts, Tom White and Kevin Hinks. Guys, it is bull versus bear time. All right, before we get to the example trades, we got to talk about General Dynamics and the catalyst for gains here today. It's been a winner. Kevin, I'll start with you. Your take here.
How'd you like to be the person that takes that call, Diane? We want you to double or quadruple the amount of missiles that you make. That's probably good for their profitability. Also, they just got a big submarine contract, the Virginia sub contract. I think that's $640 million. So I think part of this announcement from the Pentagon, I think the pressure is all going to be on Russia right now. And I think the Trump administration wants to put the fear in Russia that they're going to significantly upgrade Ukraine. I think the Trump administration wants this war over, and they don't think Vladimir Putin is moving quick enough. So I think you're going to see a lot of headlines upping defense spending and upping purchases like this. I think it's all pressure on Russia. And so crude oil prices lower, defense spending higher. Remember, crude oil prices being lower hurt Russia's ability to fund a war. Up defense spending, and it could affect Russia's negotiations for the end of the war in Ukraine. I think it's one big story that we're seeing right now, but great for General Dynamics stock, Diane.
Okay, yeah, so your take is it's beyond even what they're saying about preparations for potential future conflict with China. It's about what we have here in front of us as well. Tom, what's your take?
Well, I think if you take a look at, especially the European Union right now, Kevin mentioned the fact that, we're supplying NATO with these weapons. We're going to, sell them basically to NATO, and they're going to help finance Ukraine with that. The increase in defense spending in Europe is going up. The White House pressured NATO and all these countries in Europe. They're increasing their spend. That's only going to help General Dynamics. And it's not only nuclear submarines, it's Abrams tanks, it's the logistics for a lot of the combat weapons that they have over there also. So that's going to be mission critical for them. Defense systems, space applications. So this fits right into the narrative that everybody's loading up on defense spending at this point. And it's not just the EU, it's across the globe. And they've got a lot of partnerships and the deregulation from the administration to allow them to sell to other countries has also made it easier for General Dynamics. And I think that's why you're seeing the Seaport Research, the upgrade on it. And don't forget, they make private jets, Gulfstreams, and people are snapping those up. And I think that was one of the reasons for the upgrade today.
Great point there when you think about Seaport Global there. All right, Kev, let's start with you and your trade example. What's your approach here for General Dynamics?
So, the stock has run quite a ways. It's plateaued the last few months, but it's had a great last 12 months, or last 6 months actually, up about 24%. So what I did was something a little more passive than aggressive. And so what I did, I looked out to the October 17th. They have earnings on the 29th of October. So staying ahead of their earnings, going out, just a little over 2 weeks, 2.5 weeks here to the October 17th, selling the 330, 320 put vertical. Now, here's some of those trade-offs. This is a fairly aggressive put vertical. By definition, it's a passive trade, right? Because you do okay if it stays right here. But I moved my strikes, pretty close to where the stock is trading right now. So the probability's only in the mid 60s that it's going to finish out of the money. So it gives you a little more delta, almost a 20 delta on this short put vertical, and it's $10 wide. Collecting about $2.10 is where we put in. It's about $2.15 now, so it's actually up a couple pennies since then. But this is a risk-defined trade that's medium to high probability, we'll call it, and risk-defined. The risk is the width of the strikes, $10 minus whatever credit you take in. Diane?
Yeah, I'll take over here, Kev. Yeah, this is October 17th, so just 18 days to expiration on Kevin's example trade, neutral to bullish, giving yourself a little bit of a cushion, selling that 330 put, buying the 320 strike put, collecting roughly about 210 credit. That means your risk on this trade is going to be $790 per spread on this, but that's all the way below 320 on this one. Kev, when you look at this, probabilities of finishing out of the money, it's a little bit more aggressive. You still have a cushion to the downside, but about a 63% probability of finishing out of the money on that 330 short put on this, Kev. The idea here is this goes out worthless, right?
There's two ways to get deltas, right? I used both of them in this case. I widened out my strikes, not $5, but $10, and I moved that short strike up closer to at the money. The trade-off is you get a little bit lower probability of finishing out of the money. Your cushion on the downside's a little less, but you collect more premium. Those are the trade-offs that people have to deal with all the time. And what's the decision-making process? Your opinion on the underlying. So yeah, I made it a short put vertical, but I made it a little more aggressive in terms of the delta.
Yep. So that's a passive neutral to bullish trade. And we've got something, we're not going to do point counterpoint today or bull bear. This one is the same directional bias trade, but maybe taking advantage of that lower implied volatility at this point. But the difference is on this example that we're going to give you as opposed to Kevin's more passive bullish trade, this one, you need an actual move to the upside here. So I went out to the October 24th weekly cycle here. That gives you about 25 days till expiration. Avoids earnings. Earnings are tentatively scheduled for the 29th of October, so we want to avoid that, but also taking advantage of maybe a move higher into that report. You want to get rid of some of that event risk. So going out to the October 24th weekly cycle, buying the 335 strike call. It's basically at the money. And then against it to offset some costs on that bullish call purchase, we're going to sell the 350 strike call. So bullish $15 wide call vertical, you're paying roughly $5 debit. There's your risk, $500 per spread. That can expand to $15. Kev, give me your take on this one.
What I like about this one, you've given yourself more duration. You're bullish, same general direction as my trade. This is just a little more aggressive. This is the short vertical versus the long vertical. And the long vertical, you need a move, right? Your break even is $340, but if you get that move, you win. If you get a move up towards 350, you're an exponential winner. If you pay $5, you have a chance to go to $15. So there's the discussion: short vertical versus long vertical. Tom, the payoff is exponential, but you need a move for it to be profitable.
Yeah, and one of the other things as far as trade management goes on these trades, Kev, is the fact that with the purchase of the call vertical like this one, if you get that move to maybe 345 or 350 ahead of expiration, maybe you can start closing a portion or all of your position or adjusting it somehow. As with Kevin's short put vertical, it's a shorter time frame on it. You need time decay or theta to work in your favor. So even if the stock kind of just stays here, it's still going to decay on a daily basis a little bit. So you've got to maybe wait a little bit for that thing to contract. But if you do get a move higher in the stock, that'll also contract the price of the short put vertical and expand the long call vertical on this. So two different bullish type of trades here, Diane, in general dynamics. One, you need a move. one a little bit more passive on the short put vertical that Kevin brought us.
All right, good stuff there, guys. Appreciate that. Two different approaches for an example trade there. For General Dynamics, coming up, we've got cash tags. A team from Lightfolio will be along with new sentiment data on Meta. That stock is up more than 20% year to date. Stay right here on Schwab Network. Fast Market. We'll be right back.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall here at the New York Stock Exchange alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, I want to bring in our next guest. We've got Andy Swan joining us with the team from Lightfolio, co-founder of Lightfolio. You've got new sentiment data on Meta. Andy, I took a glance through some of this data. What I found, I wasn't surprised by the trends as it relates to TikTok. It's been top of mind in its comparison to like Meta properties here. I will say I'm surprised by where Pinterest stacks in this. So take us through your big picture takeaways first from this.
Yeah, the biggest picture takeaway, I think, is that Meta, they're in the law of large numbers category now. With billions of users, it's extremely hard to grow at a very fast pace. Like TikTok, Pinterest, X, Reddit, they can grow much faster on a percentage basis than Facebook or even Instagram can. And so we see that when we look at the platform visits, year-over-year change in platform visits. TikTok and Pinterest, a little surprising to see Pinterest, but they've tapped into some cool new features and gotten a little bit of virality going. But those are the two growing the fastest. Instagram still being up is extremely encouraging, I think, for Meta, because that is where the money is made, and that is where you would think the law of large numbers would be holding them back. And so seeing Instagram up 12% year over year really tells us that Meta is doing a great job of continuing to expand on those extremely large audience numbers. Meta owns the audience, and Instagram is carrying the torch. From an ad visits perspective, which is where they make their money, and we look to see how much people are going specifically to the domains and websites where they would engage, where they would spend money to advertise to these different platforms. Customers, Reddit is absolutely running away with it. We talked about that last week. This is, that company has really started to lean in on its AI tools and made its advertising platform significantly better. Meta ads overall slightly negative in terms of visits, but the problem with comparing these two numbers really is that Meta kind of already had everybody. Everybody that wanted to advertise to social media users was either advertising on Facebook or Instagram already, so there wasn't much growth that was possible there. What we see from Facebook, Instagram, and Meta in general is a company that is extremely dominant in terms of a user base, in terms of eyeballs on the screen, and is doing a very good job of utilizing new tools and technologies to deliver higher ROI to its advertisers. So there's nothing screaming off the page about Meta's growth here, but they're doing a very good job of defending their position.
Yeah, Andy, Mark Zuckerberg just came out and they said grown to 3 billion monthly active users on Instagram just recently, and we've always talked about that. That's probably how they're going to continue to monetize this business and the ad side of their business as they competed with TikTok. Now, with TikTok coming over here, what effect will that happen? Then also, Andy, are you guys seeing any data on these new Ray-Ban glasses that go on sale tomorrow? I mean, I'm hearing pretty positive things, and they say, a lot of people are saying the future isn't going to be on your phone. It's going to be on what you wear and what you see as far as the AI build-out goes. Are you guys seeing any preliminary data on, needs and wants of that product?
Yeah, very positive. Like you said, I think that, what Apple Vision Pro tried to be, Facebook is actually delivering, and without, a clunky headset that makes you look like, you're a wannabe in a sci-fi movie or plugged into some sort of Matrix situation. Instead of the Facebook or the Meta glasses, the Ray-Bans, pretty comfortable. I've tried them on. They're just a little heavier than normal sunglasses. Otherwise, you wouldn't know the difference other than the interfaces that you're allowed to engage with, the video and photos that they can take. It's all really cool, and it does feel like you're living in the future, whereas, the Apple Vision Pros and some of the old Meta Oculus headwear made you feel a little foolish, like you were blind to the rest of the world and, becoming, part man, part computer. So I think that they're on to something there. I don't know how long it takes to monetize or to, really create a meaningful audience compared to their 3 billion active users. But they've got it tells me that the company's still got technical chops that are extremely high and can deliver game-changing product, which I think is the main concern of Wall Street investors. It's kind of like, what next? Well, you're seeing it, and so far the response is very positive.
Let me ask you this, Andy. So I noticed obviously the trend, you did see an increase in your data on Instagram. I'm curious to know if that's about Reels engagement, because I remember when they were first leaning into Reels, they hadn't figured, they talked on their earnings call about how to monetize that, right? How to incorporate the advertising in that. I'm curious to know what you're seeing in terms of the data and how consumers are engaging with that. Is that growth because of Reels, right? And then the second question, or second part of that is Threads. I'm curious to know if you have any data on Threads. I know it doesn't come up in this data set because, maybe they haven't figured out how to monetize that yet.
Yeah, I think Threads was kind of dead on arrival and hasn't gotten a pulse yet. We see no reason to track the data that we get on that when compared especially to the rest of the Facebook audience. I wouldn't be surprised if they kind of sunset that or move it into some of their other products in terms of feature set. But you're exactly right on Reels. Reels is the dominant driver of growth. The algorithm has gotten significantly better, more addictive, which means more time spent on screen and more opportunities for advertisers to advertise, and more opportunity for those ads to be hyper targeted to someone who might engage with them or be persuaded by them. So we think what we're seeing from Instagram on the Reels product is extremely positive and likely to drive much higher ROI for its advertising clients, which means more money spent on the Meta platform advertising network.
the prison
It
guy's
does seem
on.
like those reels are more addictive now because you end up just scrolling from one after the other, and I've been guilty of that. Like, oh, I've got to reduce my screen time, and reels are
I'm back.
not helping with that. All right, Andy, we'll leave our conversation there for now. That's Andy Swan, co-founder of Likefolio. Appreciate that great insight that you brought. Okay, now for the trading perspective on all things Meta. Tom, you, Kevin, I yield the floor to you. You got some good information there from the Likefolio team. Take it away.
Go ahead, Kev, with the trade.
So, listening to their data,
Listening.
there should be nothing there that makes you less bullish Meta platforms. And so, I'm looking for this recent, the stock has consolidated for a little while now after hitting $795. So what I want to do is I want to give myself some time.
No.
They also
Don't do that.
Earnings on October 29th. But this one I gave myself a little more duration, went out to the October 24th, and I did the unbalanced butterfly, where I bought the 750 call, bought one, sold the 800 call, so a 50-point wide vertical, and then to finance that, I sold the 800-820 call vertical. So $50 wide on the long side, $20 wide on the short side. I did that for about $13.70. It's trading right there right now. But this is a trade. $13 could turn into $50.
Oh.
So that's a 4-for-1 if you get that move between $750 and $800. Obviously, if you go to 820, you lose some of those profits, but you stay profitable along the way. But this is a bearish move, lining up the expected.
I'm tempted to jump back in these.
October 24th is about $50, hitting that.
I got out at 175. We broke out of that triangle. Boom. Could have got more, I think. App is up again. NVIDIA pulled back to my support. Oh boy.
Time to be in your favor because it won't start to expand in price until like maybe that last weekend expiration, right?
Well, yes, but you remember you've made a strategy here where as long as you get the direction right, you don't care where it goes, right? You prefer it stop at 800, but if it goes to 850, you make, let's see, yeah, I would say you make about half of what you were going to make. So, but you're still profitable on this trade. So yeah, it's one that's looking for a move. Like I said, the move out to October 24th is right at $47.50. So if you add that we're a little bit higher than that, like because it's trading 746, but we're targeting $800. Listen, if it gets to new highs at 795, close enough for me, Tom.
Yep, close enough for me too, honey.
Break even, as I mentioned, 763.70, only about 2.2% above the current share price. So you don't need a massive move on a percentage basis to get above that break even and starting to see some profitability on this bullish unbalanced call butterfly, Diane.
The beginning of Meta and what that stock was when it first opened, when it first went public, and all the challenges around it. I mean, it's been quite the winner for those who've been in it for the long term. Thanks, guys. Coming up, the breakdown. Western Digital, which is something of a Wall Street darling. That stock higher right now. Two analysts out with more bullish targets. We'll be back with some analysis on the other side of this break.
Doo-doo. Doo-doo, doo-doo-doo. Doo-doo. Doo-doo. Doo-doo-doo-doo-doo. Doo-doo-doo. 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 What did we hit? 66 resistance break, 53 didn't do it. No. ConocoPhillips, CCL, and Fang, F-A-N-G. Da. Been such a pretty world today. Okay, we're at support. George.
From a secular and even cyclical standpoint,
WDC.
the HDD markets have been very robust. So prices have been really firm. The demand for infrastructure from an AI data center standpoint is there. Cyclically speaking, you got to think about PCs with artificial intelligence.
PCs.
There's going to be an upgrade cycle. They're going to benefit from that as well. And right now, the supply issues have been constrained, so prices have been firm, and that's really underpinning this other catalyst for Western Digital. So there's multiple drivers for this particular company, and I think that's why the stock has improved tremendously over the last few months or so. This year, it's up 92%. It's just been in a strong parabolic uptrend.
Yeah, and I mean, like you mentioned, that Morgan Stanley price target, I mean, that's huge, 171.
Yeah.
Listen, it could happen, I guess, given how it's performed on a year-over-year basis. All right, George, thank you. That's George Sillis, our senior markets correspondent. All right, let's get Tom and Kevin back in here for both an example trade and some analysis on that one. So, Tom, you've got the example trade in Western Digital. What's the approach here?
Well, I look at the chart on this stock and the parabolic move that we've seen over the last several months, and it reminds me a lot of Micron. And Micron just reported earnings in that memory chip business. And, if you look at just the move, overlapping, the correlation between that and Western Digital, they overlap a little bit as far as competition goes, but then they've got some different areas where they profit. So that's the way that I looked at it. You look at the RSI on this one. It's
I'm not in no hurry.
I believe on their 70.
/ES has a double bottom. We're at support right here. I think I'll make me a cheese chip snack. Definitely had a double bottom. Apple's at support, but I don't know if it's good tradable yet. Man, these things are all at support. Okay, well, the 6670s. Right now at 115. Sale. Let's do it. Let's do it now. $115, baby. We're at $135. Where's Washboardjim's channel? We're at 135. Well, we really don't want this thing to drop. Jenny. Come on. Damn. Girls are unstrong. What is it with me getting in these things and they knife? Coming back, but the price ain't. TTM says we got to break the 21. Dow Industry. NVIDIA is the volume leader. Then Amazon. Nike. They were pumping Nike last week. Had a buy rating on Nike, and I said, what? That's what I said. I said, what? Still holding support.
Of how much it's really garnered our attention with analyst moves and also just moves in price that really match these calls. So continuing to see upside, although now it feels like the overall coverage has become a bit dated, as the average price target right now is $557 a share. Obviously implies some good downside from where we're currently trading at 707.
Yeah, and I don't want to harp on this for too long, but you'd say that the Morgan Stanley adjustment is sort of a catch-up, right? I mean, they go from 480 to 750. Perhaps there's going to be more of these, as you mentioned, some of those stale notes still lingering in the balance.
Yeah, when I see a jump like that, I either think A, that you haven't been perhaps updating as we've seen price come up, or B, you're all of a sudden extremely bullish. Yeah, that's not really the tone of the note. So just maybe some cautious optimism from Morgan Stanley today on AppLovin. Next name today, though, is Spotify, with a reiteration from JP Morgan at overweight, also raising their price target, though, to $805 a share from $740. See, that fits more of the range that right now we could see, obviously, shares potentially traded, but does imply nice upside from here. That also right now would make it definitely one of the highest price targets among analysts. The high is over $1,000, but still, all that being said, this firm did highlight there's considerable focus right now on U.S. price increases, which they believe could be coming by year end or early 2026, which would drive further upside to their model. Unfortunately for us as consumers, not the news you want to hear after they already did, of course, just a year ago, raise their premium subscriptions, but would follow a string of right now streaming services taking on that pricing power, and Spotify does have a pretty premium product for that reason, so they have that flexibility.
Yeah, this is one where you do typically see a little bit more of a narrow gap between the current consensus price target and the last trading price, and it's getting quite close now. The consensus that I'm seeing, Jenny, is around 740 for Spotify, and it's trading, in the kind of the 720s. So we're talking like 2% or so. But looking historically, that's kind of the norm for Spotify. You do tend to see the price target as the stock's gone up continue to edge higher. But higher stock that you typically see, 10-20% return potential on the consensus basis. But obviously, in the case of JP Morgan, they like what they see. This is the kind of call that I look at and I say, oh, this is an analyst that has been right, and they still see more. Unlike maybe what you saw with Morgan Stanley, where it's like, hey, maybe they just kind of fell asleep at the wheel and they're playing a little bit of a catch up in the case of AppLovin. So take it for what you will. Doesn't mean they're going to be right. A lot less volatile stock. 45% implied volatility, so about half of app 11, and also realized volatility about 20%, so moving about half as much on a day-to-day basis as you're seeing in app 11.
Okay, and our last name today, DoorDash. So not really fitting with our broader tech theme, although you could say this is a tech company, just more in that consumer-focused space. Up 2.8% to start off this week, though, as DoorDash and Kroger did announce earlier today they will be expanding their partnership to make Kroger's full grocery assortment available on DoorDash in the U.S. starting October 1st. The companies did say the launch will cover nearly 2,700 Kroger stores, including Ralph's, Fred Meyer, Mariano's, and Harris Teeter.
Fred Meyer, is still around?
But still definitely showing the scope of their brands. Kroger customers now will be able to use these loyalty discounts and promotions directly through the DoorDash app, per the company's statement. And it say they
haven't looked at Uber in a while.
Collaborate further on their retail, media, and delivery models. So right now, DoorDash also 29 buys, 13 holds,
Uber
and
hit
sells.
Uber.
A fan favorite throughout
Uber
the
hit
year.
100.
I know we've pulled back a bit from, highs that we've seen, and this name is up still about 60% on the year, but up 10% this month, and again, only about 3% off those highs.
Look, we're only going to be able to talk to the information that we have and how the stocks performed and how the companies.
Well, the market's not doing too hot.
For entrepreneurs, for business leaders, looking at how DoorDash has navigated the last few years, you have to tip your cap to them, and I think there's a lot of lessons to be learned. This is such a competitive space. You have a name like Uber that's come into it with a bigger moat in the sense of driver pool from its ride-sharing arm. And they've not only competitive, but they've held serve. They have still, a much stronger market position than Uber Eats. You look at Instacart, competitive with them on the grocery delivery front, which this, of course, addresses, and they're seemingly making moves to remain a formidable force there and be a formidable force there. And then you look at what Amazon's potentially going to do and can do through Whole Foods and Amazon Go and Amazon Fresh. You have to tip your cap to DoorDash.
You do, and I think that there's definitely been the very clear leaders of the food delivery, grocery offering space, and then the ride-hailing space, those being DoorDash and Uber, where it's not really so much a two-horse race anymore. Although I guess Uber Eats tried to come for some of that market share of DoorDash. Not all that successful, though. A lot happening on October 1st, I think, is the takeaway here, is that's when that partnership does officially kick off. But we'll leave it there for the top of our show today. Coming up next, it's time to chart and trade names like Tesla as well as Rivian, as we are seeing EV tax credits are ending. So perhaps we'll see a surge right now in buying interest, as Tesla has even a countdown on its website right now until we see those EV credits expire.
Doo-doo. Alibaba 53 billion AI push is a threat. Is the threat NVIDIA can't ignore. There's some pod stocks that are up today.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills
in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the latest in the EV space.
You look nice today, Jim.
Pivotal EV tax credits expiring really starting tomorrow. So we will see, I'm sure, some shift in buying habits perhaps. But joining us now to discuss more on Rivian and Tesla, of course, two of our domestic EV players, is Rick Ducat, our chart master.
I'll be right back.
Rick, we'll start off with
I'm watching my
SPX.
SPX.
I'm sure we'll review this chart at several points throughout the week, but seeing a really nice recovery and a really nice rally in shares that actually has now made it one of the best performing Mag 7 names for a month-to-date performance basis.
Things can change quite quickly, especially when there's so many legislative risks for this sector like solar and energy and EVs and what have you here. But now we can see here that, as you said, Tesla did make a nice move to the upside. You could have drawn a trend line here giving us this triangular type shape. We see that price then started to gradually make higher highs. Then we got the big push. We filled the gap near 400. We crossed above some old resistance levels. Now we are hanging on just above the 440 level. If you backtrack, you can see right here, it was an old intraday high from much earlier in our chart here. So that would be a notable area to hold on to. That's about where we hit our highs in the previous sessions recently here. So if we were to keep moving to the upside, the next level of interest would be 463 based on our best closes there from around that same period just before we were just discussing there. So now we can see too, if we were to move beyond and into our moving average studies here, well, moving averages are lagging indicators. They're not super helpful when we're getting this type of runaway breakout move here. You could use a 9-period EMA here, an exponential moving average in blue. That lines up pretty closely with that 426 level that we mentioned based on those old high and low prices for price. So that stands out as a potential support area in the short term here. RSI, our measure of momentum, showing a little bit of divergence here in recent days. RSI trending downward while price was making higher closes. A bit of a mismatch between price and momentum, not exactly what you'd want to see if you're bullish. We are still quite high. Momentum is still strongly favoring the bulls, but we have dropped a little bit below, just a hair below that overbought threshold of 70 here. So if it does close below that level, it would be more of a bearish signal here as we begin the week.
Okay, and so as far as any other technical indicators we are watching here to kick off again this week, does any bit of this run from a technical standpoint give you any pause or any sign of concern, just given its moving averages historically?
Well, I mean, there's levels that stand out here. So that 426 level that we mentioned, that one lines up with our old support and resistance area and our 9-period exponential moving average here. That's where we see our volume node as well. So you can see our blue bar graph on the right side of the screen. This is our volume profile study. This shows us the heavy trading areas. So we've pushed beyond this very significant volume node relative to what we've seen around it here. That was really the standout level. We're holding on above that point now. It's quite thin below or above where we are, but we can use standard deviation channels. You can see our +2 channel lines up quite closely with those old high closes there. So around a 465 or so, that could be an area where the bulls might look for some potential consolidation or slowdown, or even a resistance ceiling if things start to slow down more significantly.
Okay, yeah, and we'll have to see again if we see that tax credit. Of course, I'm sure not an immediate impact, more of a long-term delivery production impact for Tesla. So appreciate that to Rick. And now as we do think to trade Tesla for example purposes here, Alex, I mean, just considering there's still a lot of uncertainty, a lot of optimism from the sell side last week, but all that to be said, every week is a new week for Tesla.
No doubt, and with the big move, oftentimes you do see uncertainty start to ramp up in the form of implied volatility becoming higher and higher. And so with that, options get more expensive, and maybe you look to sell the options thinking some of that volatility may be mean reverting as it has been historically. So I looked at a range-bound strategy in Tesla. I know that is a little bit dicey at times with a stock that can move as much as this one, but we just did some quick math. I mean, 440 is roughly what the stock is trading. That means 10% would be $44. Well,
roughly 40. That gets you down to 400. That's what we sold the put vertical here, the 400, 395. So almost 10% out of the money. 10% to the upside, we'll make it 15. That'd be almost $60 rally. You could get to 500. So you have almost 50% of cushion to the upside, 10% or thereabouts cushion to the downside on the 500, 400 strangle with the $5 wide wings. Risk-defined iron condor, $1.50 credit means you collect 150. You have the chance to lose 350, but you need a big move to lose that money. If it stays contained, or at least ends up within that range of $100 from 400 to 500 by October 17th, chance to make $150.
Okay, yeah, so way to be risk defined, of course, and you know your parameters, obviously highly customizable here if you have more of a conviction either way in Tesla shares. But now to shift gears and look at the more of a growth story when it comes to the EV world, that being Rivian, as Rivian is still not profitable on a per unit basis, which is always my concern, but we've come off of highs here, but we've also been in a pretty nice recovery for Rivian shares.
Yeah, just kind of anecdotally speaking, I see Rivians pretty commonly now driving around
You do.
Chicago. We're granted we're a bigger, auto market here. It's probably not true everywhere, but it's certainly not unusual to see them anymore at this point. Now, just to get into the chart more specifically, we had a high point near about 1650. That was our high close, 1649 to be exact here. We did make some intraday highs beyond that point, all the way up to 1715, but a big collapse then that took us near those previous lows all the way down here. We sank as low as around 1150 there, but we have come back. Now we're in an interesting situation because price has closed above that $15 level. That was an old intraday high. That's about where we found our lows so far. Today's low came in just around that level here. We have recovered somewhat from it, but that seems like a notable potential tipping point here. If it were to be breached, that could be noteworthy here in terms of potential price retracement here back to some of these lower levels. But rising wedge type shape overall gives us a somewhat bearish type of pattern here, regarded as a bit more bearish. It can go either way. You're looking for a breakout beyond those trend lines here. Much like our last chart, we're quite close to our 9-period exponential moving average in blue here. Lines up fairly closely with that 15 level. So a little bit of additional emphasis on it as a supportive point. Beyond that, we can see we have our 21-day EMA, our yellow line right here, pretty close to our trend line near about 1450. RSI, not exactly cooperating with the bulls once again here. We had a very brief trip above that overbought area, but a little bit of divergence there. Price made a notably higher close, but it did not surpass the previous high on the RSI there. So that was not, a sign of strength, especially here. It's a sign that the momentum was slowing down even as we notched out these higher closing prices here. Still bullish though, still above the 50 midline, Jay.
Okay, and so still definitely in a nice recovery. So what else do you keep on your radar when it comes to a name like Rivian that's volatile by nature? I mean, today we're down about 2.2%, but we've been in a pretty nice, steady trend to the upside. Hasn't always felt that way though in Rivian shares.
For sure, yes, and we can see that the point at which we topped out near today in terms of our closing prices during previous sessions,
gotta do something.
High, lines up quite closely with our +1 standard deviation channel, which is 1 standard deviation above our linear regression line here. So that was a relatively extreme point based on our own price history. That happened to be about where things kind of ground to a halt today. It also is around where the volume starts to really thin out according to our volume profile study. So that seems like perhaps even more noteworthy of a boundary than it seemed initially here.
Kind of dead for the rest of the day.
We have our 15 level.
130.
Start to pick up again in terms of volume.
Rivian.
And other moving averages and studies around 14 to 13 or so. That was the next very important area here.
Okay, so appreciate
Nike's
that.
been in the channel.
We get 2 names on the move today. Tesla a bit higher, Rivian down about 2.3% on the session. So that does it for Rick, of course, our chart master. But now, before we go, looking at
Rivian popped.
Yeah, something a little bit different than what we typically look at, but I think a strategy that many have been familiar with over time, especially those who look at option strategy, just simply buying a call. Now, the way that it's structured, though, this is, of course, a bullish option strategy with unlimited profit potential. The way I structured this one for example purposes is extending duration, going all the way out to January, and then looking to buy somewhere around the 70 delta in the money option. So this is seeking to perform a little bit more, at least to the upside, Jenny, like stock shares,
Jenny.
like 100 shares of stock. You can see as it goes up, basically penny for penny after $17, it does perform that way. Where it's a little bit different, of course, it has an expiration date. That expiration date is January 16th of 2026. You wouldn't have voting rights, or I don't know that Rivian pays a dividend, but if they ever did, the option holder wouldn't have rights to that. But it also has risk definition. So below 14, you would just be limited to your $300 loss, which is the same as the debit, of course, of that $3 debit. Break even though, however, on that expiration date is 17. In the interim, it would be probably closer to where the stock is currently trading. This is going to fluctuate with the movement of the stock, but a way to get a little bit of leverage, risk definition, and kind of seek to be a little bit more capital efficient in the portfolio while still seeking to have that unlimited profit potential of long stock.
No, a good explanation of course, what really this emulates, which is basically, of course, just a stock, purchase replacement strategy, but obviously with some different parameters to consider as Alex just laid out. But we'll leave it there for Chartmaster today. Coming up next, it's time to discuss the latest from the analyst community regarding Seagate Technology. Right now, one of the S&P 500's best performers for the month.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dad.
Dad.
Sure.
I don't want to hear it. I don't care about your grandpa sleeping with you. I really don't. You might think it's cool. I don't. Google is down $1.36. Apple's down $2.25. Looks like the end of the day run's going to be the moneymaker. /ES. We're at support levels on the 30-minute and the 1 hour. We got a fallen wedge on the SPX on the 5-minute. Kind of went a little bit below it. No, it's pretty much right on it right now. I might have 20 SPX calls here. Kind of go below support. Morgan Stanley, Rosenbolt. I thought she was going to be gone for a little while, man. She's on here all frickin' day. She's running my channel. Got to come up with a different strategy because I don't like this. Not one bit. It's not like it used to be. It's weird how one person can change everything. I got 25 contracts. Okay, well, I'm going to go do something here different. She's ruined my show. Tesla's at the 200 right now. It's got to break 443 to become bullish. Tesla is the OG Mimi stonk. AMD, man, AMD always good, looks good. Okay, Web. Boeing was one I haven't looked at today. Boeing's pulled back. Boeing had good news last week. Update: Boeing reportedly reaches settlement in wrongful death case with whistleblower's family. So RBC Capital reiterates outperform for Boeing, maintains $250. Wonder what the whistleblower got. I remember they killed the whistleblower died. They think they had him killed. So it had to have been in the tens of millions. IWM's at the 63. Come on, SPX, give me some money. We broke the 21 on SPX. I'd like to see it get 66.56. $5 bounce. Oh, we're at 55. Come on. Let's get a little bit more. Could have spent another grand. That would have gave me 35. Tweedly, tweedly, tweet. Oh, this living life for me. Oh. Open has a new high. And it was at 8.20 a bit ago. We're up 25 cents. I'm at 55 bucks. I need 63. Boeing reaches settlement. No, it had to be pretty. I think I might get it. We'll see. Well, it turned out to be a boring day. Because if I could find some tradable stocks, I would. For the way I trade. I'm still in SPX, 55 cents, waiting for a big bounce. We got the 63 coming up. Two. Sugar just ain't moving. Tilray's at 164. That's the one that's been running. Tilray and Cron. Yeah, I've thought about grabbing some at Tilray when it was at $1. Then I said, well, it might go to 75. Okay, I'm still watching. Oh, there's a big spike. Come on, 66, 55, 97. I'm down $3 a contract. I don't know if I can see an end of the day run again. I can see it going to the orb. Maybe back to $1. That'd be nice. I'm smelling it. It smells good. I'm green. Go. I don't know how he does it. I can sell him now. I'm gonna pay for my trade. Oh! Now we're gonna hit the 63. I'm at $75. Jim, have you ever thought about selling? Yeah, I did. What happens if you break the 200? We go to the SMA. Come on. Don't give up. It's not in your best interest. 75. Come on. Give me a buck. There's 80. God. I think the new song Lizard Goose is going to put out is How Does He Do It? Now that took a lot of patience. A lot. Come on. I'm not done yet. Don't give up yet. Not been a typical September at all. No, it's true. End of the day run. I voted for the end of the day run. I mean, I should have sold these at 80, but bought the dip. Take away. You can't take away your vote? Are you serious? Livid Goose said noted. I don't know how he does it. I think we need a song. I think we need a song. There's one thing in the way. It's the 200 EMA. One, it's only one. One thing that's in the way. It's the 200 EMA. It's the 200 EMA. Let's break the 200 EMA. I've been sitting here all day. Granny's in the kitchen cooking dinner. Mama's in the bathtub washing the plates. Let's break the 200 EMA. I've been sitting here all day. Nothing's going my way. Let's break the 200 EMA. I've been sitting here waiting all day. I'm up $2 a contract. That gives me $50 right now. I want to break the 200, run it to the orb now. It's not the right time of the day to break the EMA. The Singing Day Trader, brought to you by Washboardjim. My grandma said, "Who's playing that guitar? Because it ain't working so far." Oh, break that 200 EMA. Been waiting all day. I'm a big dog. Oh! We're at 85. Oh, keep going, Jim. We broke the 200 EMA. I'm on my way. 200 SMAs next. I'm gonna call it the pivot point, not a marijuana joint. I think I'm gonna get out of this trade soon today. you 5 cents. Come on, give me a buck. So if I get a buck, if I get $1 and I minus 63 cents, that'll give me $37 a contract times 25. And that'll be almost $1,000. And it could go higher than that if it breaks the 200. I got a little, let me see here. A little bit lower, not much. So I got 2 resistance levels, just under the orb. And we broke one already. So it could pull back and hit that. Oh, and I got a Head and Shoulders. So I got all kinds of little patterns here I could hit. We're at 80 cents. I got the 200 SMA. I've got the Head and Shoulders, right shoulder line for the second time. I got a triple top, which we broke. And I got a quad top. And that's right under the orb. Jingle bells, Santa laid an egg. Jingle bells, Santa laid an egg. Oh, what fun it is to ride in a one-horse open sleigh, dashing through the snow, making speed, dashing through. Okay. Can anybody guess how much this Taylor cost me? Probably not as worth as much as it cost. It's a DN4. $19.90 TAYLOR DN4. We're going to find out. Oh my God. $1,300. It's exactly what I paid for it. Yeah, that's exactly what I paid for it. So we're coming back and retesting support. Oh, PLTR. Look, they're pumping Nike again.
With the strategy of going direct to consumer and taking out some of the middlemen. And I think they realize that. The new CEO, Elliott, I believe that he has it right this time around. And I do think his new strategy, which is win now, will prevail. Kind of getting back to the old roots of what Nike's about, focusing on the brand athletes all around the world. And if now some of the channel checks, which is the part that interested me.
You went woke, man. They never talk about that.
Even for the month of September. So that tells me there's some confidence in the brand, or confidence at least.
That's every stock that went woke has had trouble. Every one of them. Every single one that went woke. And they've not recovered. Almost every single one of them. From Target to Nike to Disney and even Boeing. I'm surprised they didn't have no tranny commercials with airline stewardess. They were about to that point. Budweiser kind of recovered, I think. That's the only one I can think that recovered. No, all the other ones didn't. They'll eventually years down the road, but now what's it been? 3 or 4 years now? There's probably a couple that I haven't mentioned, but those were the main ones. Starbucks. That was another one. And none of them are talked about, Disney, I think, is the only one that kind of made a little effort in saying they're, get out of politics. But Starbucks was a big one. He got all the way to 117 this year. It's kind of at support right now. I wouldn't buy it here, but look here. Adjust price target to 90 from 93. Maintains a hold rating. Starbucks lays off 900 900 workers. That used to be a big catalyst for a stock to break out. Because imagine the payroll that they're saving, just getting rid of 900 of them. I'm trying to think of another coffee shop. That's a China one. Lucky? Is it Lucky? No. I'm back to 75 cents on these things. I about grabbed some more of them, but I didn't want to throw any more money in 80. I still think we're going to get up here. Now we're respecting the 200, so that's a good sign. I'll take it, man. I'll take $1. I'll be up a grand. I'll put it in your all's hand. Let's break the next resistance. at 85. I got my hand on the mouse. Let's break it. Anybody take this on the dip? It's always, yep, a September to remember. September is a month to remember. Boy, this is really a slow poker. It moves a little bit, then it depreciates. It was at 85 cents, now it's at 80. Come on, give me a buck. I donated 10% of my winnings last week to the church. Come on, you son of a bitch. Jim, that wasn't proper. That was very unprofessional. Okay, we're at the next resistance. So that's the next. There's one. Actually, that's one man. We pulled back to the triple top breakout. We hit the 200, so that's 2 bits. That's 3. And that's long. If I don't get out of them when they're at the high, they drop 10, 15 cents. I might just take 85. I mean, that's a lot less than I could get. 0.85 minus 63. No, that ain't right. 0.85 minus 0.63 equals $22 times 25. That's 550. Let's stay above the 9 one more time. Let's take it to the orbit today. He's a little nutty. Give me ready. I'm getting ready to put my guitar away. Fire. Okay. It's good to start playing that again. It really is. I'm not as good as I was, but it'll get better.
You know, you're building one overseas, you better be building one here. Micron has that capacity, and the stock has rocketed higher on that. But we did
Speaking of rocketed, he said rocketed.
Unusual option activity in this name today.
MU, that was on my mind.
Either a long stock position or somebody just speculating to the downside that this run has gone too far, too fast.
Yep.
Now, they gave themselves duration on this trade.
A lot of them
This was
have.
on the March monthly options.
We're at 80
So you've
cents.
got plenty of time
Shut
until
up.
expiration on this one. 100.
What was that all about? I mean, I was down on this thing. Now I'm up for the longest period of time. /ES, the fallen wedge. Called that one out. That's a steep one, too. So that's the 200 simple moving average. And that's the 63. So let's change the color on this one here to gold. If I can get back. No, maybe I should change that to that color. I think I will. Oh, I can't change the style of it. What the fuck? We're at 80 cents. It's strange, I can't change them to straight line. There we go. So I'll make that a 2. We're at 85 cents right now. I could be out of this trade, but I want a buck so bad. Now what's the deal here? Oh, that's the EMA. 90 cents. Yes. I think now's the time. Let me see. I'm at my next resistance. If this thing breaks out, man, this thing could be worth a lot of money. 95. There's $1,000 right there. Oh, yeah. 115. 125. Unbelievable. That's what you are. I'm done. Come on. I want a good grade for this one. $115. Give it to me. We're at the orb. I mean, shit. I got to break this habit of selling early, but man, I'm up over $1,000. Thank you, Jim. I don't know how he does it, but he did it. I don't know how he does it, but he did it, yay. Unbelievable. That's what you are. I got it to my orb, so I made a business decision, like most male prostitutes do. A+ for first class sweating. Yep, I agree. No, that ain't what I had. You dick. Oh boy. I'm the most luckiest guy in the world. Unbelievable. How's he do it? I can't believe how long I had to wait for that. Devastating. Good job, Jim. You did real good. Oh boy. I knew that, you know. I keep thinking about, well, never mind.
Oak.
That's incredible. They were down 40 cents. I was down more than 92%. Time for a drink. I'm glad I sold it. It's down 150%.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions. no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
Yep, they sure are.
With Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the
biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to the watch list. Stocks are trying to give it a go here today, right? We're seeing some leadership here in tech and other names, for example, doing well. Let's talk about what the consumer is doing, because we're seeing an increasingly cost-conscious consumer. And what kind of brands are they interested in? What's going to capture the consumer environment? Let's take a look. Eric Clark, portfolio manager of Alpha Brands Logo ETF, is with us. And we just talked earlier today about Carnival Cruise Lines. People spend, but they may be particular on what they're spending on. What are your thoughts? What is the consumer doing?
Hey, Nicole, it's good to be back. Yes, I mean, consumers are being very choiceful. They aren't investing in everything. They are investing in the things that matter the most. And they're, if you want to do something that costs a lot of money, then you probably have to sacrifice something where you can trade down, use private label, go to the value brands like a TJX or Walmart. I love, Dan, your prior guest comments on Walmart. We love Walmart as well. So there's definitely a kind of a bifurcation between who's, what demographic the brand is serving and how that demographic's doing and how they're shopping, because it's not broad across, every income cohort.
All right, so at this point now, don't forget, right, consumer spending makes up 2/3 of GDP. What kind of names do you think work here as the consumer is facing some hurdles? They do want to spend, but what kind of names seem best positioned and why?
Well, sure. There's one major theme, I think, with this AI thing. Everybody's focused on AI and the build out of AI, which they should be, obviously. But the goal is that this AI will be deployed across the economy and across sectors and industries. So we're really focused on which brands, preferably, are they digitally native? Are they platform businesses? Do they have a massive amount of customer data? So when they do deploy AI, you're going to get a big lift in profits and free cash flow and margins. And ultimately, that allows the multiple of the company to expand. So one of the names that we love is Intuit. They are all of those things that I just described. I just listened to their most recent investor day, and they are deploying AI across all of the business. Netflix is doing the same. Spotify is doing the same. Uber's been doing that for a long time. So that is definitely a theme in the Logo ETF for sure, because it's still to come. The re-ratings are still to come, and that's what the most important thing is for us.
So Intuit, what other names seem to get to hold their spots in the ETF, and why?
Well, there's a bunch of little mini themes inside of here, and obviously from a pure retailer's perspective, Costco, Walmart, Amazon they're certainly taking up a lot of air in the room. From a retail sales perspective, we still love Mercado Libre, which is the Amazon and PayPal of Latin America. They're doing similar things as Amazon, but in a different geography. And we love the asset management theme. It's not just about retail spending. Consumers, they invest.
This thing dropped all the way to 40 cents again.
And so, financials in a world where the Fed started
could drop another candle.
Should do pretty well. They continue to do well year to date. So we love Goldman Sachs. We love American Express. And then we love, a little bit of a laggard this year. And I think they're going to have great years in 2026. The Blackstones, the KKRs, the Apollos of the world that are raising lots of money for private markets. And as rates start coming down, all of those flows and all of those fees start to translate into better M&A and better stock prices. So we think that's a big catch-up play for 2026.
Yeah, you're understand. I mean, are you worried about where AI fits in this, or how consumers' labor picture plays out?
Yeah. I mean, listen, the one negative spot from an economic data perspective is the labor data. And so if labor continues to weaken, that will force the Fed to be more aggressive. And so there is certain things that will drive consumer behavior if there is an uncertainty about your job. But that drives you right back into the Walmarts and the TJ Maxxes of the world. For people that are a little bit nervous, they're going to continue to look for value. So, nobody's going to cut their Netflix subscription, but they might cut other spend, if you will, if they're a little bit cautious. So that is something to watch, which again, we just think that's going to push the Fed to do more aggressive cuts. By the end of the year, the inflation data will start to probably roll over a little bit, and that will give the Fed a little bit more air cover to be able to cut rates. So
Jim.
that's when the market broadens out a little bit. And the key theme, remember, is just you hear it from Walmart in particular. Profits growing faster than sales through a lot of AI and productivity enhancements. That is literally inning one, and people need to get some exposure to that other than just pure technology.
Other names that, I'm trying to pick the interesting ones, and the ones that you liked and you said were sort of leaders in the logo ETF that sort of stay there, they have the brand recognition and they meet the criteria. Have some names been reduced or kicked out of the ETF as
SPX hit the 200s down here.
Yeah, we've actually trimmed, a little bit of the some technology. I mean, everybody has a large slug of tech, and we have tech too. But we cut the NVIDIA, the Taiwan Semiconductor, in favor of this kind of next wave of AI deployment, because we just think a lot of those names that are very crowded they've obviously had terrific returns in the last couple of years. But I think a lot of these new names have much better upside than some of the crowded names in traditional technology and semiconductors. So a name we love that's in the top 5 is AppLovin, not a household brand. It's what we call an innovator brand. They are disrupting the digital advertising world, and AI is the first place that can enhance the advertising market. We've seen it with Meta, we've seen it with Google, and AppLovin is converting from just being about mobile and video gaming across all different categories of ad spend and monetization.
And look, there have been a lot of price target hikes, a wave of price target hikes for AppLovin, and in fact, the stock has hit new record highs.
Yeah.
From when I last checked, so it's been pretty exciting name there. Are we in a different day and age where people somehow have no qualms about having credit card debt or acting a little differently, sort of this joie de vivre, or something like the revenge spend of
There it
COVID?
is.
Have they just not given it
LKNCY.
How we consume does change over time as our income and as our confidence changes over time, but it is part of our DNA, and it's not just a U.S. phenomenon. I always remind people that consumption's 60 trillion, and that's just in the largest, most important economies. It's much bigger if you take every economy around the world. And when you have money,
That's
you
unbelievable.
spend, and, there's a
I mean, I was in that trade down for so long. $15, $20, $25, $30, $35, $40, an hour and a half at least. It felt like forever. with 6665s now. I'm moving them up. Snake breakout, pulled back to the 200, hit the 63, and then run up for a triple top. They could go lower. I got to look at the time. Well, we got 8 minutes to power hour. They're at $1. Let's see if I can get them. There we go. Come on, give it to me. There it is. In $1. Let's go. Do it. We could double the bottom and hit the 200 again. At 4 minutes to power hour. Let's go on Blueberry Hill. I found my thrill on Blueberry Hill. We're coming up to a 1, 2, 3B. We're at 120. So if you're in this trade at $1, you could take your profit now. We'll just hit the 1, 2, 3 at 130, 125, and you'd be out with $250. Hmm. 1 minute to power hour. We're at 200 right now. No, there she is again.
Over 0.1%, 46,304.77, and the Russell 2000 just above the unchanged line at 2435.57, but all in the green today. As we look at some of our futures products, the dollar weighed down about 0.25% today, 97.58. Gold though up again, reaching new all-time highs, 38.52.80 at up more than 1%. As for crude oil, though, down more than 3% right now, 63.21 a barrel. And Bitcoin trying to rally after we saw some massive liquidation last week, trading just below the 115,000 mark right now, up close to 5%. Now, Sam, I do want to check in with you and see what's catching your eye on the NYSE floor today.
Well, Molly, Chinese tech is rallying hard today. I mean, take a look at shares in Alibaba, up over 4%, moving higher as analysts really turn more bullish on this name. Jefferies boosting its price target to $230 from $178 and keeping a buy rating on the shares, saying it's turning more positive on the cloud business. Morgan Stanley also encouraged by the outlook for the cloud, upping its price target to $200, and Morningstar raising the fair value by 49%, saying the shares appear undervalued as the company increases investments in data centers and improved performance of its chips also supports that cloud growth. The stock is heading for its best month over in Hong Kong since it listed back there in 2019, as investors are really betting on its AI growth. And in other related news, Huawei reportedly planning to double output of most of its most advanced AI chip, I should say, over the next year, aiming to win over more customers. And DeepSeek has released an experimental version of its latest model, V3.2, which it says is more efficient than previous LLMs. In other news, defense stocks also rallying today. The Wall Street Journal reporting that the Pentagon is urging missile suppliers to double production over concerns about the low weapons stockpiles the U.S. would have in a potential conflict with China. It follows a series of high-level meetings where suppliers were reportedly summoned to start those efforts. For now, I'll send things back to Molly, who's with Jenny Horn in Chicago with some of today's top movements.
Thanks so much, Sam. Like you said, joined by Jenny Horn here in our Chicago headquarters, co-host of Next Gen Investing. Jenny, lots to get to, but I want to start with Western Digital. I mentioned off the top of the show, we're seeing some major hikes from these hard disk drive makers. Western Digital up close to 8% right now. What's driving this?
I know one of the best performers in the S&P 500 today, but also I think more notably than that, up, I mean, a whopping 44% nearly on the month. So actually one of the top 3 best performers in the index right now for the month of September. Today, snapping a 4-day losing streak, and also that monthly gain would be its strongest month since 2001. And we're seeing this favorability that has been wide felt across other names like Seagate, Western Digital, I mean, as well as even Micron. So really that's what the note focuses on today from Morgan Stanley, who raised their price target to $171 a share from $99 with an overweight rating, saying they'd already been these hard disk drive bulls. Demand, though, has recently inflected as a result of the strengthening cloud infrastructure spend that now, in their opinion, accelerating investments into these data-enabled technologies plus AI inferencing really emerging as an incremental tailwind, right, creates this more bullish narrative. They do believe that based on recent checks, the market remains up 10%, roughly 10% undersupplied, and it has now an even greater conviction in this HDD cycle that will be stronger for longer. Plus, Rosenblatt also with a buy rating on Western Digital today, raising its price target to $125 from $90 a share, citing this full backlog of orders in addition to an increased average selling price for the company's hard disk drives. So they say this offers the lowest cost of mass storage. So just for comparison's sake, when looking at the overall storage capabilities of some of these companies, like Micron is seen as this high bandwidth memory player, which is part of storage. And Western Dig obviously has its hand in storage with hard disk drives, but also these solid state drives are another component of their business, whereas Seagate seen as perhaps just more exposed solely to hard disk drives. So never thought I'd say those 3 words as much as I have today, but that sort of explains, where they fall in terms of this memory and broader storage space right now.
Oh, and yeah, Western Digital up 8% now. Seagate up 5% on this note. And a busy day for Morgan Stanley. They issued that note, also issuing an updated price target for AppLovin as well.
Yes, so I mean, another name that has been on an absolute run. This is actually, as it stands, I checked about 10 minutes ago, but as it stands, the second best performer in the S&P 500 for the month. Of course, the inclusion now into the index is seen as a nod from these institutional investors that this is a more formidable, more maybe mature AppLovin than what we were once accustomed to. But pacing to close out again.
Spy has a pretty good knife here.
The S&P 500 up 111%.
Head and shoulders right now.
Morgan Stanley raising its price target to
Yin yang.
from 480 with an overweight rating. Following really some commentary regarding the belief that October 1st, which is when we'll see the launch of AppLovin's self-serve tool for non-gaming, as well as the Axon Ads Manager. They believe these will be key catalysts, as they do expect the company can tap into billions of dollars outside of the game industry. A successful self-serve launch, though, would be their most important, in this firm's, of course, opinion, proof point yet on the scalability of their non-gaming advertising products. So this name, a bit of a different story, because right now the average price target is like $557. That does imply, obviously, downside from $713 a share and some change where we're trading, but also does trade at a forward PE of 62 times. So a lot of these names have gotten expensive, and the average analyst right now rating or price target, I think it really speaks to either you're not updating your coverage to reflect price, or you still have a more neutral stance on a name that has been on a run as of late.
And it's been on a run in the last 12 months of 456%.
Ridiculous.
God.
Yes, wild. Now let's move to Carnival Cruise Lines. They posted great earnings, top and bottom line beat, consistently strong, but shares underwater today. As we take a look at Carnival, down about 5% last I looked.
I know, and this is interesting because this was another really strong quarter. I mean, they topped estimates as far as bottom line and top line were concerned, lifted their full year outlook for the third time now on some of these overall really robust trends we're seeing in booking. So all-time high net income. This was also the 10th consecutive quarter of record revenue. And they did say that onboard spend did drive this 4.6% improvement in net yields on a constant currency basis, which was all of met on a same ship basis. But despite this really optimistic outlook and strong results, I mean, shares, as you mentioned, retreated after initially seeing some modest strength this morning. And it's really difficult to understand why, because on the cost side, we know that cruise costs per available lower berth day did actually increase about 4.6%, but they actually said that nearly half of 2026 is already booked, which isn't necessarily abnormal for the tourism space, but at historically higher prices for North America as well as Europe. And since May, they said booking trends have continued to strengthen as they see high booking volumes and are far outpacing right now some of their capacity growth, and gave, I mean, really strong now expectations for their fourth quarter and the remainder of this fiscal year. I can't exactly understand fully why we're down 4.5%, but what's interesting about Carnival, unlike its peer Royal Caribbean, who I tend to link those too closely, a bit more than Norwegian, is actually this name, while having risen substantially, I mean, still up 93% off its lows, so it was only up about 16% on the year, versus Royal Caribbean is up about 40% and right around its all-time highs. To get an all-time high in this name,
I can give you the answer, ladies.
It's traded as high as nearly $73 a share at its peak. So it's interesting that we're not even at all-time highs, and yet we're still seeing this sort of negative reaction to what was a really strong bar that was clearly cleared by this report.
I can answer this one because we had a conversation about it on Trading 360. They don't have any new boats ordered, so they have to pull boats they already have out of the water for dry dock to refurbish them, and dry docking fees are a headwind now for 2026. So I know.
Fleet issues.
So I know why. It's a fleet issue. But last one, Electronic Arts. This was sort of the headline of the morning when we all came into work. Going private, being taken private, one of the names we've been talking about quite a bit in this TikTok conversation.
Yes, I mean, especially because right now seeing the same consortium of companies that are seeking, of course, investment in this company, which is now a theme we're starting to see. Of course, there's been, I mean, some pretty major deals made just over the last several weeks, but has agreed to be acquired by the Public Investment Fund of Saudi Arabia, as well as Silver Lake and Affinity Partners. All-cash deal worth $55 billion. Shareholders will receive roughly $210 per share in cash. But so far, we've seen the value of this company surge from roughly $43 billion prior to this deal being announced on Friday to now, of course, $55 billion. I mean, this has been a pretty substantial valuation increase from an investment standpoint, but deal value around $55 billion would imply roughly 25% upside from prior to again, this news being announced. Assuming, though, it does come together, it's going to rank as the largest leveraged buyout ever, not adjusting for inflation. So I think that this is fascinating. And the deal just consists of roughly an equity investment of $36 billion, $20 billion in debt. EA has been a notable video game maker since the 1980s, but what we see is this further contraction as this does take a bit of a page, totally different type of deal, but from Activision Blizzard, which was acquired by Microsoft for roughly $69 billion, and that deal took forever to see clearance from a regulatory standpoint. So there could always be some sort of objections to this from a regulatory standpoint, but with the way the shares have traded today, does it make you think there's any pause right now for the deal's likelihood to go through and this company to naturally go private?
Yeah, and 45 days for them to receive possible other proposals as well, now that they've got an open proposal. So very interesting for the maker of The Sims, Battlefield, Madden.
That's what I think of as well. See, I'm glad you said that, because that's exactly where mine goes. Not to this FC or any of the
And FC, the formerly FIFA.
Yes.
Game. Yes. Well, thank you, Jenny. That's Jenny Horn, co-host of Next Gen Investing, for breaking down all of the top movers for us today. We really
It's
appreciate
not down
it.
that much. I don't know why they're in a
With Sam
frenzy
in New
over
York,
it.
and see what's coming up next in the show.
I mean, I got 28.33, so we haven't hit my support yet. I don't think it's down that much. I really don't. A buck? $1.50? $66.55s.
Tomorrow, we'll get the jobs report on Friday. How important is that data going to be to the market's reaction, but also predicting what the Fed may do in the October meeting, since this will be the last real pieces of data we're getting that affect their dual mandate before that meeting?
Well, I mean, again, does the BLS put out that data if the government shut down? That's a question. And it's funny because the ADP report, which will come out, a private report, that has been weaker than even weaker than the NFP report, the BLS report in recent months. So if that's a weaker number, again, it's going to raise a lot of questions. And so when you combine that with the fact that the market is getting a little extended on a technical basis, getting overbought, we know that it's been expensive for a long time now, but we're starting to get some of these tech stocks and the major indices getting overbought. I think it will give us a reason to pull back a little bit because it's just, uncertainty isn't great, at any time of year, but especially early in the quarter.
There's been a lot of chatter, Matt, around these bond vigilantes right now, particularly what we're seeing on the long end of the yield curve. No doubt some of the long-term inflation expectations are worrying people, so certainly on the fiscal side of the equation. Obviously, we are seeing, once again, another situation where the longer term sort of yields are moving in the opposite direction to how they typically do, as we saw last year. And you actually make the point that the Fed's easing cycle might not be as bullish for stocks as some people are thinking right now if we do indeed see another episode like that. So I'm just wondering, how much of a lid is this going to keep on things?
Well, I think it could. Again, with the valuations even more, much more stretched than they were last year, or this time last year. One of the key things is that, hey, don't worry, lower interest rates are going to make those valuations more acceptable. Well, not if we see another increase in interest rates. In long-term interest rates. Last year the Fed cut pretty aggressively, 100 basis points in the last 4 months of the year, and yet long-term yields from 3.6% to 4.8%. I don't even think we need anywhere near that kind of a rise in yields to create some problems. And I guess the other thing that really concerns me is that why are yields going up? Here in the U.S., we're worried about certain things. In France especially, but in other parts of Europe and even Japan, the reason is budget issues. It's not inflation, it's not too strong growth, it's budgetary issues, they're budget deficits. If that becomes an issue here in the U.S. as well, then we got a whole new can of beans we got to deal with. So this interest rate environment is going to be very important over the rest of the year.
And it is going to be very important, and in the market response, we've seen, you mentioned tech and its rally and this AI trade. We saw that lose some steam last week, after posting a positive week, the week of the Fed rate cut, then losing some, trying to regain today. How important is this tech story to the rally continuing? And also, outside of the big names that we're constantly talking about, are there any others that you think are well-positioned that might not be mentioned as much or looked upon differently?
You can talk.
Yeah, the things that we're seeing, last week, like you said, we saw some of this sell-off. And again, it's very, very important. We all like to talk about, we see rotation. And that can work as long as the tech group is going sideways or at least rallying a little bit. It doesn't have to lead the way higher, but it can't go down, because if the tech group goes down, it's just too highly weighted in those major indices. The S&P and the NDX 100, those start to go down, people are going to start to pull their money out of the marketplace. So they'll be rotating into cash, not into other areas. On the one hand, I get a little worried when you guys were just talking about Western Digital. This had this unbelievable rally, but you look at its weekly relative strength index, the RSI, it's the most overbought it has ever been, even bigger than the dot-com bubble. So it could be due for at least a little bit of a pullback. However, if this thing
150, yeah.
great run this summer, but it's pulled back more recently. And again, on a technical basis, I'm looking at the 50-day moving average on that one. If those two things can break those key moving averages, they're going to attract a lot of that momentum money, and they could really do well.
Yeah, it's interesting, isn't it? Over the course of the last couple of weeks, we've had a couple of stories from the 90s on repeat. This irrational exuberance and also dot-com bubble certainly coming to mind once again. So if the next catalyst then, Matt, will be likely the earnings, so what are you expecting as far as what we're going to be hearing from these companies and whether they can keep up the momentum?
Yeah, I mean, Sam, that is going to be so important because everybody's been talking about how good the earnings have been, second quarter earnings, and they were good. There's no question. But are they good enough for what we really need? I mean, we're looking for the 9% earnings growth now for 2025 and 13% next year. I mean, that's good if the market's trading at 18 times earnings, but when we're trading at 23.5 times the next 12 months. That you need more than that, and believe it or not, as much as people have been talking about the rise of earnings estimates, they've actually come down since the beginning of the year. They went way down in the second quarter. Then they started to come back up a little bit. So people are talking about earnings are coming back up. Well, they are from much lower levels. I guess we had the Bureau of Economic Analysis, the BEA, come out last week and say that they're looking for lower earnings than they had been, much lower earnings than they had been looking for earlier in the year. So we need this earnings growth to really accelerate. And like I said, we need something in the double digits and really probably high double digits for next year to push an expensive market even higher. And if we get anything negative on the AI and spending or whatever it might be, that's going to be a big problem for the market. So it's going to be incredibly important. September is always, usually a tough time for the marketplace. Sometimes October is the same thing. Well, September's been great. The question mark's how's October going to be?
Well, Matt, thank you so much for being with us today on Market on Close. We appreciate you being with us for that macro talk. That's Matt Maley for Miller Tabak. And coming up next, we'll be joined by the CEO of Resolve AI to discuss its recent partnerships with Microsoft and Google. Market on Close. We'll be right back.
Yabba dabba doo. Doo-doo. Doo-doo. 34 minutes left. Can it go higher? We're on fire. Yes. Yes, let's go. Boom.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better.
That looks burnt.
Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Vadas in New York. Shares of NVIDIA are higher today, inching closer to an all-time high. We got within about 50 cents of it earlier today after Jefferies raised its price target on shares. They raised that price target to $220, up from $205, maintaining a buy rating on the stock. Now, the analyst said that management made very clear that the strategic partnership that NVIDIA has struck with OpenAI represents incremental demand. It does not in any way overlap with existing OpenAI plans with Oracle and Microsoft, which they felt was a very important denotation. The firm also raised revenue estimates for NVIDIA for 2026 to $282 billion and up to $334 billion for fiscal year 2027. So since 2022, we have seen yearly revenue rise dramatically for NVIDIA. We've charted it for you just to walk through it. We were just under $27 billion in 2022. In fiscal year 2023, we were right there again, $26.97 billion.
You're annoying. This channel's gotten so far downhill. I mean, she just... PLTR, Warren Buffett's sweet zone. Kevin O'Leary says artificial intelligence is creating better jobs, not destroying them. If AI could flip a burger, that's a good thing. You might get your wish one day. 234. $2.50. $3.10. Let's go, baby. Lulu. Lulu. It's a beautiful world today. It's really been a real good trading day. Besides getting stuck in that one for an hour and a half. But still, yeah, that was a good payday. There it is right there. $3.60. Profit, profit, profit. Such a pretty world today. If you can count to 4, you might make a little bit more. Hello, it's Jim.
Hey, Jim.
Yeah.
It's Joan.
Yep.
The man is here to change filters out.
Yeah.
He's got some questions. Do you mind speaking to him?
Yeah.
Is it okay if I give him your number or not?
Yeah.
Okay.
Yep.
Okay.
Give him my number.
Okay.
D-
Give me a second. I'll pass you my phone to him. Sorry, I didn't wake you, did I?
no.
Okay, good. All right, hang on.
Yep.
Hello, this is Todd.
Yeah, how may I help you?
Hey, Jim. Hey, I was gonna ask you, on the available access to the side that on the lower level is not being used.
Yeah.
We had a key for that a little bit back.
Yep.
I don't think it's working anymore because the key's no longer where it was.
Okay. I'll run. Yeah, I'll run down there and open it up for you if you like.
Okay. Well, what I need to find out is if it's something we can have access to at any time, and first of all, I need to find out if we're still going to be responsible to change the air filter in there. I'm sure we are, but
Yeah.
without having access, of course, I can't do it.
Yeah.
I mean, I'd like to not have to worry about having you give us the access to it all the time.
Yeah.
So,
I can get one made, and you could run by maybe sometime this week and pick it up if you like. A key. And do you want me to call Ashley and see if you still have the right to go in there or not? Or can you talk to her? You have a way of.
I can talk to her. I don't know if she would know how to. I don't know who I need to contact to do that. I guess she could.
Yeah, you just talk to Ashley. She'll give you the answer.
Okay. All right.
You got her number?
I do not. Is she not one of the employees in the office?
No. She's the manager of the building.
All right. Let me find something right.
Okay, let me look it up here if I can.
Okay. Yeah.
Without hanging up on you. If I hang up on you, call me back.
Okay.
And I'll give you my number too.
That'd be great because the number I have is old apparently.
Yeah, I had it changed because I had so many damn spam calls. It just drove me nuts.
Okay.
So the new
Yeah.
417 814 0672. Let me look her number up real fast. Oop. Hope I didn't call her. Oh, there it is. Let me write it down on paper. You still there? Yeah. Her number's, let me get into another room here. 1-816-365-9302. Yeah. I'll run down there and open that door up for you. Yeah. You probably are. Yeah. Yeah. They probably have. Yeah. Yeah. Okay, well, I'll get one made for you, but I'll run down there and open it up for you too, if you get to talk to her. Okay, okay. That'll be fine. I'm not that far away from here. And you got my number. Okay. Yep. And just give me a call if you ever need me. Okay, yep. Bye. Yeah, this is Jim. Yeah, here, air conditioner guy that changed the filters, give me a call. And I gave him your number. Oh, that's okay. No, they want to know if they're still supposed to change the filters in the other building, the empty building. Yeah, okay. Well, he's gonna call you or he's gonna call me back. I told him I didn't know, so. And I'll have to go get another key made for him. They said that the last one didn't work, I guess when they changed locks or something. Yeah, I got a key. I'll have it. They shouldn't have one? Okay, well, I just, okay, he'll probably try to get a hold of you. Okay. Yes, ma'am. Okay. Nah. Yes, ma'am. Bye-bye.
Hey, Jim.
Is that guy still around?
No, he just walked out.
Okay. I called Ashley and she said, yeah, he's supposed to go ahead and change them.
Oh, okay. Let me see if I can catch him.
Okay. And I'll run down, well, he don't have the filters now, but I'll run down there and I told him to call me anytime and I'll run down there.
Okay.
She doesn't want him to have a key to that one.
Oh, okay. That'll work.
Okay. Bye-bye.
Bye.
$6:30. Boom, baby. We nailed that poll. Seven more minutes left.
New AI features. Oh.
communication services. So kind of going into the close, you're looking at around this 6,660-ish area as your potential pin risk area. That has been a significant area for calls throughout today's session here. And you kind of see this chart set up. It actually did start to set up like a inverse head and shoulders, but we did see a breakdown below the 6650-ish area here. But we are still in the green. Hopefully we don't see any turbulence over the next 4 minutes or so. But you're looking at around 6660-ish area as your area of resistance, at least for today. One thing to kind of note, if we pull back and look at a longer term time frame, let's just say the 5-day, 15-minute chart, what you are actually noticing is a technical build up in structure, to say the least here. Last week we had this blue line, this 200 period moving average on the 15-minute chart that was acting as an area of resistance. This morning we broke above that. Now it has turned into an area of support. You can kind of see about 2 candles ago, around about an hour and a half, about maybe 30 minutes, 40 minutes ago, we had this decent hammer candle. We've been holding that ever since. So if you're trading on an intraday time frame, if you're looking at some swing trades, this 15-minute chart has been a really good indicator and really good layout here for the intraday trades. And we're just seeing an area.
That's a 5-minute.
Into an area of support. And what you'd like to see tomorrow is try to go back to that 6,700 level, try to break through that. We do have the quarterly expiration happening as well tomorrow, so be mindful of a lot of churn when it comes to the SPX options.
He says he likes the 15-minute.
Small cap and mid cap portfolios, which actually can drive volatility, and we could actually see some pretty outsized days, given the fact that we do have the end of quarter actually taking place here. So I'm actually looking forward to tomorrow and looking for some of that action for the last hour and a half going into the close tomorrow. Should be actually pretty fun for traders.
You mentioned the end of the quarter hitting tomorrow. In terms of the volume that we're seeing today and some of the volatility as we head into that last day of the third quarter, what does that look like?
Well, volatility, kind of looking at the VIX, obviously we did see a crush on Friday, a little bit of re-rating higher on the basis, but the curve itself is actually still in a normal curve, meaning that we see volatility being priced at elevated levels. As you look at the duration, which is normal for that matter, we are not seeing any type of backwardation at this point in time here. And what you're kind of seeing is us trading at probably the lower end of this range, the 15 level, 14.5, 15-ish area has been a key area of support when it comes to volatility if you're looking at the VIX. And once again, we should see an uptick in XPX options volume tomorrow with the JP Morgan collar also going to expire, and we'll start seeing some of that intraday gyration taking place, and NDX options will be also placed tomorrow as well. And so you are, once again, seeing actually fairly low.
Oh, gosh.
2 weeks of October is actually generally fairly bearish, or where we...
Today was a very good day. I like days like today. I mean, I could trade just today and be done for the week. If that tells you anything. I even went out, came back, and still had a green trade. And I was in a red trade when I left. But I didn't let it bother me. And then got stuck in that trade for an hour and a half, 45 minutes, hour and 45 minutes, almost 2 hours. And that turned out to be my biggest trade of the day. And I didn't have to only add on one time. So, I mean, today was a very good day. When I have a good day like this, I don't want to really be overwhelmed tomorrow. I want to take my time. I've learned that. You have a great day, the next day could be twice as worse. And that happens a lot with me. Because I used to get in here and, oh, wow, man, I had a real good day. When I first started making money, I used to walk back and forth. And what am I going to do? What am I going to do? Go into little panic attacks. And I'm up 3,000, I'm up 2,000 today. And I didn't know what to do. I didn't have that kind of money. I'd just freak out. I'd just be real pleased and happy and then come in the next day and lose half of it or all of it. So I've learned to be humble and not, jump the gun on the next day. It just works. That's a lesson for me. So I'm going to get out of here. And YouTube, thanks a lot. We'll see you tomorrow.